Hello all, welcome to BCCA. This is your tax guru CMA Manideep. Before going to the first 8 or 10 demo lectures which you're gonna see from the June 2026 attempt and December 2026 attempt, let me gonna talk 3 minutes about this course. So this batch is started on December 1st and it's gonna complete by February 10th. In this batch, the books we gonna provide are like handwritten book, which is the notes I write in the classroom while I am explaining. Concept book is like it's a full concept, everything in detail will be given here. And there's a workbook, the sums which are required, covering the past examination questions, institute questions, workbook questions, model question paper questions, and all those updated according to the attempt. And even this workbook even includes the MCQs also, which was solved and made to the extent applicable for June and December 2026. And all these will be provided in color coded format, and that also in hard copies. So if you gonna look at the color coded books, okay, the handwritten sir, I'm gonna write notes in this way for every chapter. Okay, you are also going to write parallelly along with me. So like this I'm gonna write notes. So these notes we're gonna provide you in hard copy color coded format, and then you can attend the sessions live also. Okay, so whatever the sessions we have uploaded by December 9th, these are the sessions which have been completed. Okay, if you enroll for this course, if you like in 2-3 days, if you could complete all these past lectures, then you could attend live also, morning every day from 7 a.m. to 9 a.m, evening 6 to 8 p.m. Even if you are a working professional or working student, okay, you could easily attend these live sessions. And recorded classes also you could enroll based on your time and convenience, you can take. But I always suggest live mode only instead of recorded. Why? Live mode you can listen along with me, and then for you also the recorded backup will be provided. So recorded you can watch it for another 1.5 times, and live session you can watch it 1.5 times. So you have the time and you have the flexibility to watch it for more. Okay, second time also you can watch the full syllabus, that option is there if you attend live. So I suggest you to attend live. Then the offer price, this classes actually sir, usually the price of the DT classes used to be like 10,000, but at an offer price we kept it as like only 6,000 till December 5th. But still many students are messaging from December 6th onwards that they wanted to enroll. So the offer is extended till December 18, 2025. Till December 18, 2025. You want to buy these classes at just 6,000 rupees only, which is including all these 3 set of books. Also. Okay. So why you are waiting? Okay. And then listen to the classes. And when we go into the core chapters like PGBP, like NR taxation, capital gains, DTA, transfer pricing, the classes are going to be much more interesting, engaging. I'm going to give the examples in a easily understanding way. We're going to solve each and every question, so it gives you 100% confidence as well as clarity from the DT. Okay, so this is no more you need to worry about DT. I'm gonna provide you the confidence first to you that DT is not something tricky. DT is within my range. DT is a subject where I can get 70s. Okay, that confidence you will get by attending these lectures. Okay, so without wasting time, just go and watch the lectures. And then one more thing, like this video, share this with your friends, because they're gonna get these wonderful sessions also. Okay, and if they are ready to buy, they can enroll here only. And I am sharing the course link also here only in the description itself. Thank you all. So the syllabus target completion date, sir. So we're gonna complete it by February 10th. February 10th. Okay. Then February 10th. Then what are the books I am gonna provide? How you gonna write? First sir, everybody should write the handwritten notes along with me. Write the notes along with me. Whether I'll provide this notes as a separate book or you is secondary. First I'll be writing notes and explaining you the concept. You also write notes along with me. Notes. While writing notes, sir, if you don't write these notes along with me, you feel at places the class pace is slow because I'll be writing, you'll be just listening with the earphones, so you'll see like the pace is slow. Okay, so to have that same kind of wavelength, you should also write along with me. And usually I should not tell all this, you'll be knowing this one, what the points like. Keep a good quality notebook, sir, because I see in some places like some students like they'll keep some kind of a short version of notes, or like the page quality is like rough kind of and all, but take it a good book, because like once you open the book also it should like pleasant na. So take a good book, good quality notebook. And then if you are having already a habit of using multiple colors and all, continue. If you don't have that habit also, try to write the notes with multiple colors. Okay, so use color pens and all along with me. Obviously you should have a calculator with you always for every class, whether I'll discuss theory or what, always you should have a calculator with you. So all these are like, have a good quality notebook, use color pens, calculator. Okay, we'll be writing handwritten notes. Do I write for each and every chapter these handwritten notes? Sir, I'll be writing for most of the chapters, like almost like all the chapters which are having significant weightage. Okay, so let me say like at least for 70% of the chapters we'll write handwritten notes. Understand, sir? So we'll be writing handwritten notes. Then second one, sir, we'll be having a workbook. This workbook will be named as applicator. Why it is named as applicator? Na? Because the concept we learned will be applicating there by solving the questions. So the workbook consists of the problems and issues where you need to apply the concept you learned. That's why it was named as like applicator. That applicator, sir, since you all know for June attempt, well, there should be a new version of books. That's why if you are already taken the classes and attending from the December 1st, okay, from the day I started classes you are attending, then material will not be available to you, sir, in handy with you. So what I'll do now, I'll be sharing these PDFs with you. The materials gonna come, sir. So I am giving you a realistic date, sir. The materials will be coming only in the December end and Jan first week. Only in the December end to Jan first week only we can provide you the hard copies of materials. Okay. So till then, whatever the chapter we are gonna discuss the concepts and all, I'll gonna share the PDFs with you. Based on PDFs only, you can download the PDFs or you can take printout of those PDFs of workbook, and those questions will be discussing. Workbook, applicator, PDFs I will be sharing. Okay, sir, and this workbook questions, sir, these are selected based on like our institute study material questions will be covering. Institute study material questions we gonna cover. Then institute released a workbook. That workbook questions also we gonna cover. Institute study material questions, workbook questions. Then the model question papers in the 2022 syllabus. How many 2022 syllabus, how many ever model question papers are there? All questions we gonna cover in this applicator. Then past examination questions we gonna cover here. Since okay, maybe for the initial chapters we may not have the December 2025 paper, but once we progress into the syllabus, like at least in the month end we have December 2025 paper also in our hand. So we'll be covering even the December 2025 exam paper also, okay, in this particular applicator. Then additionally, sir, in this version of book, the new version I'm gonna release, I've been even referring to the CA final module also, CA final material also, because in some chapters our institute is picking questions from CA final material directly. So I've been carefully analyzing which chapters they are asking questions from CA final material, that I will pick. Sir, it's not possible like if we dump for each and every chapter from CA final questions, the concepts will be really heavy for us, and the questions also will become plenty, okay, which again you can't cover them. So for selective chapters only, I'm gonna bring even CA final questions also. Selective chapters, I'm gonna bring even CA final questions also. Okay, workbook handwritten. Then we'll be having a third version of book also. We call it as like concept book. Okay, the name of the concept book, we kept it as like Pulse. Pulse. Why Pulse? Because here, sir, my version of concept book is not like bringing you the Bar Act and giving every word of Bar Act and then analyzing it. I'll simplify this. I will be simplifying this. Okay, simplifying na. How do I simplify? Okay, so the simplifying will be the language first. Easy language I'll bring, because many times the taxation language will be so tough. Okay, you'll feel bored, or it doesn't get into you, or it doesn't be easily processed by your brain. So that's why I'll change sorry, without changing the meaning only, I'll give easy language there, and then we'll be including examples at places. Okay, examples will be providing in the Pulse, and then there will be charts provided there. So in the concept book, for all the topics which we are having in the syllabus, we'll be simplifying those chapters with easy language, examples and charts. Okay, so certain chapters are handwritten and concept book may look similar, because simplification will be made even in the concept book as well as in the handwritten, right? There are certain chapters, okay, there will be light difference. Concept handwritten might be much more easier compared to the Pulse. Okay, so like this. So now for sure this workbook and Pulse, we gonna provide you the hard copies. I already set the time limit also by when I'm gonna provide these hard copies. Okay, both sets, sir, both you will get these books at the same time, sir. From, okay, in Jan first week we'll get this hard copies. Fine, hard copies you'll get when? In the Jan first week, hard copies. Okay, for one delay, sir, the point is like our institute will not release the amended material quickly, sir. See, always like we have, I mean, I have a problem like there are amendments available. See, we have various other materials available, we have CA final materials available, so we could refer to all those amendments directly. The Bar Act ready references available. From based on that we could prepare the material. But Jan first week, why I am waiting also, I am just waiting for the institute study material. Once if institute releases the study material, then based on that we'll re-verify our questions and our material also once again, then it would be easy for us to release the material. That's what the problem. Okay, so if you look at CA final, they already released the study materials for all the chapters applicable for May attempt, but our institute not yet released, so it takes time for our institute. Usually it releases only by December end, after the completion of exams. So once it is released, so okay, my version of material will be prepared before that only. But once that study material is also released, we'll again cross check the points and all. If any question is missed or any changes made to the study material, based on that we'll be releasing the material. Okay, so these two will be providing in the hard copies. Whereas handwritten notes, sir, okay, we'll see how this handwritten notes goes and all. So based on that, by Jan first week there is another 1 month time now for us. By then I will decide whether handwritten I'll be sharing only the soft copies, or I'll be providing even the hard copy of handwritten also. Okay, so then these are the resources available to us. Okay, then going into our subject. Okay, so till now I spoke so much thing. I mean, I have said so many things, but I didn't set the subject name. Okay, and even my name also I didn't set. I hope you all already know my name. Even if you don't know also, it's not a problem. Okay, so I'm like My name is like Manideep. I'm a chartered accountant and cost accountant. Okay. I started my teaching career in the year 2018. In the year 2018, I have started teaching. Then I newly qualified as a CA in the 2008 Jan February result I have cleared. In 2017 only. Sorry, sir. I cleared my CA in 2017 only. From the end of 2017, I started like teaching. Till then, I was into practice. Then I was into teaching from half of the year, or like towards the end of the year 2017. I was into teaching. Okay, so initially I used to teach direct tax only. Then, like after 6 or 7 months only, once GST got introduced, that time I even started taking indirect taxes also. Okay, so I'll deal with both direct taxes and indirect taxes. Currently, also at final level, I'll be teaching both direct taxes and indirect taxes. Inter level, I used to teach indirect taxes, but see, because I'm not getting enough time to teach inter batches actually, I'll be fully occupied with the final batches only. So, direct taxes and indirect taxes. So, almost like I have an experience of like 8 years into teaching. So, you are in safe hands only. You need not to worry about whether I'll explain or whether I'll give you the concepts in a easy way, understandable way. You don't need to have that doubt. I'll explain 2 times, 3 times also. Okay, no problem. Until I get that satisfaction that you understood, I'll not leave the topic. So don't have any question or thought about whether you'll understand the concepts or not. I'll make sure you'll understand each and every concept which I discuss here. Okay, then paper 15, direct taxation. Paper 15, direct taxation. So paper 15, direct taxation. In which group, sir? It is into group 3. It is in group 3. Paper 15, direct taxation. So tell me whether direct taxation is an easy subject or little tricky only. Tell, what is your experience? Is it an easy subject or tricky one only? You have chat boxes there. You could post your messages also. Difficult subject. Okay. Sir, I'll tell you, sir. Direct taxation is a subject which requires Thank you, Sanju. Okay, direct taxation is a subject which involves first, sir, it's like memory based. It tests our first, it's like based on the memory. It tests our memory because there is so many sections and all, we need to remember all of them. So, and this memory, this part is gonna happen only when we revise number of times. Understand? So, it's not like once you have studied, you will remember direct tax. You cannot, sir, because these are like phone numbers. Sir, if I tell 10 people's phone numbers to you, will you remember all of them in a single go? If you remember them, then you are like something like Srinivas Ramanujan, Einstein. So those category only. Normal people like me, okay, will take time. Okay, for one mobile number to remember itself, I need to like say it in my mind for 20 times, 30 times, then only I can register a mobile number. That also I am not sure. Even after like repeating the same mobile number for 20, 30 times, after 2 days, 3 days, I may not again recall that number. If I recall also, I may shuffle the places of certain numbers also. See, with one mobile number itself, this much problem. But you are having so much of tax sections here, tax rates here, conditions here. So all those things require number of times revision. So it's purely based on how long we can remember the subject. It's completely related to our memory. Plus, Sir, it's not just memory also, the point, next one. If you remember and if it is something like you need to dump it as like a, the last case straight question, and if you write that whatever you remember, is it fine? No. You should put so much of emphasis on the memory to read the subject number of times to remember them, plus application also involved. Application. So memory first one, then application, it requires common sense. Application is always based on common sense. Okay, common sense. Common sense. So why I am saying common sense? Now common sense is nothing but logic and application. Logic and application. So the problem is like this common sense, sometimes we can teach it through steps also. Like you have to do like this, you have to do like this, you have to do like this. But some people, okay, sir, I'm not categorizing, but generalizely I'm saying, few people will be there who will understand the logics and all quickly. Okay, for them the concepts will look much more easy if at all they can remember the chapters and all. Okay, why DT is treated or DT has been referred as a tricky subject? It's not just if you remember it is enough. You need to apply your common sense. Okay, logic. Common sense is nothing but the logic we need to apply. Okay, so then only. So if you just mug up the things, mug up the tax rates, nothing gonna work. If you having the common sense, you can do some kind of puzzles and all quickly. So common sense, intelligent people. These people could solve all these puzzles and all quickly. But the problem is, even if you are able to solve a puzzle, if you don't remember tax rates, nothing you can do. So it requires a dedicated preparation, sir. Dedicated smart study. Smart study na, like one time I read also, I'll remember. That will not work with DT. That's why DT paper is tricky only. So you should revise it number of times and you should apply logic also. Okay, and then it's theory plus practical. It's neither theory nor even a practical subject, sir. It has both theory plus practical. You will have to read theory and again questions also will be there. That's why DT is comparatively tricky, people will say. But I am giving you assurance, sir. Follow this batch. You attend regularly. Don't skip a single class also. Don't skip a single class. We both will make promise, sir. Like what? We will not usually skip classes unless there is an extreme emergency situation. Neither I am gonna cancel the classes nor you are not going to skip the classes. This promise, okay, we're gonna make both of us. Okay, this is the promise we should have. When there is continuity, sir, the subject will be going in a flow and you will also can understand the things quickly. Okay, theory plus practical. Then a paper DT is for 100 marks, sir. Direct tax. So this could be categorized in two ways, sir. First one, we'll have two sections, section A, section B. So this is like chapters wise, sir. Section B. Section B is about 2-3 chapters, sir. Transfer pricing, international taxation. Actually, it is like transfer pricing, double taxation avoidance agreements, DTAA. Then there is a chapter called GAR, General Anti-Avoidance Rules. These 3 chapters alone is of 30% weightage. That also mostly it goes to these 2 chapters only. This last chapter is hardly for an MCQ only. The rest of the whole income tax. Other than section B. Covers for how much, sir? 70% of the weightage. This is 70% and that is 30%. Okay. Then our 100 marks paper, sir, Is it completely theory or application based only? No, right? Then how it goes? Paper pattern. So our total paper is for how many marks, sir? 128 marks. 128 marks. This 128 marks. Like there will be question number 1, which will have this will have total question number will have 15 MCQs, multiple choice questions. Each carries 2 marks and there is no choice in multiple choice questions, sir. You should write each and every question only, but within a question you will have 4 options to pick which is correct one. Multiple choice questions, 15 MCQs into 2 marks, which is like 30 marks. 30 marks. And I am clarifying your doubt also, sir. Even you need not to search for this point again. Does explanation has to be given to the multiple choice questions or not? No. Explanation not required. Just you should select A, B, C. That is enough. Explanation not required. But if they ask specifically in exam like explanation also needed, then write. But in the 2022 syllabus paper, till now, they didn't mention like explanation is needed. So, explanation is not required. Only option you need to select. That's enough. A, B, C. That one you need to select. Question number 1, 15 MCQs for 2 marks. Then, question number 2 to question number 8. Question number 2 to question number 8. So we have question number 2, question number 3, question number 4, question number 5, question number 6, question number 7, and we have even a question number 8. See, question number 2. Sir, you guys are writing along with me now? Sir, you guys are writing along with me or not? This part also. Okay, this part even if you don't write, fine. But once the concept starts, everybody should write. Question number 2 to question number 8. So total 8 questions. Sir, question number 2, usually it will be a 14 marks question. But in the recent model question paper, instead of 14 marks, they made it like 7 marks also. But until December 25 exam paper comes, we cannot conclude it. Because in all the 4 exam papers till now, they asked it as a 14 marks question only. But in the recent model question paper alone, they introduced A and B into, that also in one set only. Okay, so for now, I am saying it as like a 14 marks question only. Once there is any change, once we get the December term paper, then we can change the part. Then we will have question number 3A and B. We will have A and B. A is for 7 marks and 3B is for 7 marks. Then question number 4 also again. We will have A, we will have B. Each is for how much? 7 marks. 4A 7 marks, 4B also 7 marks. Then 5A also 7 marks, 5B also 7 marks. 5A 7 marks, 5B also for 7 marks. Then 6A 7 marks, 6B also 7 marks. 7A, 7B 7 marks, 7 marks. Even 8A and 8B also for 7 marks. Okay. But do we need to write all these questions, sir? No. Out of question number 2 to question number 8, write how many questions, sir? Write any 5 or 6? 5 questions. Out of the 7 questions, write any 5. Sir, 5 now, it's not like 5 7 marks questions. Write any 5 questions. Okay. So like if question number 3, if you select na A, B, both. Write any 5 questions out of 6. So 2 14 marks questions you are having choice. Okay. So our paper is then for what, sir? Here for 30 marks MCQs, including choice. Here 6 14 marks questions, which means like, sorry, not 7 14 marks questions, which is like 98 marks. So total the paper comes for 128 marks. Out of 128 marks, you should get a minimum of 50 only. 50 marks. If you get, enough. But don't ask me like why 50s or 40 also enough now. So you should not think of 48. 50 is only the pass mark. If you think of 40 na, then who will get you the aggregate? Think of 50 only as the bare minimum you should get from DT. The bare minimum from DT is like 50. So out of 128 you should get 50, sir. 78 marks is there for you, which you can leave. 50 marks only we should get. Okay na? This one. Then some students, sir, now will ask like, sir, does CA final syllabus and CMA final syllabus are same? CA final syllabus and CMA final syllabus are same. Sir, Income Tax Act is same, sir, wherever you go. Okay, whether it is in CA, CMA, CS or any other course, Income Tax Act is not different for course to course. It is same. And what is the difference? The difference is the focus of chapters. In CMA course, certain chapters are important. In CA course, certain chapters are important. One thing. Second one, the paper level, how tricky they're gonna ask is different from CA to CMA. I'm not gonna downgrade the standard of CMA question papers are here. CMA direct taxation question papers are like off standard like, okay, like the direct taxation paper is like a proper standard paper only they are asking. The only flexibility we are having is like, instead of testing multiple areas, what I observed till now is like, if on some selective chapters you prepared properly, then also you can get good marks in CMA. Okay, it doesn't mean in those chapters they'll ask easy questions. They are testing the core in the chapters which they are testing. Okay, so that's like up to the expert level only they are testing the questions. But in those chapters, like I mean certain chapters, you have the flexibility to leave also. Okay, so if you refer to the CA final classes, then the problem is like, they'll put so much of focus on CA relevant exam important chapters. Those chapters may not even have weightage of 1 mark, 2 marks also in CA final. So you'll be in CMA final. So you'll be spending more time over there than studying on the important chapters. That's the problem. It doesn't mean you cannot write CMA with CA final. Okay, with the CA final coaching, you can write CMA exam also, no doubt about it. But you will be studying more. Okay, that's what I know. Sir, then with CMA final coaching, can I write CA final? Okay, sir, my answer is like 70 to 80% only we can take. Okay, because I'll teach both CA and CMA. What I do in CMA final, if 100% is needed, then I'll take it to the 110% of the requirement for you. But CA final, the other chapters which doesn't have weightage also, why I need to put so much of emphasis on you? Already DT is vast. I need not to make it much more vaster, right? That's right. Okay, that's the point. Now we'll look at the chapters we are having in the syllabus. The chapters of CMA final DT. So we have basics chapter, basics and tax rates, the interlevel chapter only with little extra points we're going to discuss here, basics and tax rates. Will there be a separate question from basics and tax rates? No. Then why we need to study basics and tax rates? Sir, understand, from basics and tax rates there won't be a standard question, but this tax rates calculation can be linked to any question in the syllabus, in the exam, any question. So basics and tax rates should always be on your fingertips, should be always on your fingertips. Whatever the chapter we do, if some point comes from basics, now you should be as quick as that, you should react it like so quick, sir. Okay, so basics and tax rates is a must chapter. And again I am saying, most of the students, while I am discussing basics chapter, they will be like replying like wow. So like if I tell an example now, then obviously they will be shouting with answers. But the moment we take, this batch takes like 2.5 months, right? Sometimes like if I don't take double classes and all night, it will take even 3.5 months also. Okay, by the time second month starts, if I ask a particular first chapter basics related point, nobody will respond. Okay, they'll forget the basics point. But I am saying, sir, at the time of exam or else like after first second attempts, people will realize the importance of first chapter. So never neglect the first chapter, that much important, basics. Second one, deductions. So at interlevel, sir, many students used to hate deductions chapter because there will be so many sections, so many things to remember, but still deductions also will be there. Again, from deductions also there won't be a standard question. There's no 7 marks question from basics or deductions. Maybe some MCQ might come, but with any question, these 2 points can be linked. So tax rates and deductions should always be on our fingertips. Okay, basics and deductions. Then we'll have the 5 heads. Okay, but salary, house property, we are not going to discuss in the final level. Salaries and house property. Sir, that means salary point will not come at any place. House property point will not come at any place. No, sir. In exam questions, there are reference to salaries points and house property points also. But whenever that importance comes, whenever that necessity comes, I'm going to give you a quick overview of what is needed, what is important for us from salaries, or what is important for us from house property. Okay, so the other 3 heads are like what? Salaries, house property, then PGBP we have, then we have capital gains, and then we have IFOS, income from other sources. These 3 heads are there. Sir, will there be a question from this? Sir, let me tell you. Throughout our questions, there will be PGBP provisions. In many questions, there will be capital gains provisions. But if you look at our institute material, there won't be PGBP chapter. There won't be capital gains chapter in our institute material. But can we clear CMA final without solving these 2 chapters? Obviously no. Okay, so even though these 2 chapters are not there in institute material, they were important to solve any question. So PGBP we need to discuss, capital gains also. For your information, sir, deductions also not there in the institute study material. But there are so many points coming from deductions, PGBP and capital gains. So we need to focus on them. PGBP, capital gains. Okay, and then IFOS. 5 chapters now as of now. Then there is a chapter called assessment of companies. Assessment of companies. Sir, what is this assessment of companies? Nothing but, sir, in interlevel you might have calculated total income sums, right? For individual, they'll give multiple heads related income. There may be set off carry forward of losses, clubbing points, then chapter deductions points, and ultimately you will be finding the total income tax payable. Same way for company you need to do the total income tax payable, everything, by taking provisions from multiple heads, multiple chapters, all those things. That is, from a company perspective, it is called assessment of companies. Then there is another chapter, sir, for assessment of companies alone. We discussed not trust and other persons. Company alone we discussed here, right, in the first chapter, assessment of companies. For other persons, how do we compute total income? What are the other applicable portions will come under assessment of trust, other persons. Okay, then this point. Then there is a chapter called tax planning. There is a chapter called tax planning. What is this tax planning, sir? Nothing, sir. Tax planning is applying all these concepts you learnt in the above chapters only. Okay, they'll ask you to compute in old regime, new regime, and ask you to tell which is the best option. Okay, and they'll give you, like in salaries, if you remember, whether to take allowance is better or perquisite is better, like that they'll ask. House property. Okay, so different kind of questions they'll be framing here. Not much about the theory we need to discuss here, problems only we gonna solve much here, which gives you exposure to so many situations. Okay, so how do we effectively, practically very relevant chapter, sir. By choosing multiple options, which one would be better? Okay, it's always about which option is better, we need to tell. Tax planning chapter. Okay, this chapter we cannot do without having the knowledge of all these chapters. Okay, tax planning. Then there is a chapter called business restructuring and reconstruction. Business restructuring and reconstruction. So CFNL students, sir, the people think like, so from where this chapter is brought in CMFNL, this is not even there in CFNL. So this is nothing but, this chapter is nothing but a part of capital gains. Okay, this is this part. Usually in CFNL it would be there, even in, it will be there in the capital gains chapter itself, but our institute, it has segregated this part, like transactions like capital gains taxability in case of amalgamation, demerger, those situations were brought and grouped, and that itself is the business restructuring and restructuring and reconstruction chapter. Capital gains provisions and certain PGBP provisions will be there. PGBP and capital gains provisions will be there in this chapter. Then there's one more chapter called non-resident taxation. Non-resident taxation. Okay, at final level, sir, one important area where you will feel it connects with the residential status we learnt in interlevel. From there it starts and gives you the how non-residents will be taxed and all, what are the special rates applicable, everything about non-resident we gonna discuss in this chapter, non-resident taxation. Okay, then how many chapters, sir, till now we are having? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. This 10 chapter. Okay, this is not the syllabus. We are having so many other chapters also. It's not SFM to have only 10 or 11 chapters. This is DT. Okay, there will be so many chapters here. SFM, I think there are only 10 or 11 chapters only. Yes, I am not saying like SFM is easy. Chapters wise there are less chapters, but questions would be tricky only, right? Then chapter number 11 is of return of income. Nothing new in this chapter, sir. Whole interlevel only. Interlevel also we will have return of income chapter. The same return of income chapter will be there even in the final level. Then 12th chapter, sir, will be having advance tax and interest. Advance tax. When advance tax is payable, and on advance tax there will be interest like 234A, B, C. Advance tax and interest 234A, B, C. Right, then we are having a 13th chapter called CBDT and authorities. CBDT and authorities. CBDT, Central Board of Direct Taxes. Interlevel first chapter only you might have shouted CBDT, Central Board of Direct Taxes, like that. We'll check here who is CBDT. What are the powers of CBDT? What are the various income tax authorities, officers? That part. Complete procedure only. It's like a base for other chapters. CBDT and other authorities. Then pure final level contents are now. The 14th chapter is about assessment procedures. How do the income tax officers will carry out the assessment procedures? The process, time limit, everything in detail we are going to discuss about assessment procedures. Then 15th chapter is about search and seizure. We'll see so many times income tax people will be doing raids, IT raids for different offices and all. So how to carry that search, how to seize those items, what are the conditions to be followed, process to be followed, all those we'll be discussing here. Search and seizure. Then so they have did a search or they have carried out an assessment and saying you to pay 10 lakhs as tax. You are saying like, no, I need not to pay any tax, all my income is genuine, I already reported, I paid taxes also, I need not to pay any extra tax. But the income tax officer is saying like you should pay 10 lakhs. So then you are having a conflict. Then what to do? Both will fight, both will take a thick sword and all, then we'll do fighting and all, no right? Then what to do? But there is something called appeal. You can appeal to higher authorities. So then they'll reconsider the issue, they'll listen to both the parties and then they'll decide what to be done. Okay, so there's an appeal process. We'll go to higher officers from that tribunal, high court, supreme court, that chapter. Appeals and revision. Appeals and revision. Appeals and revision. Then we are having a chapter regarding black money. Okay, there is a, other than income tax act, sir, there is a different act called Black Money Act. So that Black Money Act also basic is there for us, applicability and all. That Black Money Act also will be discussing. Then there's something called advance ruling. Advance ruling. To avoid future conflicts, first itself you will apply to the income tax authority stating like, sir, I am having these kind of incomes. Okay, what is the taxability of these incomes? How you gonna treat them? First tell me. Otherwise I'll be okay. Otherwise he don't want the future conflicts and all. Okay, so first itself we wanted to know what is the opinion or view of income tax. Then you'll go for advance ruling. Advance ruling. Then penalties and prosecution. Penalties for non-compliance with various provisions, rules and all. What are those? That is about nothing but penalties and prosecution. Then penalties and prosecution. Then we are having equalization levy. Equalization levy is nothing but taxability of e-commerce transactions. E-commerce transactions. The online transactions related taxability, how to treat them and all. Equalization levy. And then we are having a 21st chapter, liability in certain special cases. Like in liquidation, what happens? In case of insolvency, how to deal? That liability in special cases. Liability in certain special cases. Okay. Then there is a 22nd chapter named collection of taxes, how the taxes will be collection, how they would be recovered if such person is not paying, and if refund has to be given, how the refund has to be made, what is the refund timelines and all those will be discussing in collection, recovery, refund. Then there is a 23rd chapter called ICDS. ICDS na just like as accounting standards, auditing standards, even for income tax also under the head PGBP to compute profit and gains, income tax CBDT has notified certain standards, income computation and disclosure standards. There are like 10 standards. Those 10 standards will comply of one thing, ICDS. So these 23 chapters, just 23 chapters are for this 70 marks weightage. Okay, These 23 chapters are for 17 marks weightage. Then we are having 3 more chapters like 24, 25, 26. What are those? 24th chapter is about transfer pricing. 25th chapter is about DTAA. DTAA na double taxation avoidance agreement. Double taxation avoidance agreement. DTAA. And then we are having even a 26th chapter also. What is the 26th chapter? The 26th chapter is nothing but GAR. GAR means tax avoidance rules. If someone is trying to do tax avoidance, then how it would be prohibited or how it would be encountered in general situations. General anti-avoidance rules. Anti-avoidance rules. GAR. So these are the total 26 chapters we are having in the syllabus. Okay. So easy only, right? Only very few chapters, 26 chapters. Having only how many chapters, sir? Just 26 chapters only we are having. Very easy. Then I'm gonna tell the expected paper pattern also. So here itself, sir, usually if I tell this, it doesn't mean you should only focus on those chapters and leave other chapters. Many times there will be connections with other chapters. Many times there will be connections with other chapters. So now I'm gonna tell which are of exam specific also. Okay, so don't form opinions or don't create biasness over that particular chapters only. You are attending regular batch, you should study each and every chapter. Exam relevant chapters na you should put more stress. Other chapters also you should completely listen the classes, solve the questions which we solve here, but day before the exam you need not to study those. Okay, number of times revision you need not to do them, but that basic knowledge of those chapters understanding is required. See, question number 2, to solve question number 2 and question number 3A 3B in exam. For solving these two questions, sir, there may be sir in tax, even though I said like from this chapter only, sometimes 1 or 2 points, some 1 mark 2 marks related points can be linked with these questions with some other chapters. That is a inherent thing in this subject, sir. We cannot escape from it. Okay, so even though I said like it's a question on PGBP, sometimes they may link points from capital gains from some other chapter, so that's gonna happen. But this question number 3A and 3B you could answer if you solve these chapters, like basics plus tax rates chapter is there na, basics and tax rates chapter. If you read basics and tax rates chapter, then obviously deductions chapters, these are must for any question, but most important for these two questions, basics, tax rates, deductions, PGBP, and then assessment of companies. PGBP and then assessment of companies. Why now? Question number 2 is always asked from company perspective. Question number 2 till now it is always asked from company perspective. How the company having business income will be taxed. Assessment of companies. So this is like including MAT provisions. MAT also included here only. Then you should even IFOS and then tax planning. Tax planning. Sir, this tax planning itself will have 2 7 marks questions. Tax planning chapter. But you cannot solve tax planning alone, because tax planning chapter there is no concept at all. Only questions only. That questions will have linkage with all these basic understanding, fundamentals understanding. So that's why all these chapters you need to learn. And this usually this PGBP and assessment of companies chapter together only the 14 marks question. So basics, deductions, IFOS, these are not like separate questions, but that relevant points also will get included with PGBB, assessment of companies, and even with tax planning. Okay, you understand, sir? These set of chapters, if you prepare, we can answer question number 2, question number 3A, and question number 3B. Then for question number 4, for question number 4, first the basic to be learnt is like capital gains. Okay, why sir capital gains? Because sir, understand sir, sometimes capital gain points may be linked with the 2, 3A, 3B also. 1 or 2 points only, not like whole full-fledged problem, but 1 or 2, like capital gain, 1 exemption, or a particular point from capital gain may be linked with those questions also. Okay, and even here, the other 2 chapters which are linked with question number 4 are based on capital gains only. Capital gains. Next, business restructuring. There is a chapter called business restructuring, and there is a chapter called NR taxation. To understand these 2 chapters properly, business restructuring, NR taxation, the fundamental is capital gain. Okay, capital gain, the fundamental, at least interlevel capital gains is there, na, that you should know. Then only we can do business restructuring and NR taxation. So there will be always like 4A 7 marks till now it is from business restructuring, and 4B it is from NR taxation. Capital gains is needed to solve those 2 chapters. Understand, sir? Okay, question number 2 done, 3 done, 4 done. Here if you see 2, 3, 4, 5, 6, 7, 8, right? 2 related, 3 related, 4 related. Now we are moving on to question number 5. Question number 5. Again, 5 also will have 5A and 5B. First, to solve question number 5, first the basic you should know is like return of income. Return of income has to be filed now, so return of income is must by knowing that. Then once you file the return filing due date general, then we can discuss about the advance tax and interest. Advance tax and interest. So the question is going to come usually from which topics are here only. 5A, 7 marks, advance tax and interest. But the base or the return of income due dates are also relevant. Then only we can start with advance tax and interest. Then we have CBDT and authorities. CBDT and authorities. Assessment procedures. Assessment procedures. Search and seizure. Next one and the last one is like here appeals and revision. Sir, this many chapter for one question, sir. Sir, the question comes only from 5B only till now. Okay, from appeals and revision chapter only they are asking 7 marks. Okay, but CBDT, authorities, assessment procedures, search seizure will give the foundation, the base. If without discussing these 3 chapters, if I go and discuss appeals and revision chapter, you will be watching something like a Bhojpuri movie without subtitles also. Without subtitles, if you are watching a Bhojpuri, there is a language called Bhojpuri. Okay, without subtitles, and even they are not great actors also. If at least they are great actors, you with the expression you will understand something. Those people are not great actors. Example I am saying, not a great actors, and language you are not understanding, no subtitle also. Then what you will understand? Okay, nothing. Somewhere here and there you will be getting some point, then everything is gone. Like that only it happens. That's why CBDT, assessment procedures, search seizure. Once we discussed, okay, this is happening. Then we'll go to appeals and revision. Then question number 6, A7A and question number 7. These 2 questions together, it will be always from DTAA and transfer pricing. No other question will come into this particular slot, sir. Always this will be DTAA and transfer pricing. Those 2 chapters alone will fetch you how many marks, sir? 28 marks. Like 214 marks question number 6 and question number 7. The last one, question number 8. Question number 8. Question number 8, again 2 parts. Here again transfer pricing only. 8A also, 8B also transfer pricing only. Another 7 marks. 8B. 8B is also from what? Transfer pricing chapter. 8A alone, sir, I cannot tell from which chapter it's gonna come. It could be from any chapter. It could be from any chapter. So we cannot predict what is to be in the 8A slot. So you should read all the other chapters also. Okay. So now, if you see PGBP and assessment of companies, basics and deductions, there is no straight question, but based on these two, there is a 14 marks question. Then tax planning, there is a 14 marks question, 3 chapters. Business restructuring, there is a 7 marks question. NR taxation, there is a 7 marks question. And there is advanced tax and interest, 7 marks question. Appeals and revision, there is 7 marks question. DTAA, transfer pricing. So if you count now, how many chapters are? 1, 2, 3, 4, 5, 6, 7, 8, 9. One another chapter, 10 chapters. So out of 26 chapters, 10 chapters are only having pure exam relevance. Okay. So now what will be our approach, sir? These 10 chapters will stress so much. We need to understand every nook and corner of these 10 chapters. Whereas for other 16 chapters, we'll be discussing to get the flow for MCQ's perspective, and those points may get interlinked here and there for these chapters also. That's only the importance. Okay. So these are like high important chapters, these set out of all the other chapters. Initially, there might be little tension in your brain that there are 26 chapters, how to study, from where we'll start, how it will go and all. But now if you see, exam wise, the relevance is most only on these 10 chapters. Now you have little clarity, right? Yes, it is voluminous, but if we can plan effectively, if you study properly, on these core chapters, if you focus much, easily we can get 60s, 70s. Okay, 60s and 70s easily you can get. Before going into our syllabus, sir, our subject, first, our classes now for June 2026 term and even for December 26 term, it's based on Finance Act 2025. Finance Act 2025. Now, many students will ask me the basic questions are when we are studying income tax. Okay, your final people will not ask like that. At least I believe you don't ask me such kind of questions. Why Finance Act 2025, sir? For us, we are discussing income tax act so write about income tax act. No. Sir, income tax act, every year to the income tax act, the amendments are brought through Finance Act. Okay, to be much more broader, it's not just to income tax act. There are hundreds of acts in India. For all those acts, they require amendments year on year. Okay, the provisions has to be updated considering the modern times and all. So all those amendments separately, they will not pass a bill in the parliament. If already once the law is accepted by the parliament, they passed it, president approval made. After that, if any simple kind of amendments has to be brought, and all those amendments are bundled through finance act, not just income tax act, other acts also. If amendments has to be made, they will be bundled with the finance act. Once the finance act is approved by the parliament and president, then all these amendments are also will be made effective. Understand? So finance act 2025 is applicable for assessment year 26-27. Assessment year 26-27. For what is called assessment year, it is applicable for what? Assessment year 26-27. I mean the income tax related changes which are applicable for assessment year 26-27 will be brought through Finance Act 2025. Sir, for the December 25 term students, it's Finance Act 2024. For you guys, it is Finance Act 2025. Okay. What is the relevant financial year they are referring? Financial year they are referring is about 25-26 only financial year, and that is only even called as previous year 25-26. Previous year 25-26. Okay. So Finance Act 2025 is relevant for us. Understand? So these classes, or if at all you are a student who has bought some older versions or for advanced and all June 2027 and all now, then again you need to get updated. You can listen to these classes, but again amendments also you need to listen. It doesn't mean 100% of the act will change. Some 5%, there may be some new additions, certain deletions will be there. The basic core skeleton will not change, that remains same. Some provisions may be inserted, some may be deleted, some may be modified, those things will happen. Okay, so this Finance Act 2025 is applicable for which term, sir? June 2026 term and even for December 2026 term. Okay. So we're going to start with Article 265. Sir, what is Article 265? Sir, we are starting with the chapter Basic Concepts, sir. The heading is Basic Concepts and Tax Rates. We're going to starting with the chapter Basic Concepts and Tax Rates. Basic Concepts and Tax Rates. First chapter. First, we're going to start with Article 265. So what is this Article 265? Income tax, now I thought there will be section numbers. Why this Article 265 came? Sir, we are discussing certain constitutional provisions. Why? Sir, to levy a tax or to collect a tax from us, okay, there should be some power given, right, sir? By looking at these movies and all, I also got inspired. So I thought like I will also make a gang for me. I'll become something like gangster kind of, and I'll ask everyone to pay me tax. Okay, you are doing which business? Farming. Okay, send me some 10 bags of paddy to me. You are doing what? Sugar cane. Okay, 10. Send me 10 tons of sugar cane to me. Like that, I am demanding everyone. You are doing jewelry business now. Then every month send me 3 lakhs. You are doing construction business. Every month send me 5 lakhs. You are what? Huh? You are what? CNA. Okay, send me 50,000. You are what? CMA. Send me 50,000 a month. Like that, I am demanding people. Otherwise, I am saying like I'll hit you. I'll kill you guys. Okay, if I do such a way, who is the one to protect you? The one to protect you is like government. Sir, why government has to protect you, sir? I am saying like I will only give protection. I am saying like I will only give protection from government. You pay taxes only to me, not to government. I have my people. Okay, if you are paying money, I'll recruit more people and I'll give protection to you. So you need not to pay to the government. That's what I am saying. Sir, is it valid? No, we are in democracy. I don't have such right. There is something called constitution. In constitution, there are provisions under articles. So article 265 says like what? Only the government has the power. Okay, the government also nothing but authority of law. It's the one who can make a law. Except them, nobody else like me can collect taxes. Only an authority of law, nothing but government can collect the taxes. If someone like me collects, it's an ultra wise to the constitution. I am overriding the constitution which we all accepted. Then the police will come against me, military will come, army will come. Okay, so like that will happen. So we individuals or the normal people, any private persons doesn't have the right to collect a tax. Only authority of law, government has the right to collect taxes. No tax shall be levied or collected. No tax shall be levied or collected except by authority of law. Except by whom? Except by authority of law. No tax shall be levied or collected except by authority of law. Then Article 246. Then Article 246. Sir, what is Article 246? Sir, authority of law, na? Central government also authority of law, state government also authority of law, local authorities also are there. Who is the one collecting taxes? Sir, again. Sir, I am in Andhra Pradesh, sir. Andhra Pradesh state government is saying like you pay only income tax to me. Whereas central government is saying like you are staying in India, na, pay tax to me. Now, everywhere like sir, if I go like to Telangana, Hyderabad to take classes, then Telangana government is asking. If I go to Tamil Nadu in Chennai to take classes, then Tamil Nadu government is asking to pay taxes. Sir, can I pay taxes in this many places? I am having poor guys, sir. I am earning 1 lakh rupee income. Government is asking like in for central government I need to pay, AP government, Tamil Nadu, Telangana not possible, right? So Article 246 has distributed these powers. Like on which matters central can frame law, on which matters state can frame law, on which matters both can frame laws. Okay, so if a law is framed by one authority, obviously the monitoring of the such law, the tax collection of that related law, everything will belongs to that particular government only. So Article 246, 7th schedule, 7th schedule consists of 3 lists. What are those 3 lists? Union list. Union list are nothing but central government. The matters which are contained in union list, on them central government can frame laws. Then state list. And the third one is concurrent list. And the third one is what? Concurrent list. Union list, state list, concurrent list. Okay. Union list consists of what? Matters on which Central government can frame law. Okay, I am not writing for each and everything, sir. Like state list na matters on which state government can frame law. Concurrent list na both can frame laws. Now, under union list, entry 82, okay, income tax act or income tax is levied by central government. So if it is levied by central government, na such matter, such income tax related should be mentioned in where union list. So entry 82 of union list gives the power to frame income tax law. To frame income tax law. Entry 82 gives the power to frame income tax law. Article 246, 7th schedule consists of 3 lists, union list. Out of that union list, entry 82 gives the power to frame income tax law. So by using entry 82, central government has passed income tax law, and through that they are collecting income taxes or levying income taxes. Right. Next one, sir. So today I'm not gonna take the full length time, sir. We'll close it in another 10 minutes max. Next, the last concept for today. Components of income tax law. Components of income tax law. All this is basic only, sir. You might have learnt even in inter level also. Components of income tax law. Obviously, the first one is what, sir? Income Tax Act 1961. Income Tax Act 1961. The whole Income Tax Act, what Income Tax Act will consist of? It consists of sections, subsections, explanations, provisos, etc. Okay. Income Tax Act applicable to whole of India. Applicable to whole of India, and it is came into force. When it is came into force, sir, Income Tax Act 1st April 1962. Income Tax Act 1961 came into force on 1st April 1962. Came into force on 1st April 1962. The whole act consists of 298 sections. The whole act consists of how many sections, sir? 298 sections. And it is divided into 14 chapters. Divided into 14 chapters. Sir, you said 26 chapters, here only 14 chapters, sir. Sir, 26 chapters, for our convenience, we had break down much more. But whereas in the Income Tax Act, they have grouped them only into 14 chapters. They have grouped them only into 14 chapters. So Income Tax Act 1961 consists of sections, subsections, explanations, provisions. It applicable to whole of India, came into force on 1st April 1962. It consists of 298 sections divided into 14 chapters. Okay. So these points are from section 1 of Income Tax Act. Section 1 of Income Tax Act. Then second one, it's about Annual Finance Act. Annual Finance Act. What is the relevant Annual Finance Act for us? The relevant Annual Finance Act is like Finance Act 2015 now for this one. But every year, sir, because every year through Finance Act only the amendments will be brought. Annual Finance Act. Okay, so for assessment year 25-26, which, sorry, 25-26, assessment year 26-27, or assessment year 26-27, which ones are Finance Act 2025. Okay, so what happens through this? The amendments are brought through it only. Amendments to income tax are made through it only. Amendments are made through it. Annual Finance Act. And third one, income tax rules 1962. Income tax rules 1962. Income tax rules 1962. The rules wise are in act, in sections, they'll tell the basic concept. Sorry. Okay. Income tax rules 1962. Income tax rules. So what is the purpose of rules? Sir, act will tell the core point. Rules will give us the detailed step-by-step guidelines. Let's say, for example, to file return of income, you should have PAN. And even if you go to the return of income chapters, they'll tell like when you should have a PAN. When you are having the tax liability, then obviously you should have what? PAN number. Okay, that's what there in the section. But how to apply PAN? Where to apply PAN? For applying PAN, what proofs I need to provide? For applying PAN card, how much fees I need to pay? All these are not mentioned in the act. And where they will be there? They will be given in the rules. So rules are step-by-step guidelines which are needed for implementation of act. So these rules are issued by CBDT, not by government, sir. Act will be issued by central government by way of passing the law through parliament. Okay, whereas the rules will be issued only by whom? CBDT. Rules are issued by CBDT. These are like step-by-step guidelines. Step-by-step guidelines for implementation of act. To implement the act, much more detailed guidelines are there in the income tax rules 1962. Then the fourth component, it's about circulars and even notifications also. Circulars and notifications will use, but both are different only. Circulars is different, notifications is different, but in a sense normally we'll call like circulars and notifications like that. What is circulars? For understand, these circulars are issued by CBDT, always issued by CBDT, circulars. But notifications, it is different. Notifications, it is like different. What is different? Sometimes they will be issued by, so we need to check with respect to what the notification has been issued. They are with respect to rules. The notification is with respect to rules. Then that would be issued by CBDT. Notifications are with respect to rules, then they are issued by whom? CBDT. If the notifications are with respect to act, then they are issued by central government. Then they are going to be issued by whom? Central government. With respect to rules, CBDT. With respect to act, central government. Sir, why, sir, notifications again has to be issued? Sir, when there is a change is made, then the change has to be communicated to everyone, we public. Then such change has to be notified to us. Sir, Finance Act they brought a change. Yes, even though they brought it through Finance Act, again they should notify us by publishing in official gazette. Okay, so if it is a change related to rules, then that would be notification. In phone we'll get notification if something is happening, some alert, some kind of, if someone likes your pic, if someone comments on your pic, you are getting a notification. The same way, if something, some new provision is going to be brought, some provision is going to be changed, then you should be notified, but not through mobile, sir. That would be notified via official gazette. Okay, if it is related to rules, CBDT will issue notification. If it is related to act, then central government will issue notifications. Okay, so the notification has to be issued to give effect to a change in the provision, to a change. That could be amendment or a new section implementation, everything. Okay, to give effect to the change in provisions. Effective to change in provisions. Circulars are issued by CBDT. Why? To clarify doubts. If there are any doubt, if there is any ambiguous situation, then to explain the intention of the lawmaker, they will be issuing circulars, will be issued by CBDT. Okay, and these are binding on department. SSC, if he don't like, he is not binding, he need not to follow them. He can challenge them. Binding only on department. Department must follow circulars. SSC, if he thinks it's positive for him, he'll follow. Otherwise, he can challenge it. Then again, in the appeal process, the court general may decide whether that circular has to be followed or not. Circulars, notification. And the last, fifth component, judicial decisions. Okay, judicial decisions, nothing but case laws. Various cases, laws decided, various decisions given by a tribunal, decisions of tribunals, High Court, Supreme Court. Okay, these are also part of the income tax law. So, if we study only Income Tax Act 1961, then we cannot do anything. So, if at all we should have an overall understanding of income tax law, and to advise someone regarding the tax matters, you should be knowing Income Tax Act, you should be knowing the relevant changes brought by Annual Finance Act, you should know income tax rules, you should know circulars issued, you should know the notifications made, and you should even know the applicable tax related case laws of High Court, Supreme Court, and even tribunals also. Okay, these are the components of income tax law. These are the components of what? Income tax law. Clear? Everybody? So first day, sir, initial week will be, even though the class is effectively for 2 hours, initial this week will be having around roughly 1.5 hour, less than 2 hours only. The next week will increase the time also to 2 hours, and then there will be 2 sessions also, morning and evening also. Okay, so one thing, sir, today there's no much work for you to revise also these things, but from tomorrow onwards, sir, because we'll start discussing the tax rate journal, start revising. Okay, thank you all. Good night, everyone. Okay, so we're gonna proceed with our basics chapter. So yesterday I already said, like, for us, for your exam, Finance Act 2025 is applicable, and then we discussed like Article 265, which says like no tax shall be levied or collected except by authority of law. Except by authority of law, that means nothing but government, except by government. We people, either me or you, we doesn't have the right to collect or levy taxes. Then Article 246. Article 246, 7th schedule consists of 3 lists: union list, state list, concurrent list. In that union list, the matters on which central government can frame laws will be listed. Entry 82 is the entry number of Income Tax Act, okay, or income tax levy. So by using that power only, central government framed the law on income taxes. So the components of income tax law, I mean what we will be studying or what we need to know to be an expert in income tax law. Okay, so Income Tax Act 1961, it consists of the sections, subsections, explanations, provisos and all. It applicable to whole of India. It came into force on 1st April 1962. 298 sections are there in this act and divided into 14 chapters. Annual Finance Act, okay, for assessment year 26-27 is like Finance Act 2025. Amendments are made usually through it. Income tax rules 1962, which are issued by CBDT. These are like guidelines for the implementation of act. Then there are like circulars and notifications. Circulars will be issued by CBDT to clarify doubts which are binding only on department. Notifications are issued to make effective any change in rule or change in the act or section to give effective change in the provisions. And judicial decisions, case laws are also part of the Income Tax Act, income tax law. Okay. Now today we're gonna start with the section 1 of Income Tax Act. Section 1 of Income Tax Act. What does the section 1 of Income Tax Act says? So in every act, sir, the section 1 is nothing but the title. Section 1 is nothing but the title. Okay, so section 1 is the title of act and applicability. So what is the title of the act, sir? Income Tax Act 1961. Applicables to whole of India. Income Tax Act applicables to whole of India. Applicables to whole of India. Came into force. It came into force on 1st April 1962. Came into force on 1st April 1962. Section 1. It's what? The title of the act. Right? Okay. There's nothing great to discuss there. Then section 2. Section 2, sir, it's about definitions. So definitions we are not going to discuss at a stretch. We're going to discuss definitions whenever needed. Okay, we are not discussing here. We'll discuss whenever needed. Okay, whenever a particular definition is needed, then we'll discuss it. It's not possible for us to discuss all these definitions at a stretch. Then section 3. Section 3 is about previous year. Section 3 is about the previous year. Previous year. What is called previous year? The year in which income is earned. The year in which income is earned. The year in which income is earned is called as the previous year. Okay, sir. Understand, sir? The previous year definition can't be explained without explaining the assessment year definition also, right? See, understand. The year in which we earn income is called previous year. In the next year, we'll compute the tax on such income. Let's say, for example, year 25-26. Year 25-26. Okay, if in 25-26 you earned income, in 25-26 earned income, this income is assessed in 26-27, it is assessed to tax. It is assessed to tax. So what is called assessing to tax? Computation of tax. It's not payment of tax, sir. Computation of tax. Assessment means nothing but computation of tax. So if in year 25-26 we earned income, then on that the tax computation will be made in 26-27, not payment. Sir, why I am not using the word payment now? Sometimes the tax will be paid in the same year. Let's say in 25-26 we earned income, and for the income related tax sometimes we'll be paying in 25-26 only by way of advance tax, by way of TDS and all. So I am not talking about the year in which we pay tax. Okay, the year in which we earn income is called the previous year 25-26, but that income related computation of tax, sir, then we are paying advance tax in the same year. No, then we are not computing. No, sir, even though we did computation, that is provisional basis. The final computation of tax with respect to 25-26 will be made only in the year 26-27. So in previous year means the year in which we earn income. So in 25-26 we earned income na. So this year, okay, this is called as what? Previous year. Previous year. Okay. In this year we are computing the tax or assessing the tax now. So this is called what? Assessment year. This is called assessment year. So the year in which we earn income is called previous year. The year in which we assess the tax of the income earned is called as assessment year. Is called assessment year. Okay, so I am writing, sir, previous year means the year in which income is earned. The year in which income is earned is called previous year. The year in which income is earned is called previous year. And usually, sir, previous year 25-26 now usually it's a period of how many months? 12 months only, because financial year we are taking, right? So previous year usually means a period of 12 months starting from 1st April. Starting from 1st April. So previous year usually means a period of how many months, sir? 12 months starting from 1st April. However, sir, to this there's an exception. There's an exception. I mean, sometimes previous year may not be a period of 12 months. Usually previous year is a period of 12 months, but sometimes previous year need not to be a period of 12 months. When the exception is like when a person is having new source of income. When a person is having new source of income, and he is having no new source of income, then the day, okay, it's not like from 1st April you are having income for the first time, sir. Let's say you got job or you were joined in the employment only on 1st October, till 1st October of that year or preceding that you don't have any income. You are a student, you are studying. On 1st October you got your first job. Okay, so then 1st October only you are having a new source of income. Then previous year started for you only on 1st October, not on 1st April. Okay, but succeeding years and all, for the first time only it starts on 1st October because you are having source of income for the first time. But then after, okay, in the subsequent years and all, previous year is a period of 12 months only. New source of income, okay, when you are having new source of income, the day it started, the day such new source of income started, is the commencement of previous year. Is the commencement of previous year. Okay. Or else you are starting some new business. You are starting some new business or profession. Then also, sir, here we started source of income. Actually, business or profession also can come, but they given separately. When you are having new business or profession, then also the day such business or profession commenced. The day such business or profession commenced is the start of previous year. Okay, so usually previous year is a period of 12 months, but sometimes there are exceptions. When you are having a source of income or business or profession, new business or profession or new source of income for the first time, then previous year instead of starting 1st April, that starts only from the day on which such new source or new business or profession has been commenced. Sir, irrespective of how much ever is the period of previous year, assessment year will always be a period of 12 months. Assessment year is always a period of 12 months. Okay, and one more hack, sir. Okay, in exam, financial year will be given, I mean P&L, income statement, in exam. That itself is the previous year. That is the previous year. Okay, the succeeding year. Sir, in questions and all, they'll give P and L. For which year they prepared P and L, that itself is the previous year. Because when you prepared P and L, in that year only income is earned. That is the previous year only. Okay, so financial year and previous year are one and the same. Assessment year, the year succeeding to the previous year. Sir, then why it is called previous year, sir? Previous year, if it is named, I am thinking like the before year to the financial year. So let's say our applicable financial year is like 25-26. I am thinking like previous year, before year 24-25. No, you are wrong. Previous year name is given when you are referring it from assessment year. Okay, so when you are referring it from financial year, then financial year and previous year are same. When you are referring it from assessment year, then the preceding year is the previous year. That itself is the previous year. Okay. Now we are going into the definition of assessment year. The assessment year is defined in section 2 only. There is no separate section number under section 2 only. Assessment year is defined. What is assessment year? The year in which income is assessed to tax. The year in which income is assessed. Assessed now what? Computed. The year in which income is assessed to tax. I mean computed to tax. The year in which income is assessed to tax or computed to tax is called as what? Assessment year. It is the year immediately succeeding to previous year. It is the year immediately succeeding to previous year. Immediately succeeding to the previous year. Then assessment year is always a period of 12 months. It is always a period of 12 months starting from 1st April. Always a period of 12 months starting from 1st April. Right? Okay. Now we are moving on to section 4. Because 1, 2, 3 done now, section 4. Section 4 important one, sir. In interlevel, okay, they used to by heart as the section 4. Because section 4 is called as the charging section. Section 4 is the charging section. So what is called charging section? The charging section, it actually tells when tax will be levied, on what tax will be levied. Okay, if any tax has to be imposed or any tax is being levied, on what such tax is going to be levied, on what such tax is going to be imposed on whom. So let's say they said like income tax. Okay, on whom income tax will be collected? On animals, huh? No, right, on humans only. Okay, so where that point has to be set, like let's say on person tax will be collected. What is the basis to collect taxes? Based on height, based on weight, based on color, what is the base? Income. So, okay, so that thing has to be given in the charging section. Okay, so in any actor, even if you go to GST, there is section 9 called as the charging section, where it, okay, on what GST has to be levied. Same question again, it has to be levied on a person or on whom, on what basis it has to be levied. Okay, in GST they'll say like on supply tax has to be levied, and then on what income tax has to be levied? On income. What income? Total income. Okay, so charging section gives us the purpose of income tax law, on what it has to be levied. In another way, it gives the power to levy tax, on what the tax has to be levied on them. Okay, charging section. See sir, income tax shall be charged in a, charge means here nothing but levy. Okay, now one more student will ask, what is called levy? Levy means impose. So don't ask me further what is called impose. Okay, imposing a tax, levying a tax, charging a tax. Okay, so income tax shall be charged for every assessment year. It's not like once in a while or like for 10 years once. For every assessment year, income tax shall be charged for every assessment year. Okay, then how that will be levied? As per provisions of this act. Okay, that will be levied as per provisions of this act. Such income tax will be levied as per provisions of this act. Okay, fine, that is also done. Then as per rates given in annual finance act. It's not like the way they want. Okay, it has to be levied or has to be imposed as per the rates given in annual finance act. Income tax shall be charged for every assessment year as per provisions of this act, as per the rates given in the annual finance act, on the total income on the total income of previous year. Why? Because the income will be earned in previous year na. So that's why on total income of which year, sir? Total income of previous year. On the total income of previous year, income tax shall be charged for every assessment year as per provisions of one second, sir. One student actually couldn't join the live, asking provide the okay. Income tax shall be charged, levied So charging section we have discussed, sir. What is the charging section says? Like income tax shall be imposed for every assessment year as per the provisions of this act by using what? The rates given in the annual finance act. So we need to know the tax rates as per Annual Finance Act. On what it would be levied, sir? On total income. On what? Total income. So for that, we need to know what is called total income. So total income we already learnt in the inter level. Here also again will be understanding what is called total income and all of previous year, and it's not, and it will be on every person. On every person. So the tax charge will be on every person, not like on only on a particular people. It will be on every person. The tax charge will be there on every person. Right? Okay, then now we need to discuss these points also. So first quickly, sir, we'll go through the person definition also. Sir, again person definition is also from section 2 only. Person definition again is from where? Section 2 only. Okay. Person. Sir, I am not gonna explain so deeply the person definition also, because we already know what is called a person definition. So person includes. Person definition starts with includes. For understand, whenever a definition is termed with includes, it said like includes. That means, sir, usually the definition will be framed in two ways, right? It could be like means, by way of means, or by way of includes. So when they are explaining by way of means, then they could circle it na, they could explain it properly and they can clearly create certain boundaries for that. But when they are defining with the word includes, so they cannot actually define it properly. I mean, they cannot have a border for it, cannot circle it. That's why they'll give includes. So includes definition na, that means they are not explaining what it is actually. They are saying like some kind of examples only they are giving. Okay, this could be person, this could be person, this could be person. Like that they'll give certain examples only. In future, based on evolution of time, if something new also comes, that could be easily included here. Okay, because the definition is basic with the included. But whereas when the definition is framed with means, it has a clear boundary. Okay, so only the one which fits into that boundary can be included in that particular definition. Okay. So here person includes. So whatever the list we are studying is not the complete list. Okay. As of now, for the time being, this is only called as person. Based on time changes, if something new comes also, it can be included, because here we are referring like examples. This could be persons, this could be persons, like that. Person includes individual. The individual now what? The human beings. Okay, it could be individual, could be minor, major, sound or unsound, sound mind or even unsound mind. Okay, irrespective of gender, they could be called as what? Individuals. Okay, human beings irrespective of major or minor. Then HUF means what, sir? Hindu undivided family. If you remember, for us two school of thoughts are there in Hindu HUF. Mitakshara, Dayabhaga. Okay, Mitakshara is one school of thought in HUF. Dayabhaga is another school of thought in HUF. Okay, Mitakshara is, so that will be there, and to HUF there will be head of the family who is called as Karta. All that one, right? That's not relevant for us. It is needed in assessment of HUF. That time I'll give little explanation about it. As of now, not required much. HUF. Then firm. Then what? Firm. The firm here includes LLP. They will not separately says what is called LLP. I mean LLP. There is no separate entry under the person definition, sir. So firm only they referred. Partnership firm. So that firm even includes LLP, limited liability partnership firm, also included. Then company. Then there is something called AOP. AOP means what, sir? Association of persons. Then So having next one is what? BOI. BOI means what? Body of individuals. Body of individuals. Then local authority. Local authority. Then there is some, the last one is like AJP. AJP na artificial judicial person. AJP means artificial judicial person. Artificial judicial person. So person includes individual, it could be minor, major, HUF, firm including LLP, company, AOP means association of persons, BOI means body of individuals, local authority, artificial judicial person. So this is the definition of person. Okay. So what is the difference between AOP and BOI, sir? AOP means association, group, a group of persons. If it is not registered as a partnership firm or not as a company, then we call it as what? Association of persons. So in association, such association could be any type of person, like one individual and one company can called as AOP. One individual, one HUF can also be called as AOP, because anyone in the person definition can form as group. Okay, then such group of persons, not group of individuals alone, group of persons, such group may consist of individuals, firms, HUFs, companies, the whole such group. If it is not registered as a firm or company, then we call it as what? Association of persons. Whereas body of individuals, it is also a group of people, but only individuals will be there in that body. Okay, so AOP, sir, they voluntarily came together for a purpose and then form as a group, then it is AOP. BOI mostly out of compulsion, because of some legal statute or because of some trustship and all, they'll form as a group, that is called body of individuals. So person includes individual, HUF, firm, company, AOP, BOI, local authority, and even artificial judicial person. Okay, so the rates will be discussing, sir, afterwards. Assessment year definition already discussed. Previous year definition already discussed. Then annual finance act means every year the budget will be introduced, right? That itself is the annual finance act. Then it will be on every person. So we already covered the definition of person. So now we are moving on to what is called total income. What is called total income? Sir, important, sir. So people think like, sir, all these basics we know, but trust me, the most number of mistakes a student do is from first chapter only. Okay, but not at the time of discussing first chapter. When you are doing the whole syllabus, okay, and when a sum comes from a different chapter like a DTAA or from something like an advanced tax chapter, there also these basics are important. That time you will miss these basic points and it impact so many steps. Okay, total income. Total income. So total income means what? We need to compute separately for each head. For each head we need to compute income separately. Then all those 5 heads we need to include. Okay, income from salaries. First there will be income from salaries. Then there will be what? Income from house property. For first salary side only. Just because in interlevel first they taught you house property, it doesn't mean house property head is the first one. No, salaries head is the first one. Then income from house property. Income from salaries, income from house property, then profits and gains from business or profession. Profits and gains from business or profession. Income from salaries, income from house property, and then profits and gains from business or profession. Okay, then the next one, sir, capital gains. Income under the head capital gains. There could be short term, there could be long term capital gains. Then income from other sources. Income from other sources. Okay. So all the five heads incomes will take income from salaries, house property, profits and gains from business or profession, capital gains, income from other sources. Then what else? Directly set off and carry forward of losses, sir? No, sir. First we need to apply clubbing provisions. What is meant by clubbing provisions? The income of some other person needs to be included in the income of this person. Then that is called as what? Clubbing. Then that is called as what? Clubbing. Plus we do clubbing provisions. And this clubbing provision, sir, it doesn't mean we'll add such other person. Let's say minor child is having income. Such minor child income has to be clubbed in the hands of parent, right? So it doesn't mean, let's say minor is having some rental income. That rental income you cannot straight away bring here and add. The clubbing has to be done. Clubbing provisions apply headwise. It's not like you will add whatever the head income it is like straight away here. You need to add it in that particular head only. Sir, this parent is also having house property income, whereas the minor child is also having house property income. Then both these to be added at the house property head level only, right? Okay, then minor is having some kind of capital gain. Parent is not having any capital gain. Then this minor capital gain also has to be reported where? Under the head capital gain only. Okay, so these incomes of a minor, if at all they needs to be clubbed, they need to be clubbed at a proper head, at a headwise. You cannot just add all those incomes of minor at the beneath bottom. Okay, so you need to add them also headwise only. Then you will do plus or minus what? Set off and carry forward of losses. Set off and carry forward of losses. Okay, so if any losses are there to be set off, carry forward, all those set off, carry forward steps you will do. Then after doing all this, you will arrive at gross total income. You will arrive gross total income. From this gross total income, we need to deduct certain things. What we need to deduct, sir, from this gross total income? From this gross total income, we need to subtract Chapter 6A deductions. Sir, what are these Chapter 6A deductions, sir? Chapter 6A deductions, the deductions are there from 80C to 80U. Those are called the Chapter 6A deductions. And even 10AA exemption. 10AA exemption. It is related to SEZ, sir. This 10AA exemptions is like SEZ unit, which is into exports, and 100% of its profits are eligible for exemption. Okay, such 10A exemption also you need to subtract. Then from gross total income, after subtracting this, then we'll arrive at net total income. Net total income. Net total income. So if they are referring it as total income, it's always their meaning is what? Net total income only. So always we need not to stress it as like net total income. When we commonly say like total income, then usually we are referring to what? Net total income only. If at any place they want to refer gross, then we will clearly say like gross total income. Instead of gross, if they simply said like total income, then always they are referring to what? Net total income. Okay. Net total income, commonly referred as what? Commonly referred as total income. Commonly referred as total income. Then we need to compute tax on it, right? Then computation of tax also I am writing stepwise, sir. Computation of tax on total income. Sir, what is computation of tax, sir? That we already know now. Okay, so you might be knowing, sir, but for my satisfaction I am writing once again. Computation of tax on total income. Okay, how do we compute, sir, computation of tax on total income? first compute tax on total income excluding special rate incomes. So first you will calculate, you compute tax on total income excluding the special rate incomes. Sir, incomes are, sir, okay, going forward we'll classify our incomes like incomes which are chargeable to tax at special rates and which are chargeable to tax at normal rates. So first, out of the total income, you will take those incomes, total incomes, from there you will exclude special rate incomes, and on the balance, let's say 50 lakhs income you are having. From there some 10 lakhs is special rate income. The 10 you leave aside. On the balance 40 you will compute tax excluding special rate incomes. Okay, so that you do. Okay, so I'm not taking it in the outer column, sir. I'm taking here in inner column also. Inner column I'm taking here. Compute tax on total income excluding special rate incomes. Then tax on special rate incomes. Then you will calculate what? Tax on special rate incomes. So anyhow we'll discuss them afterwards, what are called special rate incomes and all detailedly. But usually, sir, there could be capital gains. The special rate incomes usually be what? Capital gains. Not all the capital gains are, only 3 sections. Okay, I'm just writing the section number, sir. I'll explain you each and every section number in the going forward in the first chapter only. Capital gains, section number 112, 112A and 111A. These are the capital gains which are chargeable to tax at special rates. And there could be even lottery income. There could be even lottery income, and all this what we should do, add. Okay, then we'll get the final tax. We get the final tax. Okay, on this final tax, next we need to levy what? If there would be any surcharge, if surcharge applicable, you'll add surcharge, or there may be rebate applicable, then you will be subtracting rebate. So understand, surcharge and rebate will not come at the same time. Either surcharge will come or rebate will come. If surcharge comes, you need to add. If rebate na, you need to subtract. Okay, that you will be doing. Okay, surcharge you will be adding, rebate na you will be subtracting. Then you need to apply health and education cess also. HEC, health and education cess. At 4% apply, then you'll get the total tax payable, total tax liability, total tax liability. From this total tax liability, sir, you'll be adjusting, you'll be subtracting any advance tax paid. If any TDS TCS is there, and then some others like MAT credit, DTA relief, all those will come in the after, like after discussing certain chapters. But as of now, advanced tax, TDS, TCS, if anything is there, that also will be subtracting from the total tax liability. Why? Sir, advanced tax is nothing but the tax paid only. TDS, TCS is the tax deducted from your receipts. Okay, so that already with the government only. So that amount you adjust. After adjusting, then you will find out the total tax payable. You will find out what? The total tax payable. Okay, so this is the total income, sir. We'll be computing total income in this way: income from salaries, house property, PGBP, capital gains, IFOS. Then we'll apply clubbing provisions. Then we'll do set off and carry forward of losses. Then we'll get gross total income. Then we'll do chapter 6A deductions and 10A exemption. Then we'll arrive net total income. On net total income, we'll compute tax, surcharge, cess and all. From there, if any advance tax, TDS, TCS is there, you'll adjust. Then you'll be getting the final tax payable. Okay. So then, now we are moving on to the tax rate, sir. Tax rates. Okay, I'm going to the next page. Okay, I'll start with the tax rates applicable to tax rates applicable for assessment year. What is our relevant assessment year, sir? 26-27. Tax rates applicable for assessment year 26-27. In simple, sir, when you are writing exam, check your exam term when it is coming. Let's say you are writing in June 2026. It falls in which year? 26-27. That is your assessment year. Let's say you are writing December 2026. That also will fall in which year? 26-27. So in which exam, okay, when you are writing exam, okay, whichever the term is going on, that itself is your assessment year. Okay, the preceding year is nothing but your previous year. Okay, so now we are discussing about tax rates applicable for assessment year 26-27. But also first, for whom we are discussing? We are discussing for individual HUF, AOP, POI and artificial judicial person under the section 115 BAC, 115 BAC. We are discussing the tax rates applicable for individual HUF, AOP, BOI, AJP under 115 BAC. So 115 BAC is nothing but the new regime which is going to change every year. From past 3 years, every year the slab rates are changing, sir. Okay, I hope this set of slab rates which were given will be intact for another 1-2 years, I think at least. Okay, so individual HUF, AOP, BOI, AJP under 115 BAC, sir. This is only called as the default regime. Okay, I think everybody know that there are 2 regimes as of now. This default regime, I mean, if question does not says anything, then obviously you need to calculate as per default regime 115 BAC only, default regime. And then this is even called as new regime also, new regime. Okay, the other one is the old regime. So many will be having doubt like, Ramalakshmi, you can watch it like the first class will be in the live session. The same course, if you go to the live section, you will see the first class already. Okay, it will be there in the live session. Complete that one. Okay, you can continue the class now. You will understand even from here also. Today, you continue the class from here. First class you can even listen to night also. Individual HUF, AOP, BOI, AJP is covered under 115 BAC. This is called as the default regime or even the new regime. Okay, so now we'll be discussing the total income and the tax rate. Total income and then the tax rate. Total income and then the tax rate. Okay, total income. So what is the total income and the taxability, sir? See, 0 to 4 lakhs. So there is a increase in the basic exemption limit, sir. 0 to 4 lakhs, it's nil. 0 to 4 lakhs, it is nil. Then 4 to 8 lakhs, it is like 5%. 0 to 4 lakhs nil, 4 to 8 lakhs, it is 5%. 8 to 12 lakhs, it is like 10%. Then 12 to 16 lakh, it is like 15%. Then 16 to 20 lakhs, it is 20%. Then 20 to 24 lakhs, it is like 25%. Above 25 lakhs, it is like 30%. So little simple only, sir, compared to the previous regime, because for every 4 lakhs the slab rate will change. With every change 5% is gonna increase. 0 to 4 nil, 4 to 8 5, 8 to 12 10, 12 to 16 15, 16 to 20 20%, 20 to 24 25%, and above 25 30%. These are the tax rates applicable to individual HUF, AOP, BOI and AJP. If they need not to opt it, they'll be defaultly under here. Okay, if they want the old regime like up to 2.5 2.5 to 5, that one is there, right? So that they want, then they specifically they need to opt out from 115 BSE. Okay, for being under 115 BSE we need not to opt anything. By default you will be under 115 BSE only. If you wanted to be under the old regime, then only you should opt out from here. Okay, and then next one, sir. So some people might be having questions like, sir, there will be different slabs now, sir, for senior citizens and all. Okay, sir, under the default regime 115 BSE, there are no separate slabs available for senior citizen and normal individuals, and there is no separate slabs available for resident and non-resident. Okay, same slabs. Same slab rates, same slab rates, irrespective of same slab rates irrespective of, okay, the slab rates will remain same irrespective of, sorry, 24 only. $24 lakhs, about 24 lakhs, 30%. Okay, same slab rates irrespective of resident or non-resident slabs, same slabs. Okay, and irrespective of normal individual or senior citizen. Okay, these remain same irrespective of whether it is a normal individual or senior citizen. Normal individual or senior citizen. Fine. Okay, now let me take certain examples on this, sir. Let us calculate example 1. We'll calculate tax considering the total income equals to 11 lakhs. The total income equals to 11 lakhs. Okay, how do we calculate, sir? 0 to 4 lakhs, obviously the tax rate is like what? Nil. So the tax equals to nil. Then 4 to 8 lakhs, what is the tax rate, sir? Nil. So here 4 lakhs into 0, it equals to 0 is the tax amount. In between 4 to 8 lakhs the tax rate is 5%. How much income is there? 4 lakhs. 4 lakhs into 5%, which equals to 20,000. 20,000. Then 8 to 12 lakhs, the tax rate is how much, sir? 10%. But our total income is only 11 lakhs, na? So in this slab 8 to 10 lakhs, we have only 3 lakhs. Between 8 to 12, usually there will be 4 lakhs. But for us, given total income is only 11, na? So here only 3 lakhs. So 3 lakhs into 10%, that equals to how much? 30,000. So what is the total tax liability, sir? The tax equals to 50,000. The tax liability is how much? 50,000. Okay, then I'm gonna take example 2. Example 2. What is example 2? Total income equals to I'll give it like 18 lakhs. 18 lakhs. Total income is like 18 lakhs. Okay, so then what? 0 to 4 lakhs. nil. We are having 4 lakhs total income here into 0, 0. Then 4 to 8 lakhs. What is the tax rate? 5%. How much income is there? 4 lakhs into 5%, which equals to how much? 20,000. Then in between 8 to 12 lakhs, how much income is there? In between 8 to 12 lakhs, we are having, okay, the tax rate is 10%, and we are having another 4 lakhs also. 4 lakhs into 10%, it is another 40,000. It is 40,000. Then 12 to 16 lakhs. 12 to 16 lakhs, it is like 15%. So 4 lakhs into 15%, which equals to 60,000. Then the next slab, 16 to 20 lakhs. So in between 16 to 20 lakhs, what is the tax rate? 20%. But our total income is only 18, so we can't take 4 lakhs here. We can take only 2 lakhs. 2 lakhs into 20%, another 40,000. So what is our total tax payable in this case? Like 1 lakh 60,000. 1 lakh 60,000 is the total tax liability in this example. Right? Okay. Then I am going to take example 3. Example 3, I am going to take example 3. So example 3, sir, I am taking total income as exactly 24 lakhs. 24 lakhs. Total income as 24 lakhs. Okay. So what are the slabs available, sir? 4 to 4 lakhs, 4 to 8 lakhs, 8 to 12 lakhs, 12 to 16 lakhs, 16 to 20 lakhs, and even 20 to 24 lakhs. These are the slabs available. 0 to 4, 4 to 8, 8 to 12, 12 to 16, 16 to 20, and 20 to 24. 1, 2, 3, 4. Okay, what are the tax rates? Here it is like nil, 5%, 10%, 15%, 20%. Here it is like 25%. Okay. How much income is we are having here? 4 lakhs into nil. That equals to 0. Sir, it doesn't mean we'll do for each and every sum the same way. Because the first time we are learning the examples we are doing. From next onwards now we will do everything in calculator only. So you should tell the answers quickly. Like all this you need to do quickly. So that only this is like warm up. 0. Then another 4 lakhs here. 4 lakhs into 5%, now it is how much, sir? 4 lakhs into 5%, na 20,000. Then another 4 lakhs into 10%, na it's like how much? 40,000. Then 4 lakhs into 15%, na it's like 60,000. 4 lakhs into 20%, na it's like 80,000. Then 4 lakhs into 25%, na this is like how much? 1 lakh. 1 lakh, right? 4 lakhs into 25%, na it is like how much? 1 lakh. So total is how much? 3 lakhs, right? The total is how much? 3 lakhs. The total is like 3 lakhs, right? So this 3 lakhs you should remember, sir. Sir, why to remember 3 lakhs? Sir, understand, from 24 lakhs above there is only 30% slab, na. So if you remember the tax liability when the total income is 24 lakhs, then it would be easy. Let's say I asked you to compute for 40 lakhs. Again you need not to do the whole sum. For first 24 lakhs it is 3 lakhs. Then extra how much is there? 16 lakhs. 16 lakhs into 30% plus this 3 lakhs. Okay, if you need to calculate for 30 lakhs, first 24 lakhs 3 lakhs, then 6 lakhs into 30% additional to that 24 lakhs, 6 lakhs we are having, na 6 lakhs into 30%, 1 lakh 80 plus 3, 4 lakh 80,000. Okay, it would be easy, sir. Going forward, so you remember the tax liability at 24 lakhs. How much it would be? 3 lakhs. It would be 3 lakhs under the new regime or the default regime. For individual, HUF, AOP, BOI, AJP. Okay, for all of them, for first 24 lakhs, what would be the tax, sir? 3 lakhs. Let's say you need to compute for 35 lakhs. 35 lakhs. So on first 24 lakhs, it is 3 lakhs. 35 now, what is in excess of 24? 11 lakhs. 11 lakhs into 30 percentage na 3 lakh 30. Plus on first 24 lakhs, 3 lakhs. So what is the total? 6 lakh 30. So you can do without calculator also. If you remember for the first 24 lakhs. So what is the tax liability for first 24 lakhs? 3 lakhs. I hope everybody remembers. Then we are moving on to surcharge rates. Then we are moving on to what? Surcharge rates. Surcharge rates. Okay. So what are the surcharge rates applicable? See, total income, on this side the surcharge rate, total income and then the surcharge rate. So total income, if it is like less than or equal to 50 lakhs, so the total income is like less than or equal to 50 lakhs, then the surcharge rate is nil. The surcharge rate, I mean until your total income exceeds 50 lakhs. The total income now always what? Net total income only is less than 15 lakhs, then the surcharge rate is what? Nil. Then the surcharge rate is nil. So the total income is greater than 50 lakhs but less than or equal to 1 crore, then the surcharge rate is like 10% of income tax. So surcharge has to be levied on what? Tax, not on the total income. Okay, but it is decided based on your total income only. So when your total income is more than 50 lakhs but less than or equal to 1 crore, then the surcharge rate is 10% of income tax. Then the total income is greater than 1 crore but less than or equal to 2 crores. But less than or equal to 2 crores. Then what is the surcharge rate, sir? 15% of income tax. 15% of income tax. Then when your surcharge, when the total income is greater than 2 crores, then it is like 25% of income tax. 25% of income tax. Whereas this 25%, sir, it is restricted to 15% only. Restricted to 15% only in case of 111A, 112, 112A and dividend income. So this part, the red color part, I'll explain afterwards, sir. Once I finish all the special tax rates and even after finishing the normal regime tax rates, then towards the end I'll discuss about this restrictions point also. Okay, we'll write down clearly, we'll solve examples also on that. Okay, so as of now, surcharge rate is now what? Up to 50 lakhs nil. 50 lakhs to 1 crore, the surcharge rate is 10%. 1 crore to 2 crores, the surcharge rate is 15%. More than 2 crores now, then the surcharge rate is 25%. However, it is restricted to 15% in case of special rate incomes under capital gains and on dividend income. Okay, so now whenever surcharge is applicable, then we need to check about marginal relief also. Okay, so we need to check about what? Marginal relief also. This is the surcharge rates. Now we are going to marginal relief. So remember the surcharges now. What is the surcharge rate, sir? Up to 50 lakhs, Up to 50 lakhs total income, nil. 50 lakhs to 1 crore, na, then 10% is the surcharge which has to be levied on total income tax calculated. 1 crore to 2 crores, na, then the surcharge rate is how much? 15%. Above 2 crores, na, it is 25%. However, it's not 25, it is restricted to 15% only in certain cases that we will discuss afterwards. Okay, so now I am discussing about the marginal relief. Sir, whenever surcharge is there, do we need to check every time marginal relief? No. Every time marginal relief need not to be checked. Then when? When the total income is nearer to that of surcharge limits, it has to be checked. It has to be checked only. It has to be checked only when the total income is nearer to that of surcharge limit. It has to be checked only when the total income is nearer to that of surcharge limits. Only when the total income is nearer to that of surcharge limits. It has to be checked only when the total income is nearer to that of surcharge limits. Marginal relief, it has to be checked only when the total income is nearer to that of surcharge limits. Sir, what are surcharge limits, sir? Surcharge limits are nothing but these limits where the surcharge rate is changing, na? So surcharge limits are like 50 lakhs, 1 crore, 2 crore. Because at these limits only the surcharge rate is changing, na? Above 50 lakhs 10%, above 1 crore 15%, above 2 crores 25%. Sir, sometimes in the old regime it could be even 5 crores also. Okay, because in the old regime the surcharge there is another slab also 37, but in the default regime only 3 surcharge rates are applicable. I mean 10%, 15 and 25 is the max surcharge rate applicable. Understand, sir? It has to be checked only when the total income is nearer to that of surcharge limits. Okay, so then first we will write down the steps, sir, then I will even explain why a marginal relief has to be calculated also. Sir, we will do the steps along with an example also. Okay, so everybody with your calculators, so you need to tell me quickly computation of marginal relief. First we will write down steps, then I will explain why marginal relief has to be given also. Computation of marginal relief. Computation of marginal relief. First, step 1. Okay. I am giving an example also, sir, because we will do simultaneously. Na? Example, there is an individual, age 45 years, and his total income equals to 1 crore 1 lakh. His total income is how much? 1 crore 1 lakh. For 1 crore 1 lakh, na, yes, it is nearer to that of surcharge limit only. Okay, so there may be chance of marginal relief. We need to check and tell whether marginal relief is there or not. Okay, step 1. What is step 1? Compute tax on. Compute tax. Sir, here tax, na, what? Including surcharge. Including surcharge, but without cess. Including surcharge but without cess. Okay, without cess. Don't include cess. Only surcharge you include and compute tax on given total income. You should compute tax on given total income. Okay, so one side I am writing format wise, and then we will do it for even 1 crore 1 lakhs also. So now, sir, everybody calculate and tell the tax plus surcharge on 1 crore 1 lakhs. Sir, I am doing roughly, sir, here 1 crore 1 lakhs, sir. First I will do tax. What? On first 24 lakhs I already know what is the tax, 3 lakhs. Balance how much is there, sir? First 24 lakhs if you take, na, then we are having balance 77 lakhs. 77 lakhs into 30%. Tell me, anybody? How much is 77 lakhs into 30 percentage? It's like 23 lakh 10,000 only, right? Correct me, sir. I'm not using calculator, so I might be wrong also sometimes. So it's like how much total tax? 26 lakh 10,000 into 1 crore 1 lakh. Sir, this fellow 1 crore 1 lakh is the given total income. So if it is 1 crore 1 lakh, what is the surcharge rate applicable? What is the surcharge rate applicable? If total income exceeds 1 crore, what is the surcharge rate? 10%. So 10 or 15 or 15 percentage. So on this 26 lakh 10,000, we should apply how much? 15 percentage as surcharge. So how much is the surcharge? 26 lakh 10,000 into 15 percentage. Three lakh 90. Okay, 3,91,500, right? Okay, 3,91,500. So now tell me, what is the tax plus surcharge together? Tax plus surcharge together. It's like 30 lakh 1,500. Okay, it's like how much? 30 lakh 1,500. Everybody, sir, everybody can do this, right? On first 1 crore 1 lakh, we need to calculate tax. First 24 lakhs, I said you to remember the tax amount. How much? 3 lakhs. And on balance 77 lakhs into 30%. Okay, so then on that surcharge at a rate of 5 percentage, if you do now, 15 percentage, if you do 3,91,500, and if you add all together, you are getting 30 lakh 1,500. 30 lakh 1,500. Okay, then what is step 2? So step 2, compute tax. Sir, tax na the same thing, just like as how we did on the first step, the same way. On nearest surcharge limit, compute tax on nearest surcharge limit to given total income. Compute tax on nearest surcharge limit to given total income. Sir, what is the nearest surcharge limit to given total income, sir? Tell me, anybody. What is the nearest surcharge limit to given total income? Sir, we are having surcharge limits like 50 lakhs, 1 crore, 2 crores. So if the total income is 1 crore 1 lakh, what is the nearest surcharge limit? 1 crore. The nearest surcharge limit is what? 1 crore. Okay, so on that 1 crore, we need to calculate tax plus surcharge. Calculate tax on nearest surcharge limit to given total income. So not on the given total income, on the nearest surcharge limit to given total income. So that means how much, sir? 1 crore. 1 crore. So on 1 crore, what is the tax liability, sir? On 24 lakhs, the tax liability is like 3 lakhs only. Here, okay, here excess how much is that, sir? 76 lakhs into 30 percentage, na? It is how much? 76 lakhs into 30 percentage. Twenty-three point, sorry, 22.8 lakhs. 22 lakh 80,000. So if you add together, it is like how much? 25 lakh 80,000. 25 lakh 80,000 only, right? Yes, total it is like 25 lakh 80. On 76 lakh into 23%, 22 lakh 80 plus 3 lakh. So total we are having 25 lakh 80. Plus on this we need to apply surcharge. What is the surcharge rate applicable, sir, on 1 crore? On 1 crore, what surcharge we should take? 15% or 10 percentage? 10 percentage. So if you take 10 percentage as surcharge, how much it is like? 2,58,000. 2,58,000. So the tax payable is like how much? 27 lakh. 27 lakh. Sorry, not 27. 28 lakh, right? 28,38,000. $28,38,000. Yes, correct only. Sir, 1 second, sir. Tell me anybody here what is the surcharge here in the previous question also. I'll write it little betterly. Plus surcharge in the on 1 crore 1 lakh is 15 percentage na, and 26 lakh 10,000. What is 15 percentage means? 15 percentage now how much it is like? 26 lakh 10,000 into 15 percentage. Somebody tell how much it is? It is like 2 lakh 91,000. 3,91,500. 3,91,500. So overall it came to 30,01,500, right? For step 2. So what is the step 2? Given tax on nearest surcharge limit to given total income. How much it is, sir? We have calculated here 28,38,000. 28,38,000. Okay. Then step 3. So step 3 will find out the difference between the given total income and the nearest surcharge limit. The difference between, we will take the difference between given total income and nearest surcharge limit. What is the given total income? 1 crore 1 lakh. The nearest surcharge limit we taken is how much? 1 crore. So difference between given total income and nearest surcharge limit. Given total income and nearest surcharge limit. How much, sir? It is like in our example 1 lakh. Nearest surcharge limit, it's like 1 lakh. Okay. Then what? Step 4. Step 4 is nothing but the marginal relief only. So marginal relief. Sir, how to compute marginal relief, sir? Simple, sir. Marginal relief is nothing but step 1 minus step 2 minus step 3. So 1 minus 2 minus 3 if you do, okay, then you will get marginal relief. How much, sir? 1 minus 2 minus 3. From 30 lakh 1,500, subtract 28 lakh 38,000 and 1 lakh. How much you got as marginal relief? Tell me. 3 lakh 1,500, from there 28 lakh 38,000, from there 1 lakh. You subtract, then you will get the marginal relief. How much? 63,500 is the marginal relief. 63,500 is the marginal relief. Sir, what if this answer comes negative? Sir, if it is negative, then there is no marginal relief. Only if the answer comes step 1 minus step 2 minus step 3, a positive figure, you will take it as marginal relief. If it is negative, then there is no marginal relief. If it is positive value, then marginal relief. If it is positive value, then only marginal relief. Negative value na will ignore, will not take it as marginal relief. Only positive values will take it as what? Marginal relief. Okay. Now, let me explain you, sir, why marginal relief. Sir, see, we are taking two situations, sir. Let's say there is a person name here X and this person name is Y. Sir, X is a person who is having income of 1 crore 1 lakh. Y is a person who is having income of 1 crore. How much is the difference of income that is there between these two, sir? The difference of income is like 1 lakh. right? Who is earning more? X only. So if they feel it as a like, X will be happy that I am earning 1 lakh more than that of Y, right? So X is earning 1 lakh more income. So the difference or the excess income they are having is like 1 lakh only. See, X is earning 1 lakh excess than that of Y. But if you look at the taxes they are paying, how much tax is being paid by Y? 28 lakh 30,000, 38,000, whereas Y is paying 30 lakh 1,500. So what is the difference between these two, sir? It's like 1 lakh 63,500. 1 lakh 63,500. So if you see here, for earning extra 1 lakh, how much X is paying? Is paying extra 1 lakh 63,500. So the marginal income and the marginal tax, okay, if 1 crore is a base, beyond 1 crore, what is the marginal revenue they has? 1 lakh. Whereas the marginal tax they are having is 1 lakh 63,500. So if you see, the marginal tax is more than that of marginal income. Sir, X earned 1 lakh more than that of Y. That extra 1 lakh, if they have taken it as tax also, no issues. But here they are taking, for earning extra 1 lakh, they are taking 1 lakh 63,500 as tax, which is unreasonable, right? For 1 lakh extra, you can take 1 lakh extra as tax. But here it is happening like, because of the surcharge increase and all, they are taking 1 lakh 63,500 as extra tax. Okay, so that's why they wanted to restrict the marginal tax also to the extent of marginal income. So what is the marginal tax? 1 lakh 63,500. So the marginal tax is also restricted to 1 lakh. So the difference 63,500 is there, na? That would be given as relief. Okay, so if you see here, what is the marginal tax? Equal to 1 lakh 63,500. Whereas the marginal income, okay, beyond that surcharge limit, how much is there, sir? Marginal income is 1 lakh. Okay, so this difference how much is there, sir? 63,500. If it is positive, this is given as what? Marginal relief. This 60,500 is only given as marginal relief also. Sir, everybody got it? Everybody got this explanation also, right? Fine. Okay then. So I'm closing the session for today. So please revise the tax rates and the surcharge limits. Okay. So tomorrow we're gonna cover. Okay. It takes another 2 classes, sir, for us to wrap up the 2 or 2.5 classes, because I said like I'll discuss even this restrictions related points also in the first chapter only, right? So if I discuss that also, that part alone take some 45 to 1 hour. Okay. So no worries. We'll take slowly only everything, every point we're gonna cover it elaborately to make it clear. The one thing you need to do, sir, I'll say this number of times, don't feel bored about it. You need to revise every day. The only problem with the taxation is like, take so long, like once we finish off 10 days, then you will forget the first day class. If you could retain the first day class also till the last day, then I am sure that you will get DT 65s and 70s. Okay, just revise. Thank you all. We'll meet in the next session. We're going to continue with our discussion where we have left yesterday. See, yesterday what we have discussed. Yesterday we started from section 1. Section 1 is about the title of the act. Okay, Income Tax Act 1961 applicable to whole of India came into force on 1st April 1962. Then section 2 is about definitions. Okay, we already started discussing definitions also, like assessment year, person, those definitions we already discussed. Then previous year. What is called previous year? The year in which income is earned is called as previous year. It usually means a period of 12 months starting from 1st April. Starting from 1st April. So previous year, like the year, if the income is earned in 25-26, that is called previous year. In the succeeding year, you will compute tax. I mean, assess the tax. So that is called as what? The succeeding year is called as assessment year. However, usually previous year is a period of 12 months. Now, there's an exception. What is the exception? Like when a person is having income, a new source of income, or is having a new business or profession, and the day such new source of income started is the commencement of previous year. Or the day when he is having such new business or profession is called as the previous year. I mean, in such case, the previous year starts only on the day when he is having the income or the source of income or the business for the first time. Assessment year is always a period of 12 months. The year in which we compute tax is called as assessment year. It is the year immediately succeeding to previous year. It's always a period of 12 months starting from 1st April. Then charging section. What is called charging section? Income tax shall be charged for every assessment year shall be charged. I mean, levy, charge means levy or impose. As per the provisions of this act, as per the rates given in Annual Finance Act on total income of every person. Okay, so person includes individual, HF, firm, company, EOP, BOI, local authority, AJP. Then we discussed about like the format. How do we compute total income? First, we'll take income from salaries, house property, PGPP, capital gains, and then IFOS. Then you should apply clubbing provisions. When you are applying clubbing provisions, okay, if some other person income has to be clubbed in SSC's or this person's total income, then that part or that kind of including only we call it as clubbing. It has to be done headwise. It has to be done headwise. Then set off and carry forward of losses, if any has to be done, do that. Then we'll get gross total income. From there, we'll adjust chapter 6A deductions and even 10A exemption. Okay, then we'll get net total income. Net total income is usually referred as total income. Then we'll compute tax. We'll compute tax first on the normal rate incomes. Okay, then we'll find out the special rate incomes like 112, 112A, 111A. On that, we'll calculate the tax. Then on tax, we'll calculate surcharge or rebate, then health and education cess. Then we'll get the total tax liability. From that, TDS, TCS will be adjusting. Finally, we'll getting the total tax payable. Okay. Then we went on and discussed the tax rates applicable for assessment year 26-26 for individual, HUF, AOP, BOI, AJP under 115 BAC. Under 115 BAC. Sir, currently for these people, individual, HUF, AOP, BOI and AJP, 115 BAC is the default tax regime. Individual, HUF, AOP, BOI, AJP, 115 BAC is the default regime and it can be even referred as new regime. What are the tax rates? Are slab rates here. These are even called as slab rates. 0 to 4 lakhs, the tax rate is nil. 4 to 8 lakhs, the tax rate is 5%. 8 to 12 lakhs, the tax rate is 10%. 12 to 16 lakhs, 15. 16 to 20 lakhs, 20%. 20 to 24 lakhs, 25%. Above 24 lakhs, it is like 30%. Like a person has to follow same slab rates irrespective of, I mean, this new regime or the default regime, same slabs are applicable irrespective of whether is a resident or non-resident, senior citizen or super senior citizen or normal individual. Okay, we have solved certain examples and I said like we need to remember the tax liability exactly at 24 lakhs. Exactly at 24 lakhs, what will be the tax liabilities are 3 lakhs. Okay, this everybody should remember, sir. Exactly at 24 lakhs under new regime, what is the tax liability? 3 lakhs. Why we should remember at 24 lakhs? Because when the total income exceeds 24 lakhs, then the tax rate would be 30%, right? So exactly on 24 lakhs, if you remember, our calculations will become easy. Okay, on 24 lakhs total income under the new regime, or the default regime, the tax applicable would be 3 lakhs. About 24 lakhs, whatever the income is there, on that you should apply 30%. Then surcharge rates. The surcharge rates, we are having total income up to 50 lakhs. On that, the surcharge rate is like nil. 50 lakhs to 1 crore. Then the surcharge rate is like 10%. 1 crore to 2 crores, then the surcharge rate would be 15%. About 2 crores, the surcharge rate would be 25. But the point to be noted is like on certain incomes, the surcharge is restricted to 15% only. We'll discuss that afterwards. Marginal relief. Then we discussed about what the concept of marginal relief. Marginal relief has to be checked only when the total income is nearer to that of surcharge limits. So surcharge limits now what? 50 lakhs, 1 crore, 2 crores are there, right? These are called the surcharge limits. So you need to check marginal relief only when the total income is nearer to that of surcharge limits. Okay, see, we are doing the steps of marginal relief. We are finding out under steps for computation of marginal relief along with example also. Individual age 45 years, total income 1 crore 1 lakh. See, computation of marginal relief. First step, compute tax including surcharge without cess on given total income. Compute tax on given total income including surcharge without cess. Okay, on 1 crore 1 lakh we calculated 30 lakh 1500. Then step 2, compute tax on nearest surcharge limit to the given total income. For 1 crore 1 lakh, what is the nearest surcharge limit, sir? 1 crore, right? So on that 1 crore, find out the tax, 28 lakh 38,000. Then difference between given total income and nearest surcharge limit. Given total income and nearest surcharge limit, 1 lakh. Then you will be getting marginal relief, step 1 minus step 2 minus step 3. Okay. Sir, marginal relief, what we need to do? Marginal relief has to be adjusted from the tax liability. You got marginal relief now. What we have to do with this marginal relief? From the final tax plus surcharge we calculated, right? On the given total income 1 crore 1 lakh, we got tax as how much? 30 lakh 1500 na. On this 30 lakh 1500, we should subtract the marginal relief. Okay, I'm writing here, sir. Final tax equals to step 1 minus marginal relief in step 4. On this again cess has to be reviewed. Final tax equals to step 1 minus marginal relief under step 4. Right? Everybody got this point now? Shall we proceed further? So this is like even can be called as marginal tax or incremental tax. We'll be comparing that incremental tax and incremental income. So the incremental tax is restricted to that of incremental income. So the difference between them is only called as marginal relief. Respond guys. You don't have any doubts, right, till here? You can proceed further now. If you have any doubts till here, you could ask me. And everybody writing the notes right along with me? Yes or no? Okay. So now we're gonna take the tax rates applicable to individual HUF, AOP, BOI, AJP under old regime. Old regime also. See. Tax rates. Sir, this new regime or the default regime will be more referred as like 115 BAC. The section number 115 BAC is also important. Okay, it is mostly referred as like what? 115 BAC. Subsection 1A also. If you want the subsection also 115 BAC subsection 1A, but it's fine if you refer it as 115 BAC. Tax rates applicable to individual HUF, AOP, BOI, and then AJP, artificial judicial person. Tax rates applicable to individual HUF, AOP, BOI, and then AJP. Fine. Under which regime, sir? We already discussed the default regime and new regime. So we are into old regime. Old regime. Okay. Old regime, sir. The first slabs are applicable to individual, HUF, AOP, POI, and then AJP, irrespective of whether he is resident or non-resident. Irrespective of whether he is resident or non-resident, the same slab rates. What are those? This you might be knowing, sir. There's no change from years this one. Okay, total income, tax rate. So what is the total income? Like, let's say if the total income is like less than or equal to 2.5 lakhs, the tax rate is nil. If it is like greater than 2.5 lakhs to greater than 2.5 lakhs to less than or equal to 5 lakhs, then the tax rate is like 12.5 percentage. If it is between 5 lakhs to 10 lakhs, 5 lakhs to 10 lakhs, then the tax rate is like 20 percentage. Above 10 lakhs, the tax rate is like 30 percentage. Above 10 lakhs, the tax rate is how much, sir? 30 percentage. Okay. Then we'll take an example, sir. Example. There's an individual named Shiva, age 45, obviously is resident, and then total income equals to 10 lakhs. Total income is how much? 10 lakhs. For this person, we need to compute tax. For this person, we need to compute tax. His total income is how much, sir? 10 lakhs. Okay. See, just like as how we computed previously, 0 to 2.5 lakhs, 2.5 to 5 lakhs, 5 lakhs to 10 lakhs. Okay. In between this range, how much income is there, sir? Okay, what is the tax rate here? Here it is like nil. Here it is like 5 percentage. Here it is like 20 percentage. In between this range, 0 to 2.5 lakhs, how much income this person is having? This person is having in between 2.5 lakhs into 0 percentage. If you do, it is like nil. Then here another 2.5 lakhs is there into 5 percentage. If you do, 12,500. Here in this group there is 5 lakhs because for us the total income is 10 lakhs now. 5 lakhs into 20 percentage. If you do, here it is another 1 lakh. So the tax payable at 10 lakhs is how much? 1,12,500. So I want you to remember the tax liability at 10 lakhs. That's why I mentioned it clear. Okay, that's why that example we have taken. Okay, sir, for default regime, we should remember at 24 lakhs. What is the tax liability? 3 lakhs. Whereas under the old regime, you remember the tax liability at 10 lakhs. Why? From 10 lakhs only. Thanks for the correction. Okay, up to 2.5 lakhs nil, 2.5 lakhs to 5 lakhs 5 percentage, 5 lakhs to 10 lakhs 20 percentage, above 10 lakhs 30 percentage. Okay, so exactly on 10 lakhs, what is the tax payable, sir? 1,12,000. Exactly on 10 lakhs, the tax payable is 1,12,500. Right? This you need to remember. This you need to remember. Okay, then individual, next one only, sir. Individual is an individual plus resident, individual and resident, age greater than or equal to 60 years but less than or equal to 80 years. Individual resident plus age greater than or equal to 16 years but less than or equal to 80 years. Sir, what we call such persons whose age is greater than or equal to 60 but less than 80? We call them what? We call these people as what? Senior citizens. Senior citizens. So senior citizen should be resident, then only this concept is applicable. Okay, so if he is non-resident senior citizen, okay, these slabs only, okay, the above slabs are there, those only applicable. For non-resident senior citizen, these slabs only applicable. Okay, so individual being a resident, age greater than or equal to 60 years but should be less than 80 years, so is called as what? Senior citizen. Okay, then we need to check what, sir, when we need to check the age, sir. See, let's say for us the applicable previous year is what, sir? 25-26. Assessment year is like 26-27, right? For us, sir, if you take this period like previous year starts on 1st April 2025 and the assessment year ends on 31st March 2027. Okay, the previous year starts here and the assessment year ends by here. So now in this 2-year period, by when we need to check that he is having age of 60 or not? When we need to check when he is having the age of 60 or not? That is also crucial now. Okay, so I am writing that point also. Age needs to be checked. Age needs to be checked. Age needs to be checked on. Age needs to be checked on first day of assessment year. On first day of assessment year. That means on 1st April for the previous year 25-26, you will check on 1st April 2020-26, we'll check whether he is having age of 60 or not. Okay, then we'll decide whether he is a senior citizen or not. Age needs to be checked on first day of assessment year. If birthday is on birthday is on 1st April of assessment year, then also and attains age of 60. Birthday is on 1st April of assessment year, and on that day only 60 years he attains and attains age of 60 years. Then also what? Senior citizen. Then also is a senior citizen. SC. Okay, so on 1st April of the assessment year he is having his birthday, then only he is getting that 60th year. Still he will be called as what? Senior citizen only. Okay, so what is for senior citizen? For senior citizens, sir, there are separate slabs available. What are those separate slabs, sir? 0 to 3 lakhs. The tax rate is how much, sir? Nil. This is like total income, and this is like the tax rate. 0 to 3 lakhs. What is the total income, sir? Tax rates are nil. Okay, if it is like 3 lakhs to 5 lakhs, then the tax rate is like 5%. If it is like 5 lakhs to 10 lakhs, then the tax rate is like 20%. Above 10 lakhs, then the tax rate is like 30%. Above 10 lakhs, then the tax rate is like 30%. Above 10 lakhs, tax rate is like what? 30%. Okay. So now tell me, if a senior citizen is having exactly 10 lakhs income, what is the tax liability? Calculate and tell. For a senior citizen is having exact 10 lakhs liability, what is the The senior citizen is having exactly 10 lakhs as total income. What is the tax liability? Calculate and tell quickly. I'm waiting for you all. If a senior citizen is having exactly 10 lakhs total income, what is the tax liability? 1 lakh 10,000. Zero to three nil, 3 to 5, 5%. 2 lakhs into 5% are 10,000. 5 to 10 lakhs, 5 lakhs into 20%. 1 lakh. So total is 1 lakh 10,000. So we should remember, if possible, remember, sir, this also word. For 10 lakhs, what is the total tax liability, sir? For 10 lakhs total income, for 10 lakhs total income for a senior citizen, tax liability is like 1 lakh 10,000. For 10 lakhs total income for a senior citizen, the tax liability is how much? 1 lakh 10,000. Okay, fine. Then we are moving on to next one, sir. Individual is a resident, individual is a resident, age greater than or equal to 80 years. Individual, he is a resident, age greater than or equal to 80 years. And then he is a super, okay, if age is greater than or equal to 80 years, then we call him as like what? Super senior citizen. Super senior citizen. SSC. Super senior citizen. Right. Sir, if he is a resident only, the below mentioned slabs are gonna applicable. Sir, the same like senior citizen only, for super citizen also, we'll check on the first day of assessment year whether he is attaining the age of 80 or not. On that day, if he is having birthday and attaining the age of 80, still he is called as what? Super senior citizen only. Sir, what if he is a super senior citizen but non-resident? Sir, if he is a, if for non-resident senior citizen and for non-resident super senior citizens, for non-resident senior citizen and for non-resident super senior citizens, okay, these slabs only, these na, this 2.5 lakh slab only applicable, this 2.5 lakh slab only applicable. Okay, understand, sir? My screen is blur. For me it's showing properly only here. For everybody it's like that only, yeah? Might be some connectivity issue then. Me here shows clearly only. Still it is like that only, still. So internet is also good speed only, no problem here. While recording, I couldn't see any problem here. The screen. Yes, you guys just exit the session and rejoin. Okay. So the point which I said is like for non-resident senior citizen and non-resident super senior citizen, this loop basic 2.5 lakhs. I don't have dear. So my internet good actually. Okay. See now then. So this point is it clear for you? For non-resident senior citizen and for non-resident super senior citizens, that additional basic exemption limit is not applicable. Usually for senior citizens, like up to 3 lakhs it is nil, 3 to 5 lakhs 5%, 5 to 10 lakhs 20, above 10 lakhs it is like 30%. I mean the basic exemption limit is increased from 2.5 to 3 if he is a senior citizen. But whereas such person if he is a super senior citizen, let me write down his slab rates also, sir. Up to 5 lakhs. Okay, again total income, and then here tax rate. Okay, up to 5 lakhs total income for a resident super senior citizen, the tax rate is nil. 5 lakhs to 10 lakhs, the tax rate is like 20%. Greater than 10 lakhs, the tax rate equals to 30%. Okay, total income, the tax rate up to 5 lakhs nil, 5 lakhs to 10 lakhs, it's not 8, sir, it's 5 only. Okay, 5 to 10 lakhs, 20%. Above 10 lakhs, now it is like what? 30%. But understand, sir, if he is a non-resident super senior citizen, this 5 lakhs basic exemption limit is not applicable. He will be under the 2.5 lakhs limit only. Right? Clear? Everybody written now. So previously the screen is blur, as you said. You couldn't write it properly. So now confirm me whether you have written everything or not. Okay. So now we are moving on to the surcharge rate, sir. The surcharge rates under old regime. So previously we discussed surcharge rates under new regime. Now we are discussing surcharge rates under old regime. Old regime. So what are the categories, sir, here? We'll take total income, one category, total income, and then the surcharge rate. Surcharge rate. So how? But the total income is up to 50 lakhs. Then the surcharge rate is nil. Where the total income is greater than 50 lakhs but less than or equal to 1 crore, then the surcharge rate is like 10% of income tax. So surcharge has to be levied on tax rate. I hope you already did it. Sir, what if non-resident who is not a... Sir, if he is not a... See, look at the first one. We already covered here what he is resident or non-resident. The same slabs only applicable, the default slab, the basic slabs. Like 2.5, 2.5 to 5, 5 to 10, that one is there, na? That is only applicable. Is there now resident senior citizen, instead of 2.5, you have the benefit of taking 3. If is a resident super senior citizen, you can claim the basic exemption limit as 5 lakhs. If they are non-resident, that enhanced basic exemption limits are not available. Okay, so they will remain under the 2.5 lakhs category only. Surcharge rates under old regime up to 50 lakhs nil. 50 lakhs greater than 50 lakhs but less than or equal to 1 crore. So it is like 10% of income tax. Greater than 50 lakhs but less than or equal to 1 crore. It is like 10% of income tax. Then greater than 1 crore but less than or equal to 2 crores. Then 15% of income tax. Greater than 2 crores but less than or equal to 5 crores. Okay, then it is like 25% of income tax. If the total income is greater than 5 crores, then it is like 37% of tax. 37% of tax. Okay. So when there is this 25% and 37% star, I'm keeping a star, sir. Why? On special rate incomes, like 112, 112A and 111A, and dividend. This is restricted to, surcharge rate is restricted to 15%. I'll explain it, sir, afterwards. For now, just write those points. I'll take examples and I'll discuss that restriction points afterwards, towards the end of the first chapter. Okay. The surcharge rates clear, right? So under the default regime, what are the surcharge rates? 0 to 50 lakhs nil, 50 lakhs to 1 crore, 10%, 1 crore to 2 crores, 15% above 2 crores, 25% under default regime. Whereas under the old regime, up to 50 lakhs nil, 50 lakhs to 1 crore, 10%, 1 crore to 2 crores, 15%, 2 to 5 crores, 25%, above 5 crores, 37%, above 5 crores, 37%. Okay. So whenever there is surcharge, there will be marginal relief. So we'll take another example, sir, for computing marginal relief, but this time under the default old regime. Okay, total income of individual total income of Mr. X individual, age 40, resident, total income equals to, total income is like 5 crore 3 lakhs, opted out from 115 BSc. Is not under 115 BSc, is opted out from 115 BSc. Then we'll be calculating. Sir, marginal if steps, if you remember. The same step, sir. Step 1. What is step 1? Compute tax plus surcharge on what? Given total income. What is the given total income? 5 crore 3 lakhs. So compute tax plus surcharge on 5 crore 3 lakhs. So tell sir, how do we calculate? First 10 lakhs. Calculate until 5 crore 3 lakhs. I'm not gonna calculate. I already know. Okay, you only have to calculate until on 5 crore 3 lakhs. Sir, don't do just the tax. You should do tax plus surcharge. It may take time, but still do it until. On 5 crore 3 lakhs, tell me what is the tax plus surcharge. First 10 lakhs, 1 lakh 12,500. Around 4 crore 93 lakhs into 30 percentage plus 1 lakh 12,500. We'll get tax. Plus on that surcharge, what is the surcharge? Our total income excess of 5 crores, 37 percentage is the surcharge. So do that until. Okay. So after surcharge, it is like 2 crore 4 lakh. Sorry, 2 crore 4 lakh 16,425. Okay. Sir, is that the answer for everyone? 2 crore 4 lakh 6,125. Sorry, 125, 425. Sorry. Okay. We'll take 425. Then we'll go for step 2. What is step 2? Step 2 will compute tax on nearest total income. Compute tax plus surcharge on nearest surcharge limit. On nearest surcharge limit. Sir, for 5 crores 3 lakhs, what is the nearest surcharge limit? For 5 crore 3 lakhs, what is the nearest surcharge limit? Okay. It's like 5 crores, right? Okay. Now calculate and tell what is the tax plus surcharge on 5 crores. What is the tax plus surcharge on 5 crores? Tax plus surcharge on 5 crores. One crore 85 lakh 15,625. Super. 1 crore 85 lakh 15,625. Done. Then we should do what? Step 3. Sir, how do we calculate it here, sir? On 5 crores. On 5 crores, first 10 lakh, 1 lakh 12,500. On balance 4 crore 90 lakhs, we should apply 30%. So you'll get the tax. On that surcharge, how much you should levy? 25% only. Okay, because exactly on 5 crores, the surcharge will remain 25 only, not 37. Okay, step 3. Step 3 is for the difference between given total income and nearest surcharge limit. So that means difference between 5.0, okay, difference between 5 crore 3 lakhs and 5 crores. How much is the difference, sir? Then the difference is nothing but 3 lakhs. 3 lakhs. Then we need to find out a marginal relief. So what is marginal relief, sir? We'll do step 4. So step 4 marginal relief is nothing but step 1 minus step 2 minus step 3. So tell me, what is the marginal relief amount? I'm waiting for you, sir. Okay, 16 lakh 800 is the marginal relief. 16 lakh 800. But we need even the final tax liability also. As the final tax liability is like tax liability, sir, excluding cess, this is like tax liability is like on actual 5 crore 3 lakhs. What is the tax liability, sir? 2 crore 4 lakh 6,425. Nothing but step 1 minus 16 lakh 800, which is nothing but step 4. If you subtract these two, sorry, if you subtract 2 crore 4 lakh 6,425 minus 16 lakh 800, then the tax liability will be how much, sir? 1 crore 88 lakh 15,625. Right? This is the tax liability after adjusting marginal relief. 1 crore 88 lakh 55,000 15,625. Got it? We'll proceed further, right? Hello all. Hello. Nobody is responding. What happened to you? Am I there? Am I audible? Like you guys are there or not? Or we got disconnected? You are not getting answers, Pravalika. See, I'll show you. See, I'll do this one. 5 crore 3 lakhs. Roughly, I'm doing. See, the tax computation you are doing wrong. First one, see. 5 crore 3 lakhs, right? On this, first we need to calculate tax. How we calculate? I said now first 10 lakhs. This is under old regime. First 10 lakhs. What I wrote wrong? What I wrote wrong? Okay, amount I wrote. Okay, 16,000, right? Pravalika, you got 2 crore 4 lakh 16,425. You got 2 crore 4 lakh 16,425. See, 5 crore 3 lakhs. Okay, how we'll solve now? On first 10 lakhs, I said you to remember how much first 10 lakhs the tax would be 1 lakh 12,500. Okay, now on balance, how much will be there? 4 crore 93 lakhs. This 4 crore 93 lakhs into 30 percentage you do. 4 crore 93 lakhs into 30 percentage you do. 4 crore 93 lakhs into 30 percentage if you do, how much? It's 1 crore 47 lakh 90,000. If you add these two, how much is the tax? 1 crore 49 lakhs. So I'm also doing actually 1 crore 49 lakh 2,500 is the tax. This you understand na? This you understood, right? How we got this tax? On first 10 lakhs, we are straight away taking it as like 1,12,500. You see, that's why we wrote here. On for first 10 lakhs, the tax would be how much? 1,12,500 only. We already did an example for Shiva. Okay. So then on balance 4 crore 93 lakhs, it is 30%. Okay, this is the tax. On tax, we need to calculate surcharge at a rate of 37%. So this 1 crore 49 lakh 2,500 into 37%, if you do, you'll get 55 lakh 13,925. Then you add both of them. Then you add 1 crore 49 lakh 2,500. How much it is? Like 2 crore 4 lakh 16,425. Right? You got this point? The same way we did even for the second one. Okay, for you, I'll do even the second one also, sir. No worries. Okay, second one also. What is the second one we are doing? Second step. We are doing the tax plus surcharge on nearest total income. Nearest surcharge limit 5 crores. So you take 5 crores now. Okay. So on 5 crores, again on first 10 lakhs, how much are the tax? On first 10 lakhs, the tax remains 1,12,500 only. But on the balance 4 crore 90 lakhs, you should do what? Multiplied with 30%. 4 crore 90 lakhs into 30% you do. How much you got? 1 crore 47 lakhs. So total if you do now, you got 1 crore 48 lakh 12,500 as the tax on 5 crores. Plus on that surcharge you should take 25% only. Why 25%, sir? Sir, when the total income is 5 crores, then 25 only. More than 5 crores, na, then 37%. So you take only 25%. So into 25%, if you do now, it is like 36 lakh 75,000 is the surcharge. And add those two, 1 crore 48 lakh 12,500. If you add to this, it's like how much? 1 crore 84 lakh 87,500 is the tax plus surcharge. That's what. Sorry, I did something wrong, I think. Into 25%. It's only wrong. I did here only wrong, right? What is this? 37 lakh 3,125. Then let me add 1 crore 48 lakh 12,500. How much is like 1 crore 85 lakh 15,625. Okay, Pravalika. Now you got right? Now you got it? Okay. Then step 3, what we did? Difference between the first step, we took 5 crore 3 lakhs, and second step, we took 5 crores. Now the difference 3 lakhs. Then step 4 is nothing but 1 minus 2 minus 3. Okay, sir, understand. Only if 1 minus 2 minus 3 is like positive, we'll take it as like marginal relief. If it is negative, if the values are negative, we'll ignore. We'll not take it as like marginal relief. Okay, only if it is positive. Here positive na 16 lakh 800, we'll take it as marginal relief. Then ultimately marginal relief, in the name itself, relief na, it should reduce our tax burden. So from the step 1, what you calculated tax, subtract this marginal relief, then you will get the final tax payable excluding cess as 1 crore 88 lakh 15,625. Okay, so now I'm moving on to the Next page. Okay. So now we are going on to special tax rates. Special tax rates. Sir, these special tax rates are common for all the people. Like whether he is an individual HUF, these special tax rates are like applicable to every class of person. In person definition, who all are there, for all these people, these are applicable, every class of person. And then the special tax rates are in or applies in both default and old regime. In default and even old regime also, the special tax rates are applicable. In default and even in old regime also, these are applicable. Okay, the first thing we're gonna discuss is with capital gains. First thing we're gonna start is with what? Capital gains. Okay, I'm not explaining, sir, what is called capital gains. I hope you already know that one. Capital gains. But capital gains are like classified into two types. They can be classified into two types. What are those? Long term capital gain, LTCG, and then short term capital gain, which we call it as like STCG. Long term capital gain, short term capital gain. And then again, they can be classified into two types like 112 and then 112A. And then short term capital gains also two types, 111A and then 111. So what are these? These are section numbers, sir. Okay, so do I need to remember these section numbers? Absolutely, sir. There is no other choice, sir, for us. We need to remember these four section numbers, no other option. Because going forward, okay, these are only the names, certain points. Okay, will be very frequently referring these sections. You can't even confuse also. Okay, you don't have in the luxury to confuse among these sections. You just, okay, by heart or you just remember whatever you do, these sections should be there in your mind. 112, 112A, 111A, 111. So we'll see what will be covered under 112A. Okay, sir, 112A and 111A. First we are covering 112A, sir. 112A covers listed equity shares. Listed equity shares on which STT paid. Sir, listed equity shares where in India. Okay, they should be listed in India. Listed equity shares in India and on which securities transaction tax has been paid. Then second one, units of equity oriented fund. Units of equity oriented fund. So they are long term. The long term capital gain is arising from transfer of a listed equity share or from transfer of units of equity oriented fund. Sir, what are called units? Sir, units na in a company if you invest you'll get share, right? But whereas instead of company if you invest in a mutual fund, then instead of share you'll get a unit. Okay, so if such mutual fund is gonna invest it in equity capital only, so there'll be debt funds, equity funds, infrastructure fund, like that. Okay, so this mutual fund is gonna invest that money only in equity shares. Then that is called as what? Equity oriented fund. So that fund, if I give money to that fund, and then the fund will be allocating me units to me. So units of equity oriented fund. And the third one, sir, units of business trust. Units of business trust. Sir, I am not gonna explain business trust, what is meant by business trust now. But going forward, you'll understand what is called business trust also. As of now, just okay, just remember or try to remember that name. Okay, going forward, I'll explain you what is called business trust also. Okay, 112A, what assets are covered? Listed equity shares, units of equity oriented fund, and then units of business trust. When the gains arising are like long term. Okay, the same way, sir, it is even covered under 111A, the same points. When, okay, see, even under 111A also same points. Listed equity shares, then units of equity oriented fund, EOF na equity oriented fund only. Then third one is like units of business trust. Units of business trust. The same assets wise are two different sections. For long term na 112A, short term na 111A. That's what the difference. So what are the tax rates? So the tax rates under 112A is a special rate, sir. The tax rate applicable equals to 12.5 percentage. Whereas if they are like 111A assets, then the tax rate equals to 20 percentage. The tax rate equals to 20 percentage. So 112A and 111A, you should remember. What are the assets that are covered under 112A or 111A? Listed equity shares, units of equity oriented fund, units of business trust. If they are long term, then the capital gain array, the tax rate is like 12.5. If they are short term, then the tax rate is like 20 percentage. And this 12.5 percentage also in excess of the tax rate 12.5 percentage has to be charged in excess of 12.5 percentage, in excess of 1,25,000. So on first 1,25,000 will not tax. In excess of 1,25,000, if there is any long-term capital gain arising on listed equity shares, units of equity oriented fund or business trust, then they are taxable at a rate of 12.5 percentage. Hope it is clear. Then what about other long-term capital gains, sir? 112 covers other long-term capital gains. Okay, other long-term capital gains. On them also the tax rate is like 12.5 percentage only, sir. On other long-term capital gains also the tax rate is how much? 12.5 percentage only. Okay, but here not like up to above 1,12,500 and below 1,12,500. Okay, so on everything it's like 12.5 percentage only. Other long-term capital gains it is like 12.5 percentage. And indexation benefit is not available. Indexation is not available. Indexation not available. Okay. And what about 111, sir? 111 na other short-term capital gains. So other short-term capital gains are taxed at normal rates only. Normal rates na that slab rates only. Depending on which option they have chosen. Taxed at normal rates. If they are chosen under the default regime, na, then 0 to 4, 4 to 8, 8 to 12, that one. Short-term capital gain also, which is covered by 111. Sir, if they didn't covered under 111, sorry, if they opted for old regime, na, then up to 2.5, 2.5 to 5. So total how many capital gains are there? Two, long-term, short-term. Under the long-term, two sections, 112, 112A. Short-term, two sections, 111A, 111. So what are covered, what assets are covered under 112A and 111A? Listed equity shares, units of EOF, units of business trust. When the gain is long-term, 12.5 percentage in excess of 1,25,000. When the gain is short-term, then the tax rate is like 20 percentage, 20 percentage. Right? Okay. Then casual income, sir. Casual incomes under section 115 BB. These casual incomes are taxable at a rate of 30 percentage. What are called as casual incomes, sir? Casual incomes now lottery, gambling, puzzles. Then net winnings from online games. Net winnings from online games. If there are any winnings from online games, then they are taxable at a rate of 30%. Then fourth one, online games winning also. Okay, 115 BBJ section number. Okay, sir. This 4 you should remember. Others not much. 115 BAC anyhow we should remember. And 112, 112A, 111, 111A, those we should remember. And fourth one, undisclosed income. Under section 115 BBE. Undisclosed income under section 115 BBE. What is the tax rate, sir? On undisclosed income, the tax rate is like tax 60% plus surcharge 25% plus cess 4%, sir. Undisclosed income. Undisclosed income, the income which was not shown by you, okay, in records. So what is the tax rate, sir? Undisclosed source of incomes 60 plus surcharge, sir. Irrespective of total income, surcharge 25% is applicable. So effectively the tax rate will be 78%, including tax plus surcharge plus cess. Effectively it is like 78%. Surcharge 25% is must, sir, here on undisclosed source of income. Then fifth one, sir. Fifth one, transfer of virtual digital assets. Transfer of virtual digital assets. Sir, what is meant by virtual digital assets? Virtual digital assets nothing but cryptos. So if you are transferring cryptos, then they are taxable under section 115 BBH. What is the tax rate on transfer of these virtual digital assets? Taxable at a rate of 30%. They are taxed at a rate of 30%. They are taxed at a rate of 30%. Okay. So I'm winding the session, sir, for today. With this, what I want you to revise is like this tax rates, sir, long-term capital gain and all. And then if you are not as speed, okay, if you are not coping up with the speed with respect to this tax calculations and all, you do examples with respect to marginal relief. Okay, examples you do by taking 2 crore 1 lakh, 2 crore 1 lakh and find out marginal relief. Both under old regime you do and new regime also you do. Okay, sir. Just like as like a work, every day what you do for 2 crore 1 lakh, you do marginal relief both under old regime and even under new regime for 2 crore 1 lakh. 2 crore 1 lakh, you do find out the marginal relief under both old regime as well as under the new regime. Okay, so that you do, and then memorize this part, sir, capital gains part and the special tax rates. Okay, we're gonna continue with the other part tomorrow's class, sir. Okay. Okay, we have discussed the tax rates applicable under the 115 BAC, the default regime for assessment year 26-27. What are the slab rates? 0 to 4 lakhs nil, 4 to 8 lakhs 5%, 8 to 12 lakhs 10%, 12 to 16 lakhs 15%, 16 to 20 lakhs 20%, 20 to 24 lakhs 25%, above 24 lakhs 30%. The same slab rates are applicable irrespective of resident or non-resident, normal individual or senior citizen. Then we have solved certain examples. Then surcharge rates. What are the surcharge rates applicable? Up to 50 lakhs, the surcharge rate is nil. If the total income is between 50 lakhs to 1 crore, then the surcharge rate is 10%. 1 crore to 2 crores 15%, above 2 crores not 25%. However, on dividend income 111A, 112A, 112 incomes, it is restricted to 15%. Marginal relief. Marginal relief will be calculated when the total income is nearer to the top surcharge limits. Okay, that also with an intention that the incremental revenue over the top the surcharge limit shall not exceed the incremental tax over the surcharge limits shall not be more than that of the incremental revenue. Okay, so for that purpose only marginal relief will be given. So what is the amount of marginal relief, sir? Step 1, compute tax on given total income. Step 2, compute tax on nearest surcharge limit of given total income. Then for step 1, what you will do on the given total income, we will calculate tax and surcharge. Step 2, we will find out the nearest surcharge limit to the given total income, and on that we will compute tax plus surcharge. Then third one, we will find out the difference between given total income and the nearest surcharge limit we have taken for calculating tax in step 2. Step 4, step 1 minus step 2 minus step 3, you will get marginal relief. Okay. Then tax rates applicable to individual HUF, AOP, BOI, AJP under old regime. Individual HUF, AOP, BOI and AJP, they could be resident or even non-resident. Okay, resident or non-resident, and even senior citizen if he is a non-resident, covered here only. Super senior citizen if he is a non-resident, covered here only. So this set of rules are applicable for normal individuals irrespective of resident or non-resident. Okay, if they are senior citizens, if they are non-resident, covered here only. If they are super senior citizens and non-residents, covered here only. What are the slab rates? Up to 2.5 lakhs nil, 2.5 lakhs to 5 lakhs 5%, 5 to 10 lakhs 20%, above 10 lakhs the tax rate is like 30%. Then we have discussed like the tax rates applicable to senior citizen. Who is called senior citizen? Because an individual age greater than or equal to 60 but less than 80 is called a senior citizen. It has to be checked on the first day of assessment year whether he is attaining that age of 60 or not. Even on first day of April of assessment year, his birthday and he is attaining the age of 60, still he is called as what? Senior citizen only. What are the slab rates applicable to senior citizen? Up to 3 lakhs nil, 3 lakhs to 5 lakhs 5%, 5 lakhs to 10 lakhs 20%, above 10 lakhs na 30%. Then individual being resident age greater than or equal to 80 years. Total income. Okay, for super senior citizens, sir, who are called super senior citizens, where age is greater than or equal to 80. The total income up to 5 lakhs nil, 5 lakhs to 10 lakhs the tax rate is like 20%, above 10 lakhs the tax rate is like 30%. Then surcharge rates under the old regime. Up to 50 lakhs of total income, no surcharge. 50 lakhs to 1 crore, 10%. 1 crore to 2 crores, 15%. 2 crores to 5 crores, 25%. Above 5 crores, 37%. However, sir, when there is like 25 and 37%, like the dividend, the surcharge rate is restricted to 15% only on dividend income and special incomes like 112A, 112 and 111A. Okay, so then we have did an example. Then we discussed about special tax rates also. Capital gains can be divided into two types: long-term capital gain, short-term capital gain. Under long-term capital gains, again two sections are there: 112, 112A. Okay, which are covered under 112A? Listed equity shares, units of equity oriented fund, units of business trust. Okay, So these listed equity shares now should be listed in India. On them, securities transaction tax (STT) also has been paid at the time of sale and purchase for shares. For units and all, only at the time of acquisition. Okay. Then the tax rate is like 12.5 percentage in excess of 1,25,000 and 111A. 111A. It is applicable for listed equity shares, units of EOF, and units of business trust. The tax rate would be 20 percentage. The tax rate would be 20 percentage. Then on other long-term capital gains, the tax rate is 12.5% without indexation. And on other short-term capital gains under 111, it's like taxable at normal rates. Taxable at normal rates. Then casual incomes under 115BB. Casual incomes now lottery, betting, gambling, all these. Taxable at a flat rate of 30 percentage. Net winnings from online games. Net winnings from online games. These are taxable at a rate of 30 percentage. 115 BBG. Then undisclosed source of incomes under 115 BBE, taxable at a rate of 60 percentage plus surcharge 25% plus cess at a rate of 4 percentage. Then there are any transfer of virtual digital assets like cryptos and all. Okay, then the tax rate would be 30 percentage flat. The tax rate would be 30 percentage flat. Okay. Am I audible, right? Audible now? Now we're gonna discuss about rebate. Hello all. Am I audible or not? Inform me. So now we'll be going into the concept of rebate. Rebate under section 87A. Rebate under section 87A. The rebate is applicable only to resident individual. Rebate is applicable only to resident individuals. Rebate is applicable only to resident individuals. So rebate is available under both the regimes, like whether you have opted the default regime or the new regime. So first I am writing about the default regime. Under default regime, $115 BAC, if they are under the default regime, sorry. And the next side, okay, default regime 115 BAC. Then the next one is like under old regime. Old regime. First we'll finish off old regime, sir. Under old regime. Under older regime, the total income should be less than or equal to 5 lakhs. Under old regime, to avail rebate, the total income should be less than or equal to 5 lakhs. And the rebate amount is like 12,500 or tax payable, whichever is lower. Okay, it is available on 12,500. Rebate is available on 12,500 or tax payable, whichever is lower. $12,500 or tax payable, whichever is lower. and this rebate is not applicable on, can't be claimed on 112A incomes. That rebate under old regime can't be claimed on 112A incomes. So rebate is not applicable. Okay, rebate is like 12,500 or tax payable, whichever is lower, and this can't be claimed on 112A income. What is called 112A income, sir? Listed equity shares, units of EOF, units of business trust. On them, you can't avail this rebate. So first of all, why rebate has to be given? The rebate is given to give tax incentive to the small and medium sized taxpayers. Okay, to the small and medium sized taxpayers, the government wants to give little more tax relief. Or further, they can increase the slab rate only now. Or when they increase slab rate, then the impact, the benefit will go to each and every individual. HUF, AOP, BOI, and AJP. And they change the slab rate. That's why instead of changing the slab rate, they kept additionally rebate, which is targeted for individuals who are like middle class. Okay, to the middle class sector in India, for them to provide much more tax relief they given. Okay, their total income should be within 5 lakhs. Then under the default regime, sir, the total income should be less than or equal to 12 lakhs. Under the default regime, the total income should be less than or equal to 12 lakhs. Sir, previously it used to be 7 lakhs a year. Now there is a change, and I said like the total income should be less than or equal to 12 lakhs. Then the rebate applicable equals to 60,000. 60,000, sir. Previously it used to be 25,000. So it's a change from Finance Act 2025. It's an amendment. Okay, sorry, sir. Okay, okay, so actually the tax rates previously I discussed, like the slab rates are also amendment, but there I didn't mention. But that is a usual change now. So even so, the second amendment is rebate, sir. The first amendment with respect to Finance Act 2025 is like the slab rates. There's a change in slab rates under 115 BSc. And the second amendment we are discussing from here is like rebate. The total income should be less than or equal to 12 lakhs. Rebate equals to 60,000 or tax payable. Rebate equals to 60,000 or tax payable, whichever is lower. 60,000 or tax payable, whichever is lower. Okay. And then additionally, sir, in Finance Act 2025, not only this, there is a new point also mentioned stating like rebate, this rebate, sir. I mean, this under 115 BSc, what we have said rebate now, this not applicable on special rate incomes. Not applicable on special rate incomes. So under new regime, sir, in Finance Act 2025 only they introduced one more point stating like what? The rebate can't be claimed on special rate income. Special rate incomes now, it's not just the 100 and long-term capital gains. Both long-term capital gains are special incomes only. In short term, 111A is special income and casual income. Then we discussed about this online gains and all. then virtual distillation. So like that, if any special incomes are mentioned, special rate incomes, on them we can't claim rebate under the new regime. Understand, sir? This is default regime, this is the old regime. Then even there is a concept of marginal relief for rebate. Marginal relief not for surcharge, or marginal relief for rebate. That is also applicable only in the default regime, this marginal relief for rebate. Okay, whereas in the old regime, such concept is not applicable. Marginal relief with respect to rebate not applicable, whereas here it is applicable. So how do we calculate the marginal relief, sir? Here also there are steps, sir. Step to compute this marginal relief and all. First one, sir, this marginal relief, sir, anywhere it is applicable applies only total income is nearer to 12 lakhs, is nearer to 12 lakhs. I mean, let's say, sir, for a base you can take like up to 13 lakhs. Applies only when the total income is nearer to 12 lakhs. I can tell the exact figure also, like stating like 12 lakhs 70,585. So up to 12 lakhs 70,585, if the total income is there, then only we can have a question of rebate. Okay, so but we'll see practically. So why the 12 lakh 70,585 came na? You should have a proof, right? See, step 1, first compute tax on same given total income. Step 2, tax on 12 lakhs. Tax on 12 lakhs. Step 3, difference between given total income, difference between given total income and 12 lakhs. Difference between given total income and 12 lakhs. Step 4, marginal relief. Here also same steps, sir. Marginal relief is like 1 minus 2 minus 3. First, sir, let me take an example of 12,50,000. Let me take an example of 12,50,000. Sir, compute tax on 12,50,000 under the new regime. So on 12,50,000, sir, 0 to 4 lakhs nil, 4 to 8 lakhs, that is 4 lakhs into 5 percentage, it is equals to how much? 20,000. And 8 to 12 lakhs, 4 lakhs into 10 percentage, it is like 40,000. Then 12 to 16 lakhs, we are having only 5,000 into 50,000 into 15 percentage. 50,000 into 15 percentage, if you take, okay, it is like 7,500. So total it is how much, sir? 67,500 is the tax. Okay. If at all 12,50,000. Sir, we'll solve examples. Roughly I am doing this one. Okay. 67,500. Sir, if exactly 12 lakhs na, then rebate come. Exactly 12 lakhs na 60,000 and rebate will be there. So on 12 lakhs the tax liability is how much? 0. Okay, on 12 lakhs the tax liability is how much? 0. Then difference between given total income and 12 lakhs. Difference between given total income and 12 lakhs. How much, sir? 50,000. 50,000. So now understand, sir. By earning over 12 lakhs, he is paying extra 67,500. But extra tax is only 50. So marginal relief is how much? 17,500 is the marginal relief. 17,000. Okay, 1 minus 2 minus 3. That is the marginal relief. Okay, then step 5. Ultimate tax payable. Final tax is nothing but step 1 minus step 4. 67,500 minus 17,500. He'll be paying 50,000 as tax. He'll be paying 50,000 as tax. Are you able to understand, sir? So this is tax on given total income. So given total income we have taken what? 12,50,000. So tax on given total income. Okay, example we have taken what? Total income equals to 12,50,000. On that we did. See, tax on given total income equals to 67,500. Tax on 12 lakhs, you take difference between given total income and 12 lakhs 50,000. Marginal relief is like 1 minus 2 minus 3. Same as like the surcharge only. Final tax is like what? Step 1 minus step 4, which is like 50,000, which is like 50,000. Okay, sir, I'll solve. Okay, mostly, sir, many people will have confusion here. So I'll give a few more examples also, no problem. Okay, so first, the same surcharge related marginal relief, what steps we followed, the same steps we follow even for rebate related also. An example, and understand, sir, this marginal relief for rebate concept is not applicable under old regime, it is applicable only under the new regime. Example 2. Example 2, sir, I am giving the total income equals to 12,70,585. 12,70,585 will do. Okay. So step 1. What is step 1? Equal to tax on 12,70,585. Sir, everybody calculate and tell tax on 12,70,585. Sir, don't ask whether I need to calculate surcharge. Okay, surcharge comes only when the total income exceeds 50 lakhs. This is like before 50, within 50 lakhs only. Okay, 12,70,585 means obviously rebate is not applicable because rebate comes only when the total income is within 12 lakhs. So only we are talking about marginal relief. So someone tell me what is the tax on 12,70,585? Someone tell me what is the tax on 12,70,585, sir. Okay, I am also doing along with you. Around first up to 12 lakhs, it is like 60,000, sir, that I know. And on 70,585 into 15 percentage, if you do, okay, 70,588, right? Okay, 12 lakh, sorry, 70,587. 587. Then step 2, what we should do, sir? Step 2 will do on tax on 12 lakhs. Tax on 12 lakhs. Tax on 12 lakhs is a 0 only. Why? Because on 12 lakhs 60,000, but exactly 12 lakhs you can claim rebate 60,000. So post claiming rebate 60,000, the tax will be 0, right? Then step 3. Difference between the given total income and 12 lakhs. What is the difference between 12 lakh 70,585 and 12 lakhs? That equals to how much, sir? 70,585. So step 4, sir, marginal relief. One minus 2 minus 3. So if you subtract, how much, sir? 2 rupees. Positive 2 rupees only. Okay, so if you go beyond that, if you go beyond like 70,590, 95, 100 and all, now marginal relief will turns out to be negative. So if it is negative, we will not take it as marginal relief. Understand? So here step 4 I am writing here, sir, in the previous step also, like only if it is positive we'll take it as marginal relief. Only if the value is positive we'll take as marginal relief. We'll take it as marginal relief. Only if it is positive we'll take it as what? Marginal relief. Okay, so here what is the ultimate tax payable, sir? Step 5 tax payable equals to step 1 minus step 4. It remains almost same, 70,585. Right, almost same, 1 rupee, 2 rupee difference only. Right, everybody getting the points or no? So we'll go for another example also. We'll try at 13 lakhs also. Everybody, are you with me? Then example 3. Third, total income obviously is individual only, because that is applicable only to resident individuals only, rebate. Total income of Mr. A, resident, 45 years, total income equals to 13 lakhs, and obviously he has opted for 115 BAC. All these conditions are there. Okay, 13 lakhs is the total income. Fine. Step 1. What is step 1? Tax on 13 lakhs. So what is the tax on 13 lakhs? We already know on 12 lakhs the tax would be 60,000. On extra 1 lakh, 15% if you add na, 15%, it will come to how much? 75,000 is the tax. In step 2, we need to compute tax on what? 12 lakhs. On 12 lakhs, the tax is obviously how much? 0. Step 3. Step 3 is nothing but what? Tax on. Sorry, step 3 is nothing but the difference between given total income 13 lakhs and the tax on 12 lakhs. That equals to how much? 1 lakh. That equals to how much? 1 lakh. So if you do step 4, step 4 is what? Step 1 marginal relief. Step 4 is like marginal relief. How do we compute marginal relief, sir? We'll compute marginal relief like step 1 minus step 2 minus step 3, which is 75 minus 0 minus 1 lakh. So it would be negative 25,000. Sir, if it is negative 25,000, we'll consider it as marginal relief. No, right? Okay, we'll ignore that. Only positive numbers will consider. Step 1 minus step 2 minus step 3, if you do 75,000 minus 1 lakh, if you do, you'll get negative 25,000. Right? And step 5, tax payable. Tax payable is like tax payable is like 75,000 only, sir. No marginal relief applicable here because the step 4 value is like negative. So what we understood, the maximum marginal relief will come only to the extent of 7,585 only, 12,70,585 only. So beyond that, we will not get marginal relief. Sir, but do we need to remember that amount? Not required, sir. If you just remember these steps, enough. Okay, so what I want you to remember is like the total income should be nearer to that rebate change limit, that 12 lakhs, nearer na, like up to 12 lakh 7585. Beyond that, if you go also, the marginal, okay, incremental income beyond 12 lakhs and incremental tax beyond 12 lakhs, okay, which is higher, income is only higher, so no problem. Okay, when the incremental tax is higher, then we are providing relief. and this relief concept is not applicable obviously under the old regime. Everybody got it? Shall we proceed further? Hello. So then we'll take certain examples, sir, for computation of taxes. Example 1. Compute tax liability of Mr. Sanjay. See, Ravalika, we are not giving any rebate here. Beyond 12 lakhs 50,000, about 12 lakhs, we are not giving rebate. We are giving marginal relief only. See, if 12 lakh 70,000 is greater than 12 lakhs, then 12 lakh 50,000 is also greater than 12 lakhs. 12 lakh 70,585 is also greater than 12 lakhs. And even this one also 13 lakhs is also greater than 12 lakhs. In all the cases, there shouldn't be rebate. So we are not talking about rebate. So rebate is not given in all these three cases. 1, 2, 3. What is given? Marginal relief is given. Okay, but under the same section. Okay, but under the same 87A only, they given a proviso kind of, which said like they'll give rebate also. Okay, so this is like okay, so now you'll be having a question like, sir, how do we subtract this 17,500? This is like, we call it as rebate only, but within the section there is a subsection stating like it is like a proviso to the original one. So you understand the word meaning of proviso also, sir. Usually provisos will be there in a sections. So provisos, na, these are like villain roles, sir. Okay, like they'll be almost okay. Whenever there is a section, subsections and all, na, they are like hero family. Section, subsection, clause, these are like hierarchy. Hero father, hero son, like that, section family. But there will be provisos also. This proviso will do something against to the section. Okay, so if something section says like exemption is available, proviso says like no, on this exemption is not available. Okay, so proviso is something which talks against to that of section. Okay, in other way it's like an exception. Okay, proviso talks about exceptions kind of. So this is like a kind of exception where income is beyond 12 lakhs also you can claim rebate, but such rebate is like marginal relief related rebate. Okay, compute tax liability of Mr. Sanjay, age 20 years. Mr. Sanjay, age 20 years, has the following incomes under the both the regimes. So you should calculate taxes under both the regimes, sir. As following incomes, compute tax under both the regimes. Compute tax under both the regimes. compute tax liability of Mr. Sanjay, age 20 years, has the following incomes. Compute the tax liability of Mr. Sanjay has the following incomes, both the regimes. Okay, so what are those incomes? First is having income from house property. Income from house property. How much is income from house property? Income from house property, we're going to take it as like 3 lakhs. Then PGBP, profits and gains from business or profession, 2 lakhs. Then long term capital gain under section 112A. Long term capital gains under section 112A. We are having that also another 2 lakhs. Then short term capital gain under 111A, another 1 lakh. Then we are having lottery income also, net of TDS. Okay, lottery income net of TDS 70,000, sir. Understand, sir? Lottery related, there will be TDS section. Okay, TDS will be deducted under 194 BV. So when TDS is deducted, what is the rate of TDS? 30%. So when any income, if it is given as like net of TDS, we need to gross it and take. So here net of TDS na 30% is the TDS rate on lottery income. So you should gross it. Okay, I mean you take the 100% of that and then calculate the tax. Sir, everybody, okay, without fighting for me, calculate your tax on this income. Okay, first what you will solve? First you solve under the default regime. Default regime na 115 BAC. Okay, solve it under the default regime. 3,22170. Income from house property 3 lakhs, PGBP 2 lakhs, long term capital gain under 112A 2 lakhs, short term capital gain under 111A 1 lakh, and lottery income net of TDS 70,000. Okay, so I am calculating on my way, sir, but you also, without looking at me or without waiting for me, calculate. House property, sir. Again, if you know much more detailedly, house property standard deduction and all has to be claimed, sir. I remember from inter. Sir, I already given income from house property straight away. If I given it as like rent, then you should think of standard deduction, municipal taxes, all those points. Okay, I given straight away income from house property, so you need not to do any other adjustment. Then we'll go to PGBP head. PGBP, how much is there, sir? 2 lakhs. Then I'll take the head of capital gains. Under capital gains, we are having two incomes. What is like 112A we are having, and even we are having 111A. How much is 112A, sir? 75,000. Sorry. So first we should take full income, sir. How much is the L-term long-term capital gain? 2 lakhs. Okay, take first year 2 lakhs only. Then 111A. How much is the 111A income, sir? 1 lakh. So take that 1 lakh here. First we need to find out gross total income. Sir, I said like long-term capital gains in excess of 1.25 lakhs is only taxable. So first 1.25 lakh exempted. Can we leave it straight away here? No. But 1,25,000 is something like a basic exemption. At the time of tax only you should ignore. For the purpose of computing total income, you should not reduce that 1,25,000. So if you take it here, the total capital gains is how much? 3 lakhs. And then we are going into IFO asset. Okay, under IFO asset, what income is there? Lottery income. Under IFO asset, we are having what? Lottery income. How much is the lottery income, sir? The lottery income is like 1 lakh. Okay, how it came 1 lakh, sir? So how it came 1 lakh, na? Okay, we are having 70,000, right? 70,000 is net of TDS. So 70,000 into 100 by 70, if you do, you will get it as like 1 lakh, because 30% is the TDS rate applicable on it. So that was deducted. So what is the total income? What is the so gross total income, sir? 589 lakhs is the gross total income. 9 lakhs is the gross total income. 9 lakhs is the gross total income. First, sir, we have normal rate incomes first. Tax on normal rate income. Tax on normal rate income. How much we should take? Like 5 lakhs, na? Sir, house property is like slab rates. Okay, so I am writing here for our convenience. House property is like slab rate, PGBP is like slab rate, whereas capital gains are like special rate, and even lottery income is also special rate, and these two are like slab rates, right? So that slab rate only I am taking as normal rate income. How much is there, sir? 5 lakhs. On 5 lakhs, first we should calculate tax separately. But there is no deductions now, that's why net total income also same. Otherwise, usually we should calculate what? Chapter 6A deductions we need to subtract, and we need to find out net total income. But here there are no deductions taken, right? So net total income also will remain 9 lakhs. So tax on normal rate income 5 lakhs if you take, first 4 lakhs exemption, basic exemption limit. On excess 1 lakh, if you levy 5%, na, it is like how much? 5,000. So here the tax is like 5,000. Okay, I will take it in a inner column, sir. 5,000. Then special rate incomes. What are the special rate incomes, sir? The special rate incomes, first I will go with 112A. On 112A income, what we should do, sir? 2 lakhs minus 1.25 lakhs into 12.5 percentage. Okay, so 75,000 into 12.5%. Anyone? Quickly tell, sir. Quickly tell anyone. 2 lakhs minus 1.25 lakhs. 2 lakhs minus 1.25 lakhs into 12.5 percentage. 75,000 into 12.5. 9,375. Okay. Then we are having what? 111A income also. How much is the 111A we are having? 1 lakh. 1 lakh into 20 percentage if you take, it will be how much? 20,000. Then we are having lottery also. 115BB. 1 lakh into 30 percentage. How much? 30,000. So what is the final tax payable, sir? 59,375 plus 5,000 total. 64,375 is the tax. Total tax is how much? 64,375. Okay. This fellow, is he eligible for rebate, sir? Is he eligible for rebate? Tell. Anybody tell. Is he eligible for rebate? We are under the new regime. Is he eligible for rebate? If so, how much he can claim as rebate? Just now we discussed the concept of rebate. So tell me, is he eligible for rebate? If so, what is the amount of rebate? Don't be silent. If you respond only, you will get. How much? Tell the amount also. Yes. 60,000. Anybody? Okay. Rest all. Once again, okay, turn the page and read the rebate conditions once again. Read the rebate conditions once again. Read, okay, read the conditions. I know 60,000 tax payable, but see, okay, so this is only, okay, for your convenience, I am only showing that concept page also. See, anything related to our question? Does any point from this connected to our question? Rebate can be claimed on special rate incomes, can't be claimed on special rate incomes. Rebate can't be claimed on special incomes. Sanjay, not like more than 12 lakhs will apply rebate, less than 12 lakhs only will apply rebate. Yes, why issue? Correctly you said. Only rebate is 5,000 only. Why? This is special rate income now. On this we can't claim rebate. On this 20,000 we can't claim rebate. On this 30,000 also we can claim rebate. So only this 5,000 we can claim rebate. So rebate under section 87A is just 5,000 only. Okay, so rebate can't be claimed on special rate incomes. Sir, all these are like very important points, sir. These are amendments only. Okay, these points, these examples we are solving will not find it in any material. Okay, can't be claimed on special rate incomes. Rebate can't be claimed on special rate incomes. So if you subtract that, what is the total income tax payable, sir? 59,375 tax plus cess at a rate of 4%. So someone tell me 59,375 into 4%. 2,375. 2,375. So the total tax is how much? 59,375 plus 2,375. 61,750. Okay. So this is the answer. No, this is not the answer. Okay, there is one more thing which we are missing. I wrote. Okay, here in this example, sorry. Sir, actually, this pen, and I'm writing now, there's a touch sensitivity issue. Once I need to reboot it, like once I restart the tab, then it works properly. But in between the class, I don't want to do it. So that's why I'm continuing. So here and there, that's why some points are getting missed. Okay, no problem. I mean, even if I'm writing, not getting, so I'm writing like double times, like here, if you see. Okay, so total tax is 61,750. But one more point is that this is not the final tax payable. Look at our question and tell what is the other one missing. Is this the final tax payable? Anybody in the class? There's something else we need to adjust from this tax payable. This 61,750 we are not going to pay. We are definitely going to pay less than this 61. Yes, TDS. So adjust the TDS deducted. Because on lottery income already TDS deducted na 30,000. So subtract that. The final tax payable is only 31,750. Final tax. Okay, sir. You believe or not, just because a student not solving the basic points properly is losing 28 marks related questions. Tax planning, there is a chapter. 3A and 3B questions will come from tax planning. I mean, in our exam, the serial number questions like 3A and 3B will come from tax planning. Most of the times, okay, there may be other points also. I'm not saying like only tax related, but they involves even tax calculation also. There a student like these kind of minute points they'll miss and they'll lose marks. That 14 marks are there. Then there is a chapter called DTAA, double taxation avoidance agreements. That chapter requires tax computations a lot. Every question requires tax computations. There can't be a question without tax computations. So that question they are doing a mistake with this minute points. Fourth one, there's a question called advanced tax related, okay, which will be usually asked under like 5A. 5A they'll be asking advanced tax. So there they are doing mistake. Okay, 4 7 marks questions these. And then where else they can ask like this points now? Okay, they're asking at like NR taxation, non-resident related. Okay, so this rebate points and all will come sometimes. NR taxation, that points also. But little this 4 having high importance, that NR tax has comparatively less. Then question number 2, whether it is PGBP or capital gains, they'll ask like a total income kind of question. Mostly like PGBP only, but again at last you need to calculate tax also, that part. And at least 1 or 2 MCQs they are being asked. So basics and all, even though we cannot standardly say like there is weightage, but this chapter can impact almost 30 to 35 marks of our paper. Okay, so carefully remember each and every points. Okay, we'll solve so many examples, sir. Okay, in the last batch also I solved, but in this batch again we're going to solve much more examples also. We're going to frame so many examples this kind of, and we're going to solve here. Okay, because these examples are we don't find much in books and all. Okay, but these things we need to learn in the first chapter only. Then calculate tax for the same person even under the old regime also, sir. Even under the old regime. So I am not again calculating everything, sir. The net total income till net total income, everything remains same na. So I am straight away taking net total income. I am straight away taking how much? Net total income. What is the net total income, sir? We are having 9 lakhs. Net total income is like 9 lakhs. Then first we should do what? Tax on 5 lakhs. Because it is like normal rate. Sir, on 5 lakhs, what will be the tax, sir? Old rates. Up to 2.5 lakhs, it is like nil. 2.5 to 5 lakhs, it is taxable at 5%. So it would be like 12,500. Okay, on 5 lakhs, it would be how much, sir? 12,500. Then on like 112A income, same na 112A here or there, it will be same. 9,375 only, 112A. Because special rate incomes will remain same even under old regime or even under new regime, 112A. And then go for 111A. 111A also it would be same only. How much is there, sir? Income 111A related. There is like 1 lakh into 20%, not 20,000. Then go for lottery. Even if you go for lottery also, that also remains same. Okay, that also remains same. How much, sir? The income remains like 30,000 only. Sorry, the tax remains like 30,000 only. What is the total tax? 81,875, right? It is like 81,875. Now anybody tell me whether rebate is applicable here. Whether rebate applicable here. Rebate applicable here? Yes, sir. Check and tell. You need not to be instantly give the answers. Initial days na you could just go through the provision once again under old regime. What is the rebate provisions and tell. Rebate applicable or not? Thinking for so long, these guys don't know whether they're referring. Yes, it's applicable, Sanju. Okay, why? Tell the reason also. Why you think it is applicable? Even others also tell. Okay, only like 3 or 4 students are only responding. You guys are like, so many are there, right? Just respond. What happened to the others? But rebate comes into picture when? The first foremost point only you guys are missing. Under old regime, rebate comes into picture only when the total income is within 5 lakhs. Under old regime, rebate come into picture only when the total income is within 5 lakhs. But here the total income is how much, sir? Total income is how much? 9 lakhs. So rebate comes into picture? No. Do I think of that marginal relief point, sir? Marginal relief is not applicable under old regime, so you don't need to think of that also. So just you need to think of what? Just nothing is there. So rebate not available. Nothing. So simply you will calculate what? Cess at a rate of 4%. So 81,875 into 4%. How much, sir? Sir, if this speed only, if we gonna will take almost 200 plus hours, sir. So you guys need to be little quick. Okay. So study everyday concept. You should remember. Okay. Only when you get those points. This is what the tax, total tax, plus from the total tax, what we need to subtract? We need to subtract TDS. How much? 30,000. If you subtract TDS 35,000, then 55,150 is the tax pay. So now tell me, sir, here which option is better for this fellow? What is his name? I didn't took any his name. Sanjay. For Sanjay, which regime is better? Default regime, old regime? Default regime na is paying only 31,750. Right. Pravilka, what you got? 74,750. I didn't understand. Okay, it's only 71,875. Sorry. Sorry, guys, then. It's only 71,875. Then on that cess, if you levy 4%, how much it will come? 2,875. 71,875 into 4%. 2,875. Then if you add, then how much it will be? Like 74,750. Then it's not like 55. It would be how much? 44,750. But still, which regime is better? Which regime is better? Okay, the default regime is only better. Default regime is only better. Okay. For 1 second, sir. Okay, I'll be turning off my tab and I'll turn on, because like the issue has been now. You didn't wrote that. Why you are not writing then? You need to write the why you are not writing. So who will give extra time for you to write? You should have written along with me. Okay, 1 second. No. So that and all not happen. That and all happen only in interlevel. So first you listen, then you write. Now, like you need to do simultaneously. Listening, writing, everything has to be done simultaneously. Okay. From now on, don't expect me to give separate time for writing. Okay. So give me 1 minute. Like I'll turn off the tab and again I'll turn on. Okay. My pen connectivity is having a issue. That's right. Okay. Now I'll give time to write. Don't worry about that. Here on, you should do simultaneously only. Now we'll discuss about tax rates applicable to companies. Tax rates applicable to companies. Assessment year 25-26. Tax rates applicable to companies. Assessment year 25-26. Okay. For domestic company, this is under the normal regime, sir. Normal or old regime. Sorry, not normal is not correct. Old regime. Let us write it as like old regime. For understand, for individuals HUF, AOP, BOI, 115 BSc new regime is the default regime. The old regime is optional, but for companies, old regime is only default. For companies, old regime is only default. Default regime. Okay, that also first will be starting with what? Domestic companies. First we'll be starting with domestic company. A domestic company, a company which is incorporated in India. Yes. Thanks for the correction. Assessment year 26-27. Domestic company. So for domestic companies, what are the tax rates applicable, sir? Where the turnover in previous year 23-24. Turnover in previous year 23-24, sir. Okay, where the turnover in previous year 23-24. Sir, for us relevant previous year is like 25-26, but still turnover will check the turnover of previous year 23-24 only. If it is like less than or equal to 400 crores, turnover in previous year 23-24 is less than or equal to 400 crores, then the tax rate is like 25%. Tax rate is like 25%. There is no basic exemption limit for companies. And even we are going to talk about surcharge rates also. Tax rate is like 25%. Sir, understand, special rates are applicable even for companies also. I mean, when the companies is having long-term capital gain, short-term capital gain, or like listed equity shares, that one, they are taxable at special rates only. The other incomes, like when a company is having lottery income, taxable at special rate only. When a company is having like on transfer of carbon credit or undisclosed source of income, they are special rates only. But what if company is having house property income, PGBP income, IFOS side income? Okay, they are taxable at what rate? 25%. What are the surcharge rates? Like see, the total income here and rate here. Total income and rate. Let's say, sir, the total income is like less than or equal to 1 crore. A company is up to 1 crore, the surcharge rate is nil. When the total income is like 1 crore to 10 crore, then the surcharge rate is like 7%. Greater than 10 crores, if the total income is greater than 10 crores, then the surcharge rate is like 12 percentage. 12 percentage. This is for domestic companies. Okay, then if the turnover is greater than, the surcharge rates remain same only, where the turnover is in previous year 23-24 is greater than 400 crores, nothing but other case it is like. Okay, what is the tax rate? 30 percentage is the tax rate. 30 percentage is the tax rate. Then optional also there, sir. For companies there is even optional regime also. This is the default regime now, optional. For companies. Optional regime, companies. So under optional regime, sir, there are 3 sections. Section 115 BA, section 115 BA alone I am writing here, sir. I will write down like section 115 BAA and section 115 BAB. Sir, these default regimes will not be discussing detailedly here. We will discuss detailedly in the assessment of companies chapter. Just here we are just knowing the tax rates alone. 115 BA, it is applicable for a domestic company which is into manufacturing. It should be a domestic company and it is carrying out what? Manufacturing. And 115 BA, it could be any domestic company. It should be manufacturing or not. Any domestic company. And here 115 BAB, it is also a domestic company, which is like what? Manufacturing. Domestic company, manufacturing. Okay. So what are the tax rates? Sir, under 115 BA, the tax rate is like 25 percentage. Tax rate is like 25 percentage. Whereas under 115 BA, the tax rate is like 22 percentage. Whereas under 115 BAB, the tax rate is like 15 percentage. 15 percentage. Sir, but this is not the final thing, sir. Okay, we'll be discussing about these 3 sections detailedly again in the assessment of companies chapter also. Okay, and then surcharge rates. Surcharge rates for 115 BA, companies which has opted 115 BA. Okay, total income like less than or equal to 1 crore, then the surcharge rate is nil. 1 crore to 10 crores, 7 percentage. Greater than 10 crores now, the surcharge rate is like 12%. So, okay, almost like same as that of the this is like same as that of the default regime only. Up to 1 crore nil, 1 crore to 10 crores 7%, greater than 10 crores net is like 12 percentage. Then 115 BA, 115 BA is applicable to what? Any domestic company where the tax rate is like 22 percentage. Here the surcharge rate is like 10 percentage fixed. 10 percentage fixed. Sir, fixed na on whatever is the total income. Even up to 1 crore also surcharge rate is 10 percentage. Here also same. Okay, here under 115 BA also surcharge rate is like 10% fixed. Surcharge. right? Then we'll write down even for foreign company. For foreign company, the tax rate is like 35 percentage. Tax rate is like 35 percentage. So we'll discuss about surcharge rates also. Surcharge rates. Okay. So surcharge rates like total income and rate. So where the total income is like less than or equal to 1 crore, surcharge rate nil. 1 crore to 10 crores. I mean greater than 1 crore to 10 crores. The surcharge rate is like 2 percentage. Greater than 10 crores, na, the surcharge rate is like 5 percentage. Greater than 10 crores, na, the surcharge rate is how much, sir? 5 percentage. Sir, written down, I mean everybody completed, right? So now we are moving on to tax rates applicable to cooperative societies. Tax rates applicable to cooperative societies. Tax rates applicable to cooperative societies. Okay. There will be normal regime. Even for cooperative societies also like the default or the old regime, sir. So for cooperative societies, total income, tax rate here, and this way we will take even surcharge rates. Surcharge. Okay, three things. Now the total income of a cooperative society is like up to 10,000. I mean less than or equal to 10,000. The tax rate is like 10 percentage. Okay, if it is like greater than 10,000 but less than or equal to 20,000, on this the tax rate is like 20 percentage. Above 20,000 now the tax rate is like 30 percentage. Above 20,000 now the tax rate is like how much? 30 percentage. So now look at here surcharge rates. The surcharge rates applicable, the surcharge rates available are applicable up to 1 crore. It is like nil. Surcharge rates available are like up to 1 crore is like nil. So surcharge rates like if they are like greater than 1 crore but less than or equal to 10 crores, it is like 7 percentage. Greater than 10 crores, it is like 12 percentage. Greater than 10 crores, it is like how much? 12 percentage. Surcharge rates up to 1 crore nil, 1 crore to 10 crores 7 percentage, greater than 10 crores, it is like 12. So almost like domestic companies only. There is nothing different here, right? Then even for companies also, cooperative societies also optional regime is there. Optional. So what are the optional regimes here? So 115 BAD. Okay. So when which cooperative society can opt here? It should be a resident cooperative society other than that opted 115 BAE, because there are two optional regimes, sir. If it opted 115 BAE, it can't come under 115 BAD. Okay. So what is the tax rate, sir? The tax rate remains same, 22%. And surcharge rate, sir, 10% is the surcharge rate, and it is like fixed. Okay, fixed. I mean, irrespective of total income, you need to levy 10% as the surcharge rate. Then 115 BAE. With respect to 115 BAE, cooperative societies, okay, cooperative societies only, which are into manufacturing. Cooperative societies which are into manufacturing. The tax rate is like how much? 15%. Tax rate is like how much? 15%. Okay, so cooperative society, and it should be what? It should be manufacturing. Okay, and there are other conditions like this cooperative society should be registered on or after 1st April 2023, and the business started before 31st March 2024. So that means for within a year period, like in the year like 1st April 23 to 31st March 2024, they might have started, and they might have started a business, and they might have registered in that year. Okay, then 115 BAE is applicable. When they opt 115 BAE, the tax rate is like 10%, and surcharge rate is like 10% fixed. Surcharge is like 10% fixed. How much ever they have total income, it's like 10%. Whether they have less than 1 crore or more than 1 crore, the surcharge rate would be 10% only. Sir, as of now, like in this chapter, like what are the section numbers? Let me say, like we referred 115 BAC, optional regime, for whom, sorry, not optional, sir. It's the 115 BAC is the default regime for individual HUF, AOP, BOI, AJP. This is like 115 BAC. Then 115 BA, 115 BAA, and then 115 BAB. All these are applicable to whom? Domestic companies. These three sections. These are like what? Optional regimes. These are like optional. Okay, then we discussed about 115 BAD, 115 BAE. These are applicable to cooperative societies. So these section numbers you need to memorize. There is no other option. Okay, these section numbers, because we will be referring them with the section numbers only. Okay, if you don't even remember section number, forget about the concept. First, the title itself is the section number we will be referring. There is no other name we can keep them. Okay, cooperative societies. Okay, again this is also what? Optional regime only. Okay, so these section numbers you need to memorize, and these are very important also going forward. Okay, and then this special rates also 111A, 112A, 111A, 112A, 112, 111, those four, these set of sections, and even the special rate incomes related, sir. Okay, at least, okay, if you at least remember try to remember the section numbers. If you can't remember also fine, but rates you should remember anyhow. Capital gains na for sure you should remember, and this set of sections again you should remember for sure. Okay, then the tax rates applicable to, sir, in person definition we covered individual, HUF, AOP, BOI, AJP. company we covered. Then which is pending? Firm and local authorities are pending. So for them also we'll write down the tax rates. Tax rates assessment year 26-27 for firm including LLP and local authority. Tax rates for assessment year 26-27 for firm including LLP and local authority. Right? Okay. See, what is the tax rate here? Tax rate for firm including LLP and local authorities, the tax rate is like how much? 30%. 30%. And then surcharge rates. Surcharge rates. Total income up to 1 crore. Up to 1 crore. Nil. What up to 1 crore total income? Greater than 1 crore, na, it is like straight away 12%. Straight away 12%. So these are the tax rates, sir. These are the tax rates. Then we'll be talking about okay, Cess, sir. Tax we discussed, surcharge we discussed, now then we'll discuss about Cess. Okay, HEC, health and education Cess. And what Cess at what rate, sir? Cess at a rate of 4%. Applicable to every person, applicable to all persons. Okay, 4% on what? 4% on tax plus surcharge. Okay. Sir, if at all marginal relief is there, adjust. Rebate is there, adjust. On the net, after like the net tax plus surcharge, after adjusting marginal relief, rebates, on that final figure you need to apply Cess at a rate of 4%. Right? Clear now everybody here? Then let me write down about rounding off. Rounding off. Rounding off under section 288A and 288B. Rounding off under section 288A and 288B. So write down, sir, here the total income or tax payable should be rounded off to tax payable shall be rounded off to nearest multiples of rupees 10. Shall be rounded off to nearest multiples of rupees 10. Total income or tax payable shall be rounded off to nearest multiples of rupees 10. Let me give an example, sir. Let's say I am having 7,85,423. Should be rounded off to what? 7,85,420. Okay. I am having 7,85,428. Not 23, 28. Then what you should do? You will be rounding off to 7,85,430. Sir, what if I have 7,85,425? 7,85,425 na, then take it as like 7,85,430 only. So above 5, okay, 5 and above you are rounding off to next multiples of 10. Okay, so then sir, this is applicable for both the tax payable and total income, right? So I am going to write one more thing here. So the other thing, sir, you will see only in the advance tax. Okay, I am writing this is relevant for calculating 234 ABC interest. So where this 234 ABC interest will come? They will come in the chapter called advance tax. Okay, for this purpose, for 234 for interest calculation, tax liability shall be taken in multiples of 100. Shall be taken in multiples of 100. Okay, shall be taken only in multiples of 100. Sir, if there are fractions or decimals, ignore. So what does it mean? Let's say, sir, I have 7,85,423. You will take it as what? 7,85,400 only. 85,400. Sir, I have 7,85,480. 85,480. Then also you will take it as like what? 7,85,400 only. You are not saying like round it off to next 100 or something. You are saying like completely ignore fractions. Okay, it is 7,85,450, sir, exactly. Then also you will take what? 7,85,400 only. Fractions you will be ignoring for the purpose of rounding off under 234 A, B, C interest. Hello, are you able to understand? Shall we proceed further? Okay, then the next concept name is like maximum amount not chargeable to tax. Maximum amount not chargeable to tax. Maximum amount not chargeable to tax. Nothing but basic exemption limit, sir. Okay, so we'll be having default. Okay, I'm not writing default because new regime for certain category of persons it is default. For others, companies, firms, and for companies and cooperative societies, new regime is not the default. I'm just taking like new regime and old regime. I'm not mentioning like default or optional. New, old. New na these special sections 115 BAC, BA, BAA, BAB, BAD, BAE. Okay. See, for individuals and HUF, AOP, BOI. Individuals, HUF, AOP, BOI, AJP. For them, under the new regime, what is the maximum amount not chargeable to tax? 4 lakhs. I mean the basic exemption limit is up to 4 lakhs now. Then under the old regime it is like 2,50,000. Old regime it is like what, 2,50,000. Then if individual is like resident, age greater than or equal to 60 but less than 80, age greater than or equal to 60 but less than 80, then it is like how much are here, it remains here 4 lakhs only, whereas old regime it will go to 3 lakhs. Then individual is resident, age greater than or equal to 80, super senior citizen. New regime it remains same 4 lakhs only, but old regime it will be 5 lakhs. Whereas for firm, company, local authority, there is no such basic exemption limit. I mean minimum amount or maximum amount not chargeable to tax, nothing is there. Then for cooperative societies, cooperative societies also nothing is there, sir. Okay, that's it. Nil, nil, right? Okay, so now we're going to discuss a concept, okay, called unexhausted basic exemption limit. Unexhausted basic exemption limit. Unexhausted basic exemption limit. This concept of unexhausted basic exemption limit applicable for resident individual and HUF, applicable for resident individual and HUF, and they are having incomes, capital gains incomes as incomes chargeable to tax under section 111A, 112 and 112A. So if a person is an individual and HUF, individual and HUF now what? Okay, individual and HUF, and is having capital gains, the incomes nothing but capital gains chargeable to tax under 111A, 112, 112A. So what is like 111A and 112A? Capital assets like listed equity shares, units of EOF, units of business trust. Okay, listed STD paid in India, then they are covered under 112A or 111A. On them the tax rate is like what? 112A na tax rate is 12.5% in excess of 1,25,000. 111A na tax rate is like how much? 20% currently. Okay, 112 the tax rate is like 12.5% only, but without indexation. So, okay, this is like. Now let me explain you what is called unexhausted basic exemption limit. Okay. From the basic exemption limit available from the basic exemption limit available adjust from the basic exemption limit available adjust the incomes taxable at normal rates. Adjust the incomes taxable at normal rates. Adjust the incomes taxable at normal rates. After adjusting, if any balance yes, basic exemption limit only. Applicable for resident, individual and HUF. Okay, has income chargeable to tax under 112A, 112 and 112A from the basic exemption limit available. Sir, basic exemption limit na new regime 4 lakhs, old regime 2.5 lakhs. Senior citizen, super senior citizen na 3-5 lakhs, that is also there. From the basic exemption limit available, adjust the incomes taxable at normal rates. After adjusting, if any balance is there in bell, sir, okay, let's say, sir, simple example, you have 4 lakhs is the basic exemption limit, but the normal rate incomes, like it could be house property income, salaries income, PGBP income, IFOS incomes, except the special rate like capital gains, the lottery income, okay, we wrote certain special incomes, right, except those, okay, the other normal rate taxable incomes including short term capital gains under 111. There are 4 types of short term capital gains, but only 3 are special rates. One is not special rate, I mean it is taxable at normal rate only. Okay, after adjusting, if any balance, okay, first from the normal rate you will adjust, from the basic exemption limit you adjust the incomes taxable at normal rates. After adjusting them, if any balance is there, if any balance in there in basic exemption limit, that is called unexhausted basic exemption limit. That is called unexhausted basic exemption limit. Okay, so what to do? Now the provision is like such unexhausted basic exemption limit. So usually special rate incomes we cannot adjust basic exemption limit, right? But here for resident, individual and HUF there is a provision which says like such unexhausted basic exemption limit. Such unexhausted basic exemption limit can be adjusted with 111A or 112 or 112A incomes. Can be adjusted with 111A income, 112 income or even 112A incomes. Yeah, I'll explain. Okay, first write down, I'll explain. See, example. Miss Pravalika, resident, age 60, Pravalika? Okay, I'll take it as 45. Correct only, na? Miss Pravalika, resident, age 45. okay, has the following incomes. Resident age 45 has the following incomes. 80, huh? 80 means you will have eyesight and all. You are not supposed to watch online classes. Okay, your eyes and all will strain. You should opt for face to face only in case of 80. Pravalika, age 45. Oh, already with classes. Resident age 45 has the following incomes. What income she has? Since she is like, she only saying like age 18, she has pension income. Her pension income, okay, which is taxable under the head salaries. How much? She got pension like, let's say monthly some 20,000 she is receiving, 2,40,000 she has this income, and she has some FDs on that interest. Sir, this pension incomes and all, I'm not taking it as like gross and all. So let us take it as like after all the adjustment, this is like net taxable under the head salaries. Okay, net income from salaries. Income from salary head. Otherwise, again, standard deduction, all that we cannot do. Income from salary head. Then she has even interest income also. Interest income, another 1 lakh. Okay, but she is into, she has long term capital gain under section 112. Long term capital gain under section 112, another 2 lakhs. 2 lakhs. Sir, age I took 45 only, okay, for your purpose. And she opted not to opt. If nothing is mentioned now, obviously she will be under what? 115 BSc only. If she opted out, then we should say specifically, okay, okay. So nothing like she opted out. So see here, what is her total income, sir? This is 112. Sir, 112 which incomes are covered? Long term capital gains other than, which are either, if they are like listed equity shares, units of EOF or units of business trust, covered under 112A. These are not 112A, other long term capital gains. Okay, see, first solution, you need to find out what? Gross total income. Right away I am going to the gross total income, sir. What is the gross total income? Total of all these. This is IFOS, this is salaries, this is capital gains. If you add, what is the total gross total income? 3,40,000 plus 2 lakhs, 5,40,000 is the gross total income. Okay, and if any deductions are there, we should subtract. Chapter 6A deductions. Okay, we didn't took anything, so net total income. But what we understand, sir, this net total income consists of special rate incomes and normal rate incomes also. First, what are the incomes chargeable to tax at normal rates? Salary income normal rate only, interest normal rate only. Only 112 income taxable at special rate. Okay, 112 income taxable at special rates. So tax on normal rate incomes. How much is there? Like 3,40,000. So basic exemption limit 4 lakhs. Basic exemption limit 4 lakhs minus income. If you subtract, how much you are having, sir? Basic the normal rate income is only 3,40,000. So you don't have any tax on this. Still you have 60,000 surplus of basic exemption limit only, which we call it as like unexhausted basic exemption limit. Okay, with the basic exemption limit, we'll adjust the incomes which are chargeable to tax at normal rates. Okay, what we can do with this unexhausted basic exemption limit? This could be, sir, this can't be adjusted with any special rate income. So for understand special rate incomes na, if you look at the previous pages like before rebate, so what we have written, sir, let me show you that page. Here, see, this casual incomes is also a special rate income. Online games is also special rate income. This undisclosed income, virtual digital assets, carbon credits, all these are special rate incomes only. But on all of them, this unexhausted basic exemption limit can't be adjusted. You can adjust this unexhausted basic exemption limit only with what? Only with 111A, 112, 112A incomes. That also for whom? SSE should be a resident individual and HUF. Resident individual and HUF, right? So see, so now what we can do? We are having special rate income also. Okay, how much? Long term capital gain under section 112, 2 lakhs is there. Okay, usually not 2 lakhs into 12.5%, straight away you should apply. But she satisfying all the conditions, right? She is a resident of India, okay, and she is an individual, resident plus individual, and then she is having unexhausted basic exemption limit. So then such unexhausted basic exemption limit can be adjusted with 112 income, 112A income, or even 111A income. So here we will be adjusting minus unexhausted basic exemption limit. How much? Adjust 60,000. So then on this 1,40,000 apply 12.5% into 12.5%. 1,40,000 into 12.5%. How much? 17,500 is the tax liability. 17,500 is the tax liability. Now the question is she eligible for rebate? Is there any rebate eligible under 87A? Tell. Is she eligible for rebate under 87A? That also tell with rebate under 87A. Is she eligible? If so, how much? No. Divya said no. No. Everybody is saying look no. Yes, it is no only. Why? Under the latest amendment says like what? Rebate under the new regime can't be availed on special rate incomes. So on this rebate is not available. So what is the tax, sir? 17,500. So now we need to do what? Cess at a rate of 4%. 17,500 into 4%. It is like 700. So the total tax is how much? 18,200. 18,200 she needs to pay. Right? So everybody got this point? Then let me tell you a simple concept. Okay, revenue receipt versus capital receipt. Revenue receipts versus capital receipts. Revenue receipts versus capital receipts. So let's say for example, okay, so there is a house property. Okay, this is a house property. So on this house property, regularly, if you give it on rent, you will get what? Rental income. Regularly, you can earn what? Regularly, rent will be earned, which is called what? Revenue receipts. Regularly rent. So these are called what? Regular receipts. Okay, month on month, you will be having a fixed kind of revenue from this. So these are called what? Revenue receipts. So from anything, if you are having a fixed thing, fixed amount you are getting, okay, then that is called what? Revenue receipt. These are always taxable. These revenue receipts are like what? Always taxable. Always they are taxable. Yes, there will be ifs and buts. Okay, there may be some exceptions, but in general speaking, okay. Then income earned by way of utilizing. So these revenue receipts are nothing but incomes earned by way of utilizing source of income. Incomes earned by way of utilizing source of income. Incomes earned by way of utilizing source of income. These are revenue receipts. Then capital receipts. The same house property, if it is sold, on sale, there will be capital gains. On sale of this house, you will have what? Capital gains. These are what? Capital receipts. These are what? Capital receipts. Sorry, in our books and all, it will give, they give like capital receipts are like mostly exempted, but that's not true. In the current scenarios, these are also being taxed. Okay, but in the earlier versions, capital receipts mostly used to be exempted. But these days, okay, even though I write mostly exempted, okay, I am writing because the books got not adjust, books were not updated with these points. But practically speaking, most of the capital receipts are also now taxable. Okay, so income earned by way of sale of source of income. Sir, this house is a source of income, sir. Okay, from that usually you earn rental income. But when you are selling the source itself, then the receipts you get are like what? Capital receipts. Income earned by way of sale of source of income. Income earned by way of sale of source of income. Income earned by way of sale of source of income. Understand? Shall we proceed further? Okay. Then usually in previous year you have income. This income is assessed to tax in which year, sir? This previous year income, when it is assessable to tax? It is assessed to tax in which year? Assessment year. In assessment year. Okay, let's say if previous year is like 25-26, that is assessed to tax in a year like what? 26-27. Right. Assessment was what? Assessment is nothing but calculation of tax. Okay, it's not like paying of tax, it's like finding the tax liability or finalizing the tax liability. Assessment is nothing but finalizing the tax liability. So usually the previous year income will be assessed to tax in assessment year. This is what? This is the general rule. What we have wrote here is what? It's the general rule. General rule is what? Previous year income assessed to tax in assessment year. Okay, fine. Then why it is relevant? We already know that, right? There are exceptions to this rule. There are certain exceptions to this rule. Usually previous year income is assessed to tax in assessment year only. But some cases the previous year income will be assessed to tax in the previous year itself. Okay, exceptions. Exceptions. First one. A non-resident who is into shipping business. NR na non-resident. Non-resident engaged in shipping business. Non-resident engaged in shipping business. There is a non-resident person, sir. He is engaged in shipping business. So the problem is like he came to India carrying goods, passengers and all. And here some goods were loaded, certain passengers were boarded, and then the ship is again going back. So it has earned a certain freight from Indian port. So that freight is taxable in India. But if you say like you will be assessing and collecting the tax in the assessment year, then we are not sure whether that ship will again return back to India or not. Once he leaves back, he goes to his country, and if say he is not coming back to India, he will not pay the taxes. So there will be revenue loss to the government, right? That's why what they are doing, like usually they will not assess the tax in the assessment year, but for a non-resident who is engaged in shipping business, such a tax will be assessed in the assessment year, previous year itself. Exception. Non-resident engaged in shipping business. Okay, then second one. Person leaving India for employment outside India. This person leaving India, why he is leaving? He is leaving India for employment outside India. Person leaving India for employment outside India, and he has no intention to come back also. Sir, let's say for example, in previous year 25-26, sir, April, May, June, July, okay, he worked in India. For this 4 months, he got some income of 10 lakhs. For 4 months, he got income of 10 lakhs. From August to March, he is in USA. He is in USA only. Now see, assessment also, okay, assessment tax computation is also is made. Na? See, first when assessment is made, then obviously he will be paying the tax also. Okay, or he has to make arrangements to pay the taxes. See, in April, May, June, July is in India, earned 10 lakhs. But in August, he left to outside India. Okay, when he left outside India, on this 10 lakhs, the tax has to be calculated and such tax has to be paid, right? But this fellow left India in August only and he has no intention to come back. So in assessment year, if AO calls him and says like, sir, last year 4 months you are in India, that time you have 10 lakh salary, on that please pay the tax and all. If you ask him, this fellow will not even bother, will not even lift the phone also. So on this 10 lakhs, whatever is the tax revenue, that is lost only, that's why if AO has information and he believes like this person is leaving India for employment outside India and has no present intention to come back, okay, then this 10 lakhs will be assessed in the previous year itself only, and they'll ask him to pay the tax also now only. Understand? And third one, AOP BOI formed for a purpose, association of persons, or BOI, AOP BOI or AJP, these are formed for a purpose and such purpose accomplished, and such purpose or event is accomplished. AOP, BOI, AJP formed for a purpose and such purpose or event is what? Accomplished, I mean completed. But for a temporary purpose, a group of people joined and they formed as an AOP. Okay, and then in that particular process they earned income also. But now the purpose is achieved, so they are dissolving. Okay, they are like gonna close the AOP. Sir, understand, once the AOP is closed, next year if you compute, if the officers compute tax and they ask for tax liability, there are like, let's say 100 people in the group. These 100 people will be saying like, no, I am not responsible, X is responsible. X will say Y will say A will say B. So like that, it will be so tough to the department to find out the tax liability and to recover the tax liabilities. That's why when AOP, BOI or AJP is formed for a purpose and they believe like such purpose has been accomplished, okay, then such revenues, okay, then the assessment will be carried out in the same previous year, right? And fourth one, persons trying to dispose or pledge persons trying to dispose or pledge property to avoid tax. Persons trying to dispose or pledge property to avoid tax. See, sorry, you had some income, sir, 10 crores. Your problem is like on 10 crores you don't want to pay tax. Okay, you have 10 crores income, with that you bought some property. 10 crores income, you purchased a property, some land. You purchased. Now, you don't want to pay tax because on that tax itself some 3-4 crores you need to pay. That you need not to pay. So that's why to avoid tax, what you are doing, you are transferring this land from your name to someone else's name. Okay, now if income tax people comes, you will say like, yes, even though I got income, now I don't have anything, so I cannot pay tax. Okay, whatever you wanted to do. So what maximum income tax people can do, sir? They'll freeze if any properties are there, money is there with you, they'll seize, they'll sell them and they'll buy. But you already, what you did, you already transfer the property to someone else's name, so you don't have anything. So maximum they'll keep you in prison. Okay, you wanted to be there for 4 months, 5 months, and then you will get a bail, you will come back, and then you will be enjoying the property, right? So if AO has reasons to believe like that a person is trying to dispose the property or pledge, mortgage the property to avoid tax liabilities, then what they do? Okay, they will not be waiting till assessment year. They'll do assessment in the previous year only, before the transfer and the pledging only, so that they'll recover their tax dues. That's why. Fifth one, when there is a discontinued business, when a company is going to dissolve, okay, company is into liquidation, it is dissolving, then in such case also you need not to wait for next year. Okay, next year na company liquidation will all happen. Okay, next year if you go on does nobody will be there, you will not get the tax revenue. That's why then the business is going to be discontinued. In all these cases, okay, you can go beyond exceptions. Okay, in these exceptions what, in exception points, in these exceptions, previous year income will be assessed to tax in previous year itself, will be assessed to tax in previous year itself, right? Okay, so now let me write down these section numbers also, sir, not important. Okay, even if you don't remember also absolutely fine, I'm just writing. Okay, otherwise Pravilka might think like sir doesn't know section numbers, that's why he's not writing. Okay, so why to take that blame, I'm writing. So section 172 is for non-resident engaged in shipping business, 174 is for person leaving India for employment outside India, and then this AOP BOF formed for a purpose and such purpose has been accomplished, now then it is like section 174A. Okay, and then persons trying to dispose or pledge property to avoid tax na section 175, and then discontinued business related na section 176. In all these cases the previous year income will be assessed to tax in previous year itself. Okay, then before closing, sir, I'll tell you a small concept, maximum marginal rate. Maximum marginal rate. Maximum marginal rate is simple, sir. How to remember na, we need to, okay, just like as like in temples and all priests will do, right? Like they'll be chanting mantras and all, like that only, same thing. Okay, in the whole world to remember anything there is only one and only one option, just to, okay, recalling them most number of times. But Divya, so listen, these kind of exceptions related section numbers, okay, these kind of section numbers you need not to remember, the others and all you can remember. Okay, these section numbers like 172 174 I'll tell, wherever you need to remember na, those I'll tell. So like if you remember like in one point of the class I said like these section numbers we need to remember. Only one thing, these are numbers, that's where tax is tough. See, the problem with tax is like we need to remember section numbers, these limits, mostly numbers we need to remember, limits. That is possible only if you recall number of times. Okay, I'll tell you one technique which was told to us when we are into foundation, when we are doing the foundation level CA. Okay, see, there is some techniques like which, okay, there's a name for the technique also, dustbin technique. So what is dustbin now? Dustbin, here the technique name is dustbin, but the concept is like in a day we'll have so much of waste time. It's not literally waste time, the time which will not use productively, unproductive time, something like when you are usually taking the bath and all, unproductive time, when you are like trying to sleep but you are not catching the sleep, second thing. Third one, sometimes when you are eating also, these times what you could do now, you try to recall what we have discussed. Like let's say, try this one today when you are going to sleep or when you are having dinner, try to think like 5 minutes, just try to recall the tax rates we have discussed, the class we have discussed, those points. The maximum number of times you recall, the more it will register in your brain. That's the only technique. Okay, simple thing, for remembering your father mobile number for the first time, maybe in some second class, third class you might have tried to remember your father mobile number. How many times you might have repeated yourself that mobile number to register? Same thing. Okay, there is no other exception. If you recall it, You need not to have a book in front of you. You just recall it. Okay, the maximum you recall, you will remember. That's the only technique available for us. Okay, if you do it from now, your exam will become much more easier. But the problem is like we all have mobiles. Okay, even in washroom also we are using mobiles. Okay, when you are eating, either there will be a TV or we'll be having mobile. When we are sleeping, we'll have a mobile. We'll be scrolling, then our eyes will get strained, then only we'll go to sleep, right? But sometimes at least give the time for recalling. Only when you recall, it will registers. That's the way of preparation. Maximum marginal rate. Maximum marginal rate na take highest slab rate applicable plus highest surcharge rate plus Cess. If you do all that, what rate it will come, that itself is called as what? Maximum marginal rate. Okay, let us calculate even in both the regimes. Okay, the default regime like 115 BAC. 30% is the highest tax rate na, 30% tax rate, highest tax rate. Then surcharge rate, how much is the surcharge rate highest under the default? 25% only. Okay, plus Cess at a rate of 4%. Sir, someone, sir, now what they will do na, they will do 30 plus 25, 55 plus 4, 59% they will write. Okay, so don't do those kind of comedies, sir. Okay, because usually if I write here 30 on the 25%, 30 into so if I write here 39% na, people will ask me, how we will get this 39%? Okay, it's not like 39% how we came, sir. On tax we need to apply surcharge. So 30 plus 25% on 30%. This 25% is on what? On tax. This is on what? Tax plus surcharge. So then if you add, you will get 39%, right? Then we are having what under the old regime. Then we will try even under the old regime. So how to do under the old regime? The tax rate is like 30%. The tax rate is like 30%. Surcharge rate, sir, under the old regime, it is like 37% is the highest, and Cess again it remains same 4%. So how much it would be? 42.744%. 42.744%. Okay, so this is called maximum marginal rate. These are called maximum marginal rates. Right? Okay, and one more thing, sir, as I said already, just to revise quickly what we have discussed in the last class, in yesterday's class. What we have discussed in yesterday's class, see, we have started discussing from tax rates applicable to companies. For companies under old regime or the default regime, it is a domestic company and the turnover in previous year 23-24. This is like what? 23-24. then the tax rate is less than or equal to 400 crores, then the tax rate is like how much? 25%. If the turnover is more than 400 crores, then the tax rate is like 30%. Tax rate is like 30%. As the surcharge rates, like total income up to 1 crore nil, 1 crore to 10 crores to 7%, above 10 crores 12%. These are the surcharge rates. Then optional regime. Yes, for companies there are like certain new regimes are there which are like optional regimes, like 115 BA, BAA and 115 BAB. 115 BA is applicable to domestic companies. BAA is BA is applicable to domestic companies which are into manufacturing, tax rate 25%. BAA is applicable to any domestic company, tax rate 22%. BAB is again applicable to only domestic companies which are into manufacturing, tax rate 15%. The special rates are like 25, 22, 15. The surcharge rates are like up to 1 crore nil in case of 115 BA. Total income 1 crore to 10 crores 7%, above 10 crores 12%. If an SC chooses to, if the company chooses under 115 BAA or BAB, then the surcharge rate is like flat 10%. Flat 10%. Irrespective of total income, it is always 10% only. For foreign companies, the tax rate is like 35%. The surcharge rates are like up to total income up to 1 crore nil, 1 crore to 10 crores 2%, above 10 crores 5%. Then tax rates applicable to cooperative societies by default. Up to 10,000 total income, the tax rate is like 10%. 10,000 to 20,000, the tax rate is like 20%. Above 20,000, the tax rate is like 30%. Surcharge rates. Like up to 1 crore nil, 1 crore to 10 crore 7%, above 10 crores 12%. Optional regime 115 BAD. If it is a resident cooperative society other than that opted 115 BAE. If it is a resident cooperative society other than which opted 115 BAE, the tax rate is like 22% and surcharge is like 10% fixed. Under 115 BAE, cooperative societies manufacturing, they should have been registered on or after 1st April 2023 and have started its business on or before 31st March 2024. Tax rate 15%, surcharge rate 10% fixed. Okay. Then we discussed about firm local authorities tax rates. For firm and local authorities, the tax rate is like flat 30% always. Special rate incomes are there like capital gains and all, they are taxable at special rates only. Surcharge rates up to 1 crore total income nil, above 1 crore 12%. Then we discussed about rounding off. Usually rounding off has to be done to nearest multiples of rupees 10, either the total income or the tax payable, right? Then for 234 A, B, C or interest calculation on tax payable will be calculating interest rate. Such a tax payable on which we need to calculate interest has to be taken in multiples of 100. Fractions can be ignored and only on multiples of 100 you need to calculate the interest. Then unexhausted basic exemption limit is one concept we have discussed. What is called unexhausted basic exemption limit? See, from the basic exemption limit available, it could be 4 lakhs under the default regime or it could be 2,50,000 under the old regime. So out of this basic exemption limit, first we should adjust the incomes which are chargeable to tax at general rates, not special rates. So such incomes you adjust. After adjusting the normal rate incomes in the basic exemption limit, if still there is any limit that was not exhausted, that was available, that is only called as unexhausted basic exemption limit. This unexhausted basic exemption limit can be adjusted with special rate incomes like 112, 112A and 111A. Okay, with this capital gain special rate incomes, provided SEC should be a resident individual or HUF. Resident individual or HUF. Right. Then revenue receipts versus capital receipts. See, by using the source of income, you earn any income, that's called revenue receipt. If the source of income itself is sold or transferred, then the receipts are called capital receipts. Okay, then we discussed about a general rule where previous year income is usually assessed to tax in the assessment year. But there are exceptions. What are those exceptions? First one, where non-resident is engaged in shipping business. Second one, where a person is leaving India, okay, for employment outside India and has no present intention to come back. Third one, AOP, BOI or AJP formed for a purpose and such purpose has been accomplished. Fourth one, okay, a person is trying to dispose or pledge a property with an intention to avoid tax. Last one, he is discontinuing business. These things are going to happen, then previous year income will be assessed to tax in previous year itself. Then we discussed about maximum marginal rate. Maximum marginal rate na the highest tax rate, highest slab rate applicable plus highest surcharge plus cess applicable. Okay, default 115 BSE old regime. The tax rate 30%, surcharge rate 25% on it, cess 4, total 39. Here now it is like 42.744%. Right? Okay, guys. Now we're going to discuss about surcharge restriction. Surcharge restricted to 15 percentage on dividend income, surcharge restricted to 15 percentage on dividend income, surcharge restricted to 15 percentage on dividend income, 111A, 112A and 112 incomes. On this 4, the surcharge is restricted to 15 percentage, right? Otherwise, there are 25%, 37% is also applicable. But when there is dividend, the surcharge rate is restricted to 15%, right? One more point, sir, here. However, if because of surcharge, if because of dividend and special incomes, these three we are referring as special incomes. However, if because of dividend and special incomes only, the total income pushed to higher slab of surcharge, if because of dividend and special incomes only the total income pushed to higher slab of surcharge, then surcharge rate on other incomes would be the rate that applies if no dividend and special income. No dividend and special income. Sir, I know you'll not understand it. Okay, wait for example. Okay, we finished out like the theory, whatever we need to read. The first sentence you might have understood the heading point, but this one, however, if because of dividend and special incomes only the total income is pushed to higher slab of surcharge, then surcharge rate on other incomes would be the rate that applies if no dividend and special income. Okay, let me give you examples. A person is having dividend and then special income, like let's say 112, all any of those incomes are there. So he is having dividend in the first case. ₹120 lakhs, special income 100 lakhs, and there is other income also. Other income, normal general rate income is also there. That is like another 210 lakhs. So what is the total income? 220 plus 210, 430 lakhs, right? So now, what is the surcharge rate applicable? Surcharge rate, we need to write separately on surcharge rate on tax calculated on dividend plus special income. How much it would be? Sir, here the total income is like above 2 crores. Above 2 crores. When it is above 2 crores, now the surcharge rate would be usually how much? 25%. Okay, if you take old regime, now 2 to 5 crores, it is like 25% only. But okay, but dividend and special income, okay, dividend and special income related, the surcharge rate is restricted to how much? 15%. So for these, the surcharge rate is like 15% only. Now come to the surcharge rate on tax calculated on other income. Surcharge rate on tax calculated on other income. Sir, how much is the other income is there? 210 lakhs. Other income is how much? 210 lakhs. Right. Now, even if there is no dividend and special income also, other income would be taxed at what rate? What will be the surcharge rate? About 2 crores now 15%, 25% only, right? So no problem. Take it as like what? 25%. 25%. Okay. This is like case 1. Now we will go to case 2. Okay. So case 2 will take like dividend 70 lakhs, special income like it is like 150 lakhs, and other income is like only 110 lakhs. Okay. So now if you take the total, what is the gross total income? Special income 220 plus 110, 330 lakhs. So here also what happened? The gross total income is like above, the net total income is like above 2 crores. 25% should be applicable. But on dividend and special income, it is restricted to 15%. Fine. Now come to other income. Sir, on other income, if these special incomes are not there, then the other income would be only in 15% bracket. But because of these incomes only, this 110 pushed it to the highest slab. But understand, even it is pushed to highest slab, the surcharge rate, okay, what is the next point we said? However, if because of dividend and special incomes only, the total income pushed to highest slab of surcharge, then surcharge rate on other incomes would be the rate that applies no dividend and special income. If there is no dividend and special income, it would have been only under 15%. So then the such 15% only we should take, not 25%. Even though the total income is about 2 crores, here if you see on both of them the surcharge rate is 15% only. Why? Because on dividend and special income the restriction 50. The other point says like what? If only because of dividend and special income it is pushed to higher slab. Otherwise it would have been only under 15%. Then on other income also it would be only 15%. Sir, everybody got it? Are you able to understand? Case 3. Here it is like 100 lakhs, 120 lakhs, but here it is like 60 lakhs. 60 lakhs, let's say. Sir, what is the surcharge rate on special incomes? Yes, it remains to be how much? 15%. It remains to be how much? 15%. Right? But understand, on the other incomes, if there is only other income, it would have been taxed at 10%. But 10 we will not take. Why? Sir, because of dividend pushed, okay, because of dividend, it would have been under 10%. But by including this special incomes, it was pushed to 25% slab. It was pushed to which slab? 25% slab. It was pushed to 25% slab. But if there is not there, it would be only under 10%. But understand, sir, even on dividend also, the surcharge rate is restricted only to 15%. So this point, okay, will be applying like only up to 15%. Okay, so on this surcharge, if total income exceeds 2 crores, because of other income only it exceeds 2 crores, then you will not take 25%. But what is the minimum you should take? Minimum you should take 15%, sir. You cannot say like 60 lakhs, I will take only 10%. Let's say if it is only 14 lakhs, I will not take even surcharge. That is not possible. Okay, minimum surcharge rate you will take 15%, because on dividend, okay, what is the problem? See, because of this dividend, you have been pushed to higher slab. But the one which pushed is enjoying 15%, the other one, the innocent one, is getting higher surcharge rate. That is injustice. That's why what we are saying, like on this other income also, will make it equal to that of dividend or special income. Right? That's why on this also it is taxable at what rate? 15%. You cannot say like it is only 10%. Right? Case 4 and 5. These two are like only in old regime. Old regime. Old regime. Okay, let's say case 4. We will take the dividend as like 150 lakhs, special income also as 150 lakhs, and other income is like 250 lakhs. So total is how much? 550 lakhs. And the total income is like above 5 crores, then the surcharge rate under old regime would be 37%. 37. But on this dividend and all, it is restricted to 15% only. It is restricted to what? 15% only. But on other income, sir, other income, it would be 37%. But because of dividend and special income only, it was pushed to 37. Otherwise, it would be at what rate? 25% only. So now take what rate? 25% only on it. Because individually, this is only 250 lakhs. And on them, about 2 crores, it would be only 25. So take only 25. Then 150 lakhs, 150 lakhs, and here it is like only 90 lakhs. Wait. 1 second, don't write. 220 lakhs, 230 lakhs, and 90 lakhs. Total how much? 540 lakhs. Again, it would be taxed at what rate? The surcharge would be 37%, right? But on dividend and special income, it is restricted to 15%. Now come to other income. So the other income is like 50 to 1 crore. It should have been, okay, 50 lakhs to 1 crore, the surcharge rate would be 10% only. But you can't take 10%. How much you should take? You should take minimum of 15%. Right? I hope everybody understood this point, sir. Hello Renuka. Morning. Sanjay is able to understand, right? Okay. Now we are starting with one more concept like undisclosed source of income. Undisclosed source of incomes. Okay, so undisclosed source of incomes are covered under 115 BBE. Undisclosed source of incomes. If you remember the special rates, here if we wrote these are undisclosed incomes or taxable under section 115 BBE. Undisclosed source of incomes, these are covered under 115 BBE. 115 BBE. So what is the tax rate on it? 60% tax rate plus surcharge 25% plus cess 4%. Effectively it turns out to be how much? 78% effective tax rate, right? Now first, what are called as undisclosed? Inka, you join in the WhatsApp group. Okay, there is a WhatsApp group separately for it. You join in the WhatsApp group, so I'll be updating the timings in that particular group every day. So usually we'll have 2 sessions every day. So what are called undisclosed source of incomes? When there is like a cash credit, when there are cash credits na in your account there are credits. Okay, so many credits are there into your accounts. Cash credits. And you are having unexplained investments. Cash credits, unexplained investments. Unexplained investments, you have some buildings, you have some land purchases. Okay, for them you don't know. Okay, you're not gonna explain from where you got the money, the source. You have unexplained money, bullion, jewelry. Cash credits, unexplained investments, unexplained money, bullion, jewelry. You might have unexplained expenditure. You have unexplained expenditure. You have amount of investments. Not fully disclosed in books of accounts. Amount of investments not fully disclosed in books of accounts. And then you have amount borrowed or repaid through hundi. Amount borrowed or repaid through hundi. The cash credits. No cash credits. Cash credits, na, there will be certain deposits into your account, credits into your account. Unexplained investments, na, you made certain purchases, investments which were not, you cannot explain the source for them. You found to be in possession of money, bullions, na, gold bars and all, jewelry. You're found to be in possession of them, and they believe like you are the owner of those money, bullion, jewelry. but you don't have proper source explaining from where you got that money, from where you got that bullion, from where you got that jewelry, and then you incurred so much of expenditure, then they are asking like what is the source of income for you to incur so much of expenditure. Let's say Sanjay spent 5 crores on his wedding, lavishly spent, but when the IT officials are asking like from where you got this 5 crores, he doesn't have a source, then it comes under unexplained expenditure. Or he had an investment, but on record, on books, he is showing that investment is for 2 crores, but the actual investment value is like 10 crores. Okay, so you are recording it at a lower value, you are not disclosing it fully, you are disclosing partially. So that difference, okay, let's say you actually you acquired it for 10 crores, right? But in record you are showing 2 crores only, but actually you spent 10. So if you have spent 10, where the other 8 crores came from? That and amount borrowed. So let's say income tax people, IT people came for such, they searched your house, they found like you are having 2 crores with you. So you are saying like this 2 crores, sir, I borrowed it my friend and neighbors. Okay, 3 days back only I borrowed and I kept, sir. That's like borrowing only. It's not my any income and all. Then they're asking proof. Okay, how you borrowed, proof. But then it should be through a proper legally, the money should have been came through account to account, even if it is borrower. But you take it on cash and you are proving, saying like you have a hundi document as proof. Hundi document na, there is no stamp and all also will be there, sir. Just on a plain paper you will write something, both the parties will sign. So it could be a fake arrangement or fake thing also. That's why they will not agree if you say like amount borrowed or repaid through hundi. Okay, so when for all this, sir, SSE offers explanation. SSE offers for all these incomes. Okay, when they call like you have credits but you didn't offer explanation, or the explanation is not satisfactory. You have investment but that you cannot give explanation for the source of income, or the explanation is not satisfactory. SSE offers no explanation, or the explanation is not satisfactory. Is not satisfactory to AO regarding source. Regarding source, so he'll be asking the source for all this. He either couldn't offer any explanation, or the explanation he offered is not satisfactory. Then in all these cases what happens, sir? Then in all these cases what happens? The incomes, okay, in all these cases what happens? Undisclosed source of incomes. SSE offers no explanation, or the explanation is not satisfactory, then AO will consider such income as what? Undisclosed source of income. And this undisclosed source of incomes will be taxable at a rate of 60%, 25%, surcharge plus cess at a rate of 4%. Sir, we need not to go much deeper into this. Okay, in such chapters and all, we'll have much more clarity regarding these points and all. That would be enough also. We need not to go much deeper. Okay, then we'll be discussing about the next concept is about average rate of tax. Average rate of tax. What is called average rate of tax? So this average rate of tax, even though in the initial chapters you will not find useful, but you could write down also in DTAA chapter. There is a chapter called DTA, Double Taxation Avoidance Agreement. So there, this average tax rate will play significant role, sir. You need to calculate almost in every question average tax rate. Okay, so for that purpose, it would be useful. The calculation is simple, sir. Average rate of tax equals to tax payable. Tax payable na you will take total tax plus surcharge. If rebate and all is there, na subtract plus cess, everything you do, divided by total income. So total income na it's always what? Net total income into 100. Then you will get the average tax rate. That's simple as that. Tax divided by the final tax divided by total income into 100. So this is before adjusting TDS, TCS and all also. Okay, the tax payable divided by total income into 100. We'll get the average tax rate. So let me give you an example. A person is having income from house property. Income from house property 7 lakhs is there. And he is having interest income also. Somewhere 25 lakhs. Then he is having long term capital gain under section 112A. So on 112A incomes, what is the tax rate? 12.5%. What are the assets covered under 112A? Listed equity shares, units of EOF, units of business trust. How much is the long term capital gain? 15 lakhs. And dividend is there, and the dividend is like 10 lakhs is there. Okay, so totally, what is the total? Okay, what is this? Okay, these are the incomes available. And to be more specific, he is an individual. SSE is an individual, age 45, and after default only 115 BAC only. Okay, this is the other details. Now we need to find out the tax payable and even the average tax rate also. Okay, we'll go with that. First, sir, headwise we need to do now. First, which head will come, sir? First, salaries will come, but no salaries income na. That's why income from house property. How much is there, sir? Income from house property. Income from house property 7 lakhs. Sir, I am not taking standard deductions and all because it's given straight away income from house property na. That's why. Okay, then PGBP nothing is there. Then capital gains. Under the capital gains, we have long term capital gains under section 112A. How much is there? 25 lakhs. Sir, some people might be taking here 15 lakhs directly. Okay, some people might be saying like, sir, 1,25,000 above only it is taxable at 12.5% now. So first 1,25,000 is exempted, right? So I'll ignore that first 1,25,000. No. Okay, that 1,25,000 you should tax at 0%. That's what. Okay, and that you should do only at the time of calculating tax. So first 1,25,000 is not exempted. We are not taxing it, or we are taxing at 0%. So while calculating gross total income, you should take the total long term capital gain under section 112. You cannot take like 15 lakhs minus 1,25,000. Okay, so you should take how much? 15 lakhs here. Then income from other sources. What are the incomes we are having? We have interest income, we have dividend income also. So how much is the interest income and how much is the dividend income? Interest income we have 25 lakhs, dividend income we have 10 lakhs. Total we are having under this head 35 lakhs. If you total all these, how much? 57 lakhs is the gross total income. And we didn't given any chapter 6A deductions also, 80C series. So that itself will become, this itself will become what? Net total income. Gross total income, net total income, both will remain 57 lakhs. Now, tax. First we'll calculate tax on other incomes. How much is there, sir, here tax on other income? The special rate income is like only 15 lakhs na, this is like special rate. The other are taxable at what? General rates only. So tax on other incomes, how much is there? 42 lakhs. 42 lakhs we need to calculate tax. So if you remember, sir, under 115 BAC I said you to remember like on 24 lakhs up to 24 lakhs we should remember the tax liability. So on 24 lakhs what is the tax liability? 3 lakhs. Okay, why? You could calculate, sir. 0 to 4 nil, 4 to 8 5%, 8 to 12 10%, 12 to 16 15%, 16 to 20 20%, 20 to 24 25%. Above 24 it is taxable at 30%. So on first 24 lakhs it is how much? 3 lakhs. We did examples and we remember that also. Then 24 42 minus 24, now how much is there? 18. On this 18 lakhs we should do what? 30%. So 5 lakh 40,000 plus 3 lakhs if you do, the tax liability is how much? 8 lakh 40,000. The tax liability will be 8 lakh 40,000. 8 lakh 40,000. Then tax on, then we should do what? Tax on special rate income, which is 112A. How much, sir? We are having 15 lakhs. But whether total 15 lakhs is taxable? No, right? 1.25 lakhs is exempted. So 15 minus 1.25, which is 13.75 into how much we should do? We should do 12.5%. How much it will come? 1,71,875. So what is the total taxable? 1,71,875 plus it is like 10 lakh 1,000 10,11,875 is the total tax payable. Okay, sir, we'll forget about surcharge, but here what is applicable? Surcharge, because the total income is more than 50 lakhs. So we should apply surcharge. We should apply what? Surcharge plus surcharge at a rate of 10%. If you do, how much it is? Like 1 lakh 1,000, sorry, 1 lakh 1,188. Okay, then we need to add Cess at a rate of 4%. Okay, as this 10 lakh 11,875 into 4%, if you do, you will get 44,522. You will get 44,522. So 10 lakh 11,875 plus 1 lakh 1,188 plus 44,522. If you do, you will get total how much, sir? Total 11,57,585, the tax, which is rounded off to 11,57,590 post rounding off. Right? Are everybody clear now till here? No doubts, right? Rounded off to 11,57,590 also. Now we need to find out what? Average tax rate. How do we find out average tax rate? Simple. Take the total tax payable. 11,57,590 divided by net total income, how much? 57 lakhs. Into 100 you do, you will get the rate. So 11 lakh 57,590 plus 57 lakhs if you do 100 if you do 20.31 percentage. I am getting 20.31 percentage. Correct or not? I am getting 20.31 percentage. Okay, then sir, first chapter we almost completed, sir, but we'll be writing like under house property. Sir, house property chapter will not discuss again in the final level, but sometimes the points regarding house property will come. Salaries will not discuss again in the final level. IFOS also will discuss like very, like in one session we gonna finish IFOS, like that only it will go. So if that is the case, if that is the case, then what about if any points are there and there are certain exemptions and deductions which are available only under the old regime and not allowed under the new regime? So those points will not remember usually. So for that only we are going to write a comparative study here stating like which are allowed under new regime and which are not allowed under the old regime. Okay, write down, sir. Certain exemptions and deductions are not allowed when a person chooses default regime. Okay, like 115 BAC. When a person chooses default regime. So what are those? We'll be discussing. Income from, first we'll go with what? Income from salaries. We'll have old regime, and the default or new regime. Okay. Now look at the points, sir. First, allowances. Under the salaries, first we'll be discussing about allowances. Sir, I am not discussing about each and every allowance. There are certain allowances which were even exempted under the old regime, but such exemption is not available under the default regime. See, allowance like HRA. So there will be an exemption for HRA, house rent allowance. House rent allowance. In old regime only it is exempted. How much? Like it depends on metro or non-metro. Actual rent received. Sorry. 40 percentage of salary or rent paid minus 10 percentage of salary or actual HRA. Whichever is lower, right, given as exemption. If it is metro city na, actual HRA, rent paid minus 10 percentage of salary or 50 percentage of salary. Out of these three, whichever is lower can be claimed as exemption and for HRA. That also under old regime. Old regime there is an exemption is available. Okay, I am not writing what is that exemption also. Okay, you should only refer that. What is the exemption? Actual HRA, rent paid minus 10 percentage of salary or 40 percentage of salary or 50 percentage of salary, whichever is lower. But such exemption is not available when SSC chooses default regime. When SSC chooses to be under the default regime. Then there is something called leave travel concession. Leave travel concession. What is leave travel concession? Sir, where an employee goes on leave travel, he along with his family and children up to 2, whatever the traveling expenditure paid by employer, that wouldn't be taxable, that is exempted. However, the travel should be within India, and then if it is through air route na economy class, if it is through trains na maximum it should be through the AC, first AC. Third one is like any bus routes and all na, the luxury or deluxe class fare, up to that extent it is exempted. But under default regime there is no such exemption available. So old regime it is exemption, and in default regime it is not available. Then third one, children education allowance. Children education allowance. With respect to children education allowance, yes, it is exempted. What is children education allowance, sir? 100 per student, 100 per month, max 2 children, that exemption will be there na. 100 per month, max 2 childs, that exemption will be there. But such exemption is also not available under the old regime. Then fourth one, hostel fee allowance. Children hostel fee allowance. Such hostel fee allowance also used to be exempted, sir. How much? 200 per month, maximum 2 child. 200 per month, maximum how many child? 2 child. Is it exempted or not? Yes, it is exempted. And this is not applicable under the default regime. Not applicable. Then travel allowance. Travel allowance. Travel allowance for disabled child. Okay, sorry. For disabled persons only, travel allowance is exempted even under the old regime also. Okay, travel allowance given to normal people now, there is no exemption even under the old regime, but it is available only under the what? Okay, if it is available even under old regime also, only when such person is disabled, divyang. Okay, then such exemption is available. Travel allowance disabled. How much? 3,200 per month used to be exempted. But such exemption is not available, sir, when he chooses default regime. Okay, only under old regime these exemptions are available. Then travel allowance on transfer When you are transferring, then travel allowance is provided, and then any daily allowance is provided, and then any uniform allowance is provided. Okay, these are exempted. These are exempted to the extent actually spent. To the extent actually spent. Sir, for you, uniform allowance given, sir, 10,000. But you have spent 5,000 only on uniform. That 5,000 only exempted. The daily allowance. You are a marketing guy. You need to travel across different. You are a sales guy. You will travel across different places, and you will be explaining about your products and also. The employer is giving you everyday allowance like 500 per day, because you need to travel so many places. So on this 500 per day, actually you are spending only 150 per day. The other 350 you are not spending. Then the other 350 is what? Taxable only, right? So transfer travel allowance on transfer. Okay, is it what? Taxable or exempted? It is exempted. And interestingly, this is even exempted under the default regime also. So these travel allowances, daily allowance, uniform allowance, if it is paid even under the default regime, these are what? Exempted. These are what? Exempted. Right? Then retirement related. Retirement related. Retirement related. Okay, under the head salaries only, retirement related. So retirement related, na, there might be what? Gratuity, payments like gratuity, pension, leave encashment, VRS, retrenchment, PF, etc. If these are being paid, retirement related like gratuity, pension, leave encashment, VRS, retrenchment, PF, these things are being paid, etc. If these are being paid, gratuity, pension, leave encashment, and VRS, retrenchment, PF, etc. are paid, then these are what? Exempted under both the regimes. These are exempted under the both the regimes. Okay, so like the treatment is like same. Instead of writing the exemption, the treatment remains same even under the old regime or under the new regime. Treatment is same in both. It is taxable, taxable. If it is exempted, exempted. So there is no difference. Retirement related. Then perquisites also. Under salaries, the one more thing we'll get is like perquisites. Again, all the perquisites are, sir. Perquisites, na, there will be hundreds of perquisites, sir. Like telephone facility, sweeper facility, motor car facility, like driver facility, or it could be like rent-free accommodation provided, furniture provided, free electricity provided, free gas provided, okay, any travel facility provided. So like that, there would be so many perquisites. All those perquisites, sir, the taxability remains same under old regime and the new regime also. All perquisites, what the treatment is same. Treatment is same in both regimes. Treatment is same in both the regimes. Then at last we are having deductions under section 16. there will be deductions. First one will take like standard deduction. You remember, sir, the standard deduction will be there for salaries chapter. How much is the standard deduction available, sir? The standard deduction available under old regime is like 50,000, whereas under the new regime is like 75,000. Most important, sir. Out of all these comparisons, this is very much important. Okay, 50,000, 75,000. In old regime, now it is like how much? 50,000. Whereas under new regime, the standard deduction is much more higher, 75,000. This is very important. Okay. Entertainment allowance. Entertainment allowance deduction is available. That also only to government employees. Only to government employee. But okay, such deduction is not available under the default regime. But under old regime it is available. How much? That also maximum 5,000. Max 5,000 is allowed, but that max 5,000 is also not allowed under the default regime. Then the last one deduction under the salaries, sir. Professional tax paid. Professional tax. Yes, here available for deduction max 2,500 under the old regime, but under the new regime it is not available. New regime it is not available. Right? Everybody got it? These are like salaries related. Then the other two also there, sir. Will complete quickly those also. Salaries done na. Then other heads also will write down quickly. House property, PGBP capital gains. Anyhow, we'll discuss those chapters separately na. So there we'll be discussing point to point. IFOs also will cover. Okay, mostly. Then we'll go to income from house property. Income from house property. So under income from house property, again both regimes will be there, right? Old, new regime. Okay. First one, sir. Sir, how do we compute house property income? First we'll find out GAV, gross annual value. How do you found out GAV? Fair rent or municipal rent, whichever is higher restricted to standard rent, which even called it as expected rent. Such expected rent has to be again compared with the actual rent, which is higher, will take it as GAV. So till anyone pays, we can take it as deduction, but understand, if employer pays na, we should even include it as income. If employee pays na, you need not to include it as a perquisite, straight away claim it as deduction. If employer pays na, first you should consider it as perquisite and then again you can claim it as deduction. Anyone could have paid that professional tax for availing deduction. Okay, but it's not that, okay, that much core they will not ask from salaries chapter. If those core points also, if at all they ask from salaries na, then gone. Okay, we cannot remember salaries so deep. Okay. Municipal, okay, GAV. So till GAV there is no change. Then from GAV, municipal taxes paid has to be subtracted to arrive NAV. So the municipal taxes subtraction also it remains same. So So till I am writing here, till NAV no difference. Till NAV calculation there is no difference. Till NAV calculation there is no difference at all. Okay. No difference. Fine, agreed. First we should do what? Municipal. Okay, then from NAV. NAV there will be 30% standard deduction, whether it is allowed or not. Yes. Standard deduction under 24A. Standard deduction. How much you will claim the standard deduction? 30% of NAV. 30% of NAV. Yes, it is allowed under old regime and even it is allowed under the new regime also. 30% of NAV as standard deduction. Obviously, it is for let out properties only. Why? Because for self occupied properties, NAV will be nil. NAV will be nil. Then interest under 24B. Interest. Interest, sir, will take it as like for self occupied property. Interest with respect to self occupied property in old regime, deduction available up to deduction up to 2 lakhs is available under old regime. Deduction is available up to how much? 2 lakhs under old regime. Whereas under new regime, such deduction is also not available. Okay, so on income from house property, interest self occupied property, the deduction will be up to 2 lakhs. Whereas under new regime, such deduction is not available. Such deduction is such things deduction is not available. Deduction up to 2 lakhs. Right, this is done. Then we'll go to let out property. Interest deduction can be available, sir, no limit. You can avail plus no limit. Here also no limit. Okay, available, here not available. So for self occupied property under the new regime, interest deduction is not available. But whereas under old regime it is available, let out property in both the regimes it is available. Then carry forward and set off of house property loss. Okay, so now we are going to talk about what? Carry forward and set off of house property loss. Sir, house property loss under the old regime, it is eligible for set off with other heads. House property loss is eligible for set off with other heads, max 2 lakhs. House property loss is eligible for set off with other heads to a maximum of how much? 2 lakhs. Okay. Whereas in new regime, set off only within the head. Other heads no. Sir, set off eligible for set off. Sir, understand, sir, for intra set off no limit. For intra head set off no limit under both regimes. For intra-head set off, there is no limit under both regimes. But understand, for inter-head set off, eligible for set off with other head. So nothing but I am writing here inter-head set off is possible under old regime. Inter-head is not possible under the new or default regime. Okay. Even in the old regime also, just because interhead is set off is possible, you cannot set off anything you want. Only to the maximum of 2 lakhs from house property loss can be set off with other head, can be set off with other heads. Right. This is about what? House property. Then carry forward loss, sir. Carry forward of loss. Like 8 years, sir, that is common. Carry forward of loss is like common only in both the regimes. 8 assessment years. Here also 8 assessment years. Sir, why you didn't write this carry forward to salaries? Hey, who will have loss under the head salaries? They will not have loss under the head salaries. That's why I didn't write that. Only for house property head there will be loss. Such loss within the head set off possible in both the regimes. Whereas interhead with other head set off that is not possible under the new regime or default regime. Old regime it is possible with other heads maximum 2 lakhs. Carry forward of loss. Maximum you can carry forward such loss for 8 assessment years. Once it is carried forwarded, only intra-head adjustment is possible. So understand, once a loss is brought forwarded, I mean the last year loss came to this year, then for that brought forward loss, only intra-head adjustment is possible. You cannot do inter-head adjustments, right? Then PGBP capital gains we'll discuss again separately anyhow. We'll discuss this separately anyhow. Then income from other sources. Income from other sources. What are the points? Family pension is the only thing there is difference. Family pension is the only thing which there is difference under old regime and new regime. What is that? Under old regime, 15,000 or actual, whichever is lower, family pension, like employee expired, his or her spouse is receiving salary, I mean pension, such pension related exemption. 15,000 or actual, whichever is lower is allowed as exemption under IFOS. Whereas under new regime, there is a change which says like 25,000. Not 15,000, how much? 25,000 or actual, whichever is lower is eligible. And with respect to other incomes under IFOS, there is no difference. There is no difference. So till gross total income we have discussed except PGBP. For capital gains, sir, there won't be much changes, but PGBP, I am writing PGBP, sir, that different from company perspective and normal individuals, we will discuss afterwards only. So IFOS, family pension deduction, like under old regime, it is like 15,000 or actual, whichever is lower. Whereas under new regime, it is like 25,000 or actual, whichever is lower. Other incomes, there is no such difference. For other incomes, there is no such difference. Right? Able to understand? Okay, so with this, we have completed the basics and tax rates chapter. So next chapter will be starting with chapter 6A deductions. Okay, in my perspective, the chapter 6A deductions is also part of basics only. That we're gonna start from tomorrow. Okay. 1 second, sir. Give me 1 minute, guys. Like I'll. Yes, starting with the chapter deductions, right? So this deductions chapter requires what? Minimum 8 to 10 times revision you should have been happened. Then also recalling should be made. Then only you will remember these deductions under. Okay, last minute if you ask like, sir, I am not gonna remember deductions. Like 3 days before exam, 10 days before exam. What you can do, man? Okay, will not have some kind of injections or some kind of tablets that if I give you will remember everything. Those things are not at all evolved. Okay, if that is evolved now, then I'll be selling capsules only. Okay, TT capsules, DT capsules. Okay, each tablet would be some 5,000, 6,000. Like if you take a tablet, you will get everything in detail. Not there now. So only thing as of now is like what you should do, revise it, revise it. Sir, if you don't revise, going forward, it's going to be tough. Okay, believe my words. Start revising today only. Okay, so today, this week itself, we just complete 5 days, 6 days, 5 times, 6 times of revision. So revision na cumulative revision, sir. Okay, so like what you should do na, like let's say you started deductions chapter. First day we discussed only some 5-6 sections. Okay, so what you should do, you read this 5-6 sections. Okay, then second day I have covered another this 5-6 sessions which you discussed in the first class plus another plus 5 in the second class. So what you should do in the second day, you should revise this cumulatively. Third day, again here 5 to 6 sections first session, and here another 5 sessions in second session, and here plus 5 in the third session. Okay, so maybe like another 5 in the fourth session. So what you should do, you read cumulatively again. Sir, what is the benefit of this, sir? Sir, with this, at least these initial part of the chapters you will be having more clarity. Then what you will do? Sir, then this chapter got completed. Okay. Then after 1 day or 2 days, again take this chapter. And then now come from the backwards. Because first sections and all you read clearly, now start from backwards and again complete. Like, sir, you don't need to spend like hours on a chapter. Okay, so after 3-4 days again you set a time target, like so let's say 30 minutes I'll take. Okay, 30 minutes for this chapter. Then start from backwards and start going with the sections. Okay, because the initial sections with this number of times revision, you will have initial sections in your mind already without much effort also. Okay, now if you start from backward also you'll understand. Okay, so follow these things, sir. So only with most number of revisions, recallings. Okay, and I will even say like it is possible you could write much more short materials. Like you already writing handwritten now. Parallelly, you now itself you should prepare something like that day before exam. You should focus on day before exam now itself. Why, sir? Like let's say now only I'm saying December 12th SFM exam, sir. I think December 13th it would be CFR exam, sir. Okay, even June also, maybe June 13 SFM, June 14 CFR, and then again December 15 it would be DT, sir. So these three are like tough subjects only. Okay, where the students feel most of the, I mean out of the CMA final level, where student feel like so much toughness na, these three exams only. So SFM you already prepared, then immediately CFR exam, then immediately DT exam. See how much time you will be having. You will complete your CFR exam by 1 p.m. and your DT exam will start at like 9 a.m. Okay, almost 9 a.m. you will be into the exam centers, right? See, 1 p.m. you will come, you will reach your house by 2 p.m. house or the hostel wherever you are. Like you will have lunch 2:30. Then CFR you already woke up at like early morning, like 3 o'clock, 4 o'clock. You woke up and completed the CFR revision. So from 2:30 p.m. you will take a short nap. That's like every student, because already SFM you did so much, CFR you did so much. So obviously your body will need some 1.5 hour, 2 hours nap that time, because you have barely SFM exam you might have written with 4 hours of sleep, and CFR exam also some 4.5 hours sleep only, you managed and written the CFR. So that's why here you will take 1.5 hours sleep. So 4 p.m. again you will start, or you will keep sitting in front of your books. Okay, 4 p.m. So let us take it like you will go till 12, okay, till 12 a.m. How many hours are there, sir? 8 hours are there. In these 8 hours also dinner time, others and all, like let's say, let us delete like another 1 hour. So total how many hours are there? Like here 7 hours are there. Then again early in the morning 12 a.m. So you managed with 4 hours sleep only. Okay, again 4 o'clock you woke up. 4 to 9. Okay, in this also 1 hour will go for again your breakfast, your bath, all these things. Okay, even the 5 hours, you have only 4 hours here. So total effectively how many hours you have, sir? 11 hours is there to cover the whole DT syllabus. 11 hours. 11 hours. Is it possible to cover even a marathon? See, the marathons also releasing in like 2 parts. The marathon itself is coming to somewhere like 18 to 20 hours. Marathons itself. So even if you watch with 2x speed also, it takes 10 hours. Then MCQs, another separate video being released. For that it will take another 2 hours. So 12 hours you are just watching the content, then your time will get completed. So but what you should do actually is, do you go to exam but just by watching the marathons? No, right? You should prepare on your own. You should solve some 2 or 3 exams on the day before exam also, and then you should go to exam, right? That's the approach, right? But if you do this approach, how much of chances you are dropping? See, so you should think of this 11 hours now itself. From now on, think like you have only 11 hours. So you should have a crisp material in your hand that could enable you to prepare in the 11 hours. Okay, so for every chapter, okay, that sir, that faculty will not prepare, sir. You only have to, like I'll be discussing exam questions, right? I'll be giving you the concepts, right? I'll be telling you the important areas, right? You will also solve along with me all the questions, right? Then look at those questions, and then you mark. Okay, I'll be saying like again you should mark 3 or 4 important questions from each chapter. Some chapters may be more than 3 or 4 also required. Mark them. Okay, that like, I mean, what are those 3-4 questions? Like on the day of exam, which I mean, when you are solving also, which question you have did mistakes. Okay, those questions pick and keep them. And the concepts also, even in our notes also feels heavy on the day before exam. So you should have much more crisp version also. Okay, so when you follow these things, when you have these things, nobody can stop you from clearing. Okay, so that preparation should start from the day one. I mean, from today itself, that preparation should start. You wait till course completion, then you'll get immediately, sir, unless, I mean, till the DT classes are going only, you could write short notes. If you plan something like after class completion, I'll start now, you have another 7 subjects also to focus. You'll obviously gonna end up not writing only, and again that exam pressure and all. Okay, if you are planning enough, okay, if you don't want such pressure situations and all now, this is the thing which I am saying you. Okay, at least try, sir. Okay, sir, I have tried this, I have did that in inter level, I could manage to write only for few chapters. Fine, few chapters is also fine. At least that few chapters you can complete on the day before exam within 1-2 hours, right? Understand? So start first doing that one. That's the best tip I could give to you, our sir. So I might be giving so many tips in the coming classes and all, but this, nothing can match this, nothing can beat this. Okay, so this is like pure your effort is there in that. So when your effort is there, then nothing can stop you. Okay, deductions, chapter 6a. Yes, Divya, yesterday we had a live session, and that would be there even in the live sessions folder also. I didn't check, but that should be there. Yesterday morning we had a live session. Chapter 6a, deductions. First one, sir. First point itself. Aggregate of all deductions shall not exceed gross total income. Aggregate of all deductions shall not exceed gross total income. Aggregate of all deductions shall not exceed gross total income. Checked. Let me see once again if I could find it or not. It is there, I could see 1, 2, 3, 4. Okay, there is 6th class basics and tax rates. It is there, I could see that one. The live recordings. Missed it. Okay, missing in like group courses, so I'll get it updated. Once the class is done, I'll get it updated. It's missed in like group courses, Pravalika. Aggregate of all deductions shall not exceed gross total income. I mean, the maximum deductions you could take is like to the extent of. Okay, the maximum deductions you could take it is like to the extent of gross total income. Aggregate of all deductions shall not exceed gross total income. Then next one. No deduction under chapter 6A. Under chapter 6A allowed from the gross total income. No deduction under chapter 6A allowed from the gross total income to the extent it includes capital gains under to the extent it includes capital gains under section 112A, 111A and casual income. 111A, 112 and other special rate incomes. And other special rate incomes. So other special rate incomes like lottery, undisclosed source, etc. So one thing I'm gonna tell you is like what? The chapter 6A deductions are not available. Chapter 6A deductions are not available on special rate incomes. They could be claimed only on normal rate incomes. Okay, so we already know what are called special rate incomes: 112A, 112 and 111A. 112A, 112 is about what? Okay, 112A and 111A are about listed equity shares, units of EOF, units of business trust. When they are held for long term, it covered under 112A. When they are held for short term, then it is covered under 112A, sorry, 111A. And any other long term capital asset na covered by 112. Then lottery, undisclosed source of incomes, all these are there, right? Okay. Now explaining these 2 points, sir, let me give you one example, sir. A person is having long term capital gain under section 112, 3 lakhs, and he is having long term capital gain under section 112A, 1,50,000. 1,50,000. Sir, this is like gross, not after exempting 1,25,000. This is what? Gross. Then take lottery income. Another 1 lakh. Plus this person is having salary income also. And the salary income is like 2,50,000. The salary income is like 2,50,000. So tell me, what is this gross total income? 4,50,000, 5,50,000, 8 lakhs is the gross total income. 8 lakhs is the gross total income, right? Okay. Now what else we need to do? Gross total income is 8 lakhs. From there, we should subtract what, or we should claim what? We should claim chapter 6A deductions. ETC, let's say this person is having ETC 1,50,000, is having ETD 50,000. He has 80E. He has 80E 2 lakhs. 80E 2 lakhs. He has 80G deduction. Let's say another 3 lakhs. Another 3 lakhs 80G. Let me take some other section also. 80 CCD subsection 2. 1,20,000. So what are the total deductions he is having, sir? If you total the deductions, he is having 1,50,000, 50, 2 lakhs plus 2, 4 lakhs, 4 lakhs plus 3, 7 lakhs plus 1,20,000, 8,20,000. So the total of all the deductions is 8,20,000. Can we claim 8,20,000 as deduction? No, right? Maximum we can claim is like 8 lakhs only. We can't claim deductions 8,20,000 and say like negative total income 20,000, and we can't ask income tax department only to pay us tax because we are having negative income. That's not possible, na? Okay, so gross total income is, the deductions are restricted to gross total income. Okay, maximum 8 lakhs only deductions, even though here 8,20,000. First point said that one. Then second point, no deduction under chapter 6A is allowed from gross total income to the extent it includes special incomes, capital gains, lottery, undisclosed, etc. Sir, here special incomes are what? See, this 3 lakhs is a special income. This is also a special income. This is also a special income. So on the first three, 4,50,000 and 1 lakh, 5,50,000, we can't claim any deduction on special rate incomes. Okay, so only we can claim deduction to the extent of what? Salary income. To the extent of salary income only. So even if you total, all these are eligible deductions only. The total may come to 8 lakhs. 8,20,000. But you can claim only to the extent of how much? 2,50,000 only you can claim as deduction. Why? Because deductions can't be claimed on 112A, 111A, 112 incomes and lottery income, undisclosed income and other special rate income. So if you subtract this 2,50,000, what is the net total incomes are here? The net total income is like 8 lakhs minus 2 lakh 50,000. It will come to 5 lakh 50,000. 5 lakh 50,000. Right? Hello, everybody understood na? Then deductions. Then deductions can be classified here into two types of. Certain deductions are related to payment. Deductions with respect to payments. So you made a payment, on such payment you can claim deduction. With respect to incomes. With respect to incomes. Okay, these payments you are doing now, mostly these are like what? Mostly investments. Mostly these payments you are doing now, mostly these are what? Investments. Okay, so when you make a payment, on that you will get deduction. Mostly these are what? Payments. Okay, so how do you claim the deduction? So straight away, how much ever the amount you pay, okay, will reduce from gross total income to the extent allowed. Will claim deduction from gross total income to the extent allowed. To the extent allowed. Right. Then here with respect to incomes. With respect to incomes, what we should do, sir? First include them, sir, because these are income na. First include in respect to head. See, let's say there is a deduction with respect to interest. Savings bank interest related, there is a deduction called 80TTB. You can claim 10,000 as deduction. First what you should do, that interest you should include it in the IFOZ. Okay, first include in respect to head. Okay, included. Let's say you got interest 50,000 savings bank interest, included in IFOZ. Now what? You can claim deduction. Now what? You can claim deduction. How much you can claim deduction? You can claim deduction only to the extent of 10,000 na. Then claim deduction to the extent allowed under that section. Then claim deduction to the extent allowed. If it is allowed to an extent of like 50,000, claim 50. But 80 TTA says like only 10,000. Okay, so you will be availing only to the extent of how much? 10,000. 80 TTA. Sorry, I said like previously TTB na. 80 TTB is for senior citizens. TTA is for the normal individual. Okay, up to 10,000 you can claim afterwards again. Okay, then next point, sir, third point. The following deductions can be made only when the return of income is filed. Following deductions can be made only when the return of income is filed. Sir, ROI na return of income, not return on investment. Following deductions can be made only when the return of income is filed on or before the due date. On or before the due date. Okay. Following deductions can be made only when the return is filed on or before the due date. Okay. First one what? 80I series. 80I series. What will be there like in 80I series? 80IA, IAB, IA, IAC, IB, IBA, IE. These are like 80 I series deductions. Those deductions can be claimed only when the return of income is filed on or before the due date. If it is filed after due date, this deduction is not available. Then 80 JJA, 80 JJA, 80 LA, 80 M, 80 P, 80 QQB and 80 RRB. Okay, so these deductions can be claimed. These deductions can be claimed only when the return of income is filed on or before the due date. Okay, these deductions can be claimed only when the return of income is filed on or before the due date. Sir, return of income is different, audit report is different. See, let's say for you audit is applicable. First the auditor will file, tax auditor will file his tax audit report. Then considering the tax auditor observations also, you will file the return of income, right? So, audit report might be filed belatedly, no problem. But return should be filed on due date, okay? Audit report can be filed belatedly. Audit report can be filed belatedly, but return of income should be on or before due date. Return of income should be filed on or before due date. Right, clear sir, this point everybody? Shall we proceed further? Okay, so now we are entering into the deduction sections wise, sir. Okay, and again, deductions also you should remember section numbers. Okay, here also section numbers, sir, you should remember. Then we are moving on to 80CCE. 80CCE. Sir, this 80CCE section will not talk about any investment or with respect to any payment. Like on doing such, you will get deduction like that. Nothing will be said in 80CCE. Then what is the role of 80CCE? Sir, 80CCE will give a cap on deductions that could be claimed under these three sections. The deduction that could be claimed under 80C, 80CCC, 80CCD subsection 1. So, the deduction that could be claimed under these three sections was limited or was restricted maximum deduction is rupees 1,50,000. Maximum deduction you can claim under these three sections together is how much? 1,50,000 only. Under 3, 80C, CCC and CCD subsection 1 alone. Sir, you should not take all the 80CCD, only from 80CCD subsection 1. Okay, now we are starting with 80C. So deduction 80C is like with respect to specified investments. Deductions with respect to specified investments. Deductions with respect to specified investments. So who is eligible? Eligible assessee is like individual and HUF. Individual and HUF. And the maximum amount you can claim as deduction is like 1,50,000 under this section. Sir, here you said like again 1 lakh 50. Sir, this 1 lakh 50,000, even though we said here, if you have under the 3 sections 80 CCC, CCD subsection 1, then overall all the 3 together you can avail also 1 lakh 50 only. Under 80C also 1 lakh 50, together under the 80 CCC, CCD subsection 1 also it is like 1 lakh 50 only. Eligible SSC. Okay. Then life insurance premium paid. So first one we are talking is about what? Life insurance premium paid. Okay, for whom it has been paid? Life insurance premium paid by individual. So it was paid by individual because it is eligible only to individual and HF na. Okay, life insurance premium paid by individual. To whom? For himself. For himself, okay. Or for spouse, or for child. Child will be like what? Major or minor. Child could be major or minor. I mean dependent or independent. Who are not covered? Parents, brothers and sisters are not covered here, sir. Okay, so if any life insurance premium paid or for the benefit of parents, that can't be claimed as deduction under 80C. That premium might have been paid for SSC himself or his spouse or child, whether they are major or minor. Understand? Then HUF na. The deduction is available. The HUF could pay it for any member. For any member. For the benefit of any member, it should have been paid. Okay, then deduction is available. Then understand, sir, this life insurance policy related. Like let's say life insurance policy premium, sir, you will not pay like once, right? Usually you will be paying like some 10 years, 20 years like that. So year 1, year 2, year 3, so on. You might be paying till year 25. So every year, okay, this total is called what, sir? This 1 to 25, this is the policy tenure. So the policy tenure is like 25 years. So 25 years, every year you will pay premium, right? Every year premium paid. Such premium is allowed as what? Allowed as deduction under 80C. Allowed under section 80C. Deduction. But in year 25, what you will get, sir? In year 25, you will get maturity value. I mean, on policy maturity, you will get some maturity value. Okay, this maturity amount will include sum insured, plus bonus, these things plus any interest, all these you will come. Sum insured, bonus, interest, everything will come. This you will get in a lump sum amount. This can be claimed as exemption under 1010D. Exemption can be claimed under which section, sir? Exemption under section 10 subsection 10D. Exemption that. So deduction is not like one time. Every year you will be paying premium and every year you can claim deduction. But maturity value you will realize only after the closure of the policy, on the maturity of policy. That time whatever the lump sum amount you will get, that also can be claimed as exemption under section 1010D. Okay, so the chapter 6.8 deduction allowed, sir, for, okay. What is the deduction allowed? It's not the total premium paid, sir. There are certain restrictions. Policy issued on or before policy issued up to 31st March 2012. The next one, from on or after 1st April 2012. Okay, so what is the deduction available? Premium paid, common sir, in both the before change, before 31st March or after 1st April, on or after 1st April. It's like premium paid, or here sir before 31st March 2000 or up to 31st March 2012, premium paid or 20% of sum insured, whichever is lower can be claimed as deduction. Premium paid or 20% of sum insured, whichever is lower can be claimed as deduction. Whereas from the date of change, from 1st April 2012, the deduction available is like premium paid or 10% of sum insured, or 10% of sum insured, whichever is lower. So the change is what? Before amendment it is to be like 20%. After amendment it was changed to what? 10%, right? So premium paid or 20% of sum insured, premium paid or 10% of sum insured, whichever is lower. Okay, then disabled persons, with respect to disabled persons, sir, there is a separate point. Is a disabled person and policy on or after 1st April 2013. Sir, before 2013, sir, before 13, there is no separate classification for disabled. So it would be old ways. I mean, how for the normal people will get, the same way even for disabled also will get the deduction. But from 1st April 2013, they have separated it. How much? The premium paid or 15% of sum insured. So what is the deduction available, sir? Premium paid or 15% of sum insured. Premium paid or 15% of sum insured, whichever is lower. Sir, everybody getting this points, right? So you paid life insurance premium, you will get actual premium paid or 20% of sum insured as deduction when the policy is taken till 31st March 2012. Thereafter, it is like actual premium paid or 10% of the sum insured, whichever is lower can be claimed as deduction. But if he is a disabled person, then from 31st March 2013, it's like premium paid or 15% of the sum insured, whichever is lower can be claimed as deduction. So the policy can be taken by, I mean, this deduction is available to only individuals and HUF. Okay, and that too, individuals and HUF. And that too, the policy should have been taken for themselves, SSE himself, or for spouse, or for children only. Parents, brothers and sisters are not covered here. Fine. Shall we proceed, sir, here? Good morning. Okay. Second one. The second investment. Sir, what is ATC? If you make any investments, they can be claimed as deduction. So when you are paying life insurance premium, that also considered as an investment with respect to that deduction is available. But that's not the only investment. Here there are separate others also. several others also. So if you do investments on the, you will get deductions under ATC. But how many ever you do, maximum 1,50,000 only. Contribution to unit linked insurance plan. Contribution to unit linked insurance plan. Then third one, premium paid for contract of deferred annuity. Premium paid for contract of deferred annuity. Premium paid for contract of deferred annuity. Then fourth one, employees contribution. Employees contribution to PPF. Sir, PPF na public provident fund, SPF na statutory provident fund, and RPF na recognized provident fund. Recognized provident fund. Okay, so how much, sir? Sir, with respect to PPF, so PPF, it is contributed by individual or it might be contributed by HUF. Individual na he should contribute to whom? Himself, spouse and children. HUF can contribute it for any member. For any member. So PPF contribution, sir, SPF and RPF will be to the own contributions only. But PPF alone can be contributed for some other purpose also, some other person also. So PPF individual na he should contribute for himself or for spouse or for children. HUF na can be contributions can be made for any member. Contribution can be made for any member. Then fifth one, contribution to approved superannuity fund. Contribution to approved superannuity fund. Contribution to approved superannuity fund. What is approved superannuity fund, sir? Contribution to approved superannuity fund. So post retirement, sir, you will be getting that money. That's called superannuity. Superannuity is also nothing but kind of retirement fund. Then sixth one, contribution to any sum paid or deposit to Sukanya Samruddhi account. Any sum paid or deposited to Sukanya Samruddhi account. Any sum paid or deposited to Sukanya Samruddhi account. Any sum paid or deposited to Sukanya Samruddhi account. Okay, then subscriptions to National Savings Certificate. Subscriptions to National Savings Certificate. So all these are certain investment classes which were notified, sir. Subscription to National Savings Certificate. Contribution to Superannuity Fund, contribution to Sukanya Samruddhi account, subscription to National Savings account, employees contribution to PPF, RPF, premium paid for contract of deferred annuity, contribution to unit linked insurance. Right? Sir, everybody copy till here. Then eighth one, sir. Contribution to approved annuity plan of LIC. Contribution to approved annuity plan of LIC. Contribution to approved annuity plan of LIC. Approved annuity plan of LIC. The ninth one. Ninth one. Contribution to notified units of mutual funds. Contribution to notified units of mutual fund. Then payment of tuition fee. The tuition are not the school tuitions. Okay, tuition fee, the fee paid to an educational institution, it could be college, it could be school, but providing the education. Sir, in every educational institution they will provide educational. No. Sir, they might be collecting different other charges also, like building fund, deposit, non-refundable deposit, okay, transportation fee, uniform fee, book fee. So like that they will be collecting different fees. But out of them only tuition fee alone is eligible for deduction. Payment of tuition fee. Payment of tuition fee. Where in a university, it could be paid in an university, college, or even school. Tuition fee paid, okay, payment of tuition fee in a university, school, college. So there are certain note points are here. Certain points to be remembered. The points are like, it should be full-time education. Okay, it shouldn't be a part-time education, it should be a full-time education. Full-time education, and such education also should be in India. And this deduction also, sorry, if you have 6 children, Sanjay, if you have 6 children, you can't claim the total fees paid for 6 children as deduction, maximum 2 only. I know you'll be disappointed, but there provision said like maximum 2 only. Others, okay, if you want you can proceed, Sanjay. The problem is like you can't claim deduction, that's what. Then 11th one. 11th one is what? Repayment of housing loan. 11th one is about repayment of housing loan. 11th one is about what? Repayment of housing loan. So where any housing loan is repaid, that also principal part, sir. Housing loan, repayment of housing loan, interest part not, only principal part. Principal part eligible for deduction. Okay, there are certain conditions, sir. Okay, the loan should be taken for house price plus stamp duty charges for the total. If the loan is taken, that is eligible, sir. Principal part is only eligible, and the loan should have been taken. Loan should have been taken from where, sir? You can't take it from your friend, relative and claim deduction here. It should have been paid, it should have been taken from government, bank, or a society, or from LIC, or from government employer. If your employer is government, then from government you could take. LIC you could take, society you could take, bank, from bank you could take. Okay, but you can't take it from whom? Friend, relative, private employers, then that is not eligible for deduction. Then 12th one, subscription to certain equity shares and debentures. Subscription to certain equity shares and debentures. Subscription to certain equity shares and debentures. Certains are not everything. Subscription to certain equity shares. Then next one, sir, investment in 5-year term deposits. Investment should be made in 5-year term. Investment in 5-year term deposit. Five-year term deposit. That also with what? With a scheduled bank. With a scheduled bank. The term deposit also. 5-year term deposit. That also in a scheduled bank. The next one, sir, subscription to notified bonds. Subscription to notified bonds issued by NABARD. Subscription to notified bonds issued by NABARD. Subscription to notified bonds, NABARD. Right. Then 15th one, contribution to National Housing Bank. National Housing Bank term deposit. National Housing Bank term deposit. Contribution to National Housing Bank term deposit. Contribution to National Housing Bank term deposit. Then investment in five-year post office time deposit. In 5-year post office time deposit. Investment in 5-year post office time deposit. Deposit in senior citizen savings rule. 17th one. Deposit in senior citizen savings rules. Deposit in senior citizen savings rules. So this is what the ETC, sir. There are so many points, right? But I know it's hard to remember. I already said like we should have some more summary also. So what would be that, sir? Out of this, I'll mark few as much more important. Okay, at final level, all these are not important, and all these also it's hard to remember. So first one, what are the important ones here, sir? The important ones here are like life insurance premium paid is an important one. Life insurance premium paid is an important one. Then that one. Then the next one is like this employees contribution to PPF, SPF, RPF. Then there could be sometimes this contribution to Sukanya Samriddhi account 3. Then tuition fee, payment of tuition fee 4. Payment of housing loan 5. Then this 5-year term deposits, investment in 5-year term deposits. Then this 5-year post office time deposits. Okay, these are of most important. 1, 2, 3, 4, 5, 6, 7 points are there, right? Out of the 17, these 7 are important. What are those 7? Life insurance premium. Second one is like the most, you'll remember them also. Tuition fee payment, schools and all. Housing loan principal repayment 3rd. Sukanya Samriddhi account 4. Like post office 5-year time deposit. And then in scheduled banks, term deposit 6. Okay, then the 7th one is like any employee's contribution to PPF, SPF or RPF. Right? So these are the points. Hello, is it clear? Then the next section is 80CCC. Small section only, sir. Here itself I can write. Contribution. 80CCC. Very simple section, sir. Contribution to pension fund of LIC. So you have been contributing to what? Pension fund of, contribution to pension fund of LIC. So how much is the deduction available when you made a contribution to pension fund of LIC? See, let me write down. The eligible SSE. Sir, for 80C, individual and HUF are eligible. Here only individual are eligible. And the max deduction is like up to maximum deduction is up to 1,50,000 only. The amount actually contributed or 1,50,000, max 1,50,000. Okay, that is the deduction available under 80CCC, contribution to pension fund of LIC. Individual, and the maximum deduction available is how much? 1,50,000. Okay, then we are moving on to the next one, sir. 80CCD. 80CCD. Sir, I am gonna write this provision, sir, by using like a horizontal way paper. 80CCD. So it's a big section. That's why if I write in the normal format, na, the section will not fit properly here. That's why I am writing it in like horizontal. Okay. 80CCD. Deduction with respect to contribution deduction with respect to contribution in pension scheme, deduction with respect to contribution in pension scheme or NPS, deduction with respect to contribution in pension scheme or NPS. Okay. So we have totally, sir, here 3 sections would be there, sir, for us. We have 3 sections. What are those 3? First one is like 80CCD 1. The first one is to 80CCD subsection 1. Then we have 80CCD 1B. Then we have even 80CCD subsection 2. So total we are, how many sections are here? 80CCD 1, 80CCD 1B, 80CCD subsection 2. Okay, so now let us first cover the 80CCD subsection 1. Sir, here to claim deduction under 80CCD subsection 1, SSE is a salaried employee or SSE could be others also. SSE could be a salaried employee or SSE could be others also. If SSE is a salaried employer, if SSE is a salaried employee, SSE is others. So how much is the deduction available if SSE is a salaried employee? Actual contribution to the NPS account. How much ever he contributed actually, that actual contribution, NPS na National Pension Scheme, there is a trust kind of has been formed. So people are contributing to this NPS and it is earning more interest than that of other funds. That's why many are contributing and participating in NPS. So if you are a salaried person and out of your salary every month certain part you are contributing to NPS. So that actual contribution or 10% of salary, whichever is lower, is allowed as deduction. Or what is allowed as deduction? Actual contribution or 10% of salary is allowed as deduction. Okay. Sir, if you are any other person, then what is allowed as deduction? Then also actual contribution or 20% of gross total income. Okay, because for others, if he is not a salaried employee, na, you can't take 10% of salary, no salary at all, right? So that's why we'll take what? Actual or 20% of gross total income. Actual or 20% of gross total income out of these two, whichever is lower. Actual or 20% of gross total income out of these two, whichever is lower. So SSE salaried employee na actual or 10% of salary, whichever is lower. Others na actual or 20% of gross total income, whichever is lower. So now what is called salary? Salary equals to basic plus DA forming part. Basic plus DA forming part. So DA forming part na DA forming part of retirement benefits. Salary equals to basic plus DA forming part of retirement benefits. Fine. Then 80CCD 1B. So how much is the deduction available under 80CCD 1B? Sir, you should remember one more point also. 80CCD 1 and 80CCD 1B both are related to employees' contribution only. Whereas 80CCD subsection 2 is the right, that is related to employers' contribution. So this is related to employers' contribution, whereas these two are employees' contribution. So let me write down that one also. Both are what? Employees' contribution. Both are like employees' contribution. Now 80CCD 1B. So what does 80CCD 1B? Sir, already employee contribution is covered under 80CCD subsection 1 na? Then 80CCD 1B talks about additionally. Additionally another deduction is available, additionally 50,000. Additionally 15,000. That also when? Where deduction under 80CCD 1 is restricted, where deduction under 80CCD 1 is restricted, where deduction under 80 CCD1 is restricted because of the 1.5 lakhs cap, because maximum you can take deduction how much, sir? 1.5 lakhs only, na? That also not only under 80 CCD1, 80C, CCC, 80 CCD subsection 1, all the three together maximum you can claim 1 lakh 50 only, right? So because of that limit, okay, because of that limit, Vaishnavi, you should write notes along with me. PDFs I am not going to share the class written notes, because this is going to be taken as like prints, right? So notes you should write along with me. Okay, workbooks pages I will be sharing with you. Okay, write along with me only. Okay, and one more thing, if I start sharing PDFs now, majority will not even write notes. If you don't write notes along with me, you will go to sleep. Okay, then after class only again you will wake up. So even if it is hard, okay, try to write the notes along with me. I'm sorry for it. Additionally, 50,000 where deduction under section 80 CCD subsection 1 is restricted because of 1.5 lakhs cap or, okay, percentage cap. What percentage cap? Sir, here additionally how much is given, sir? 80 CCD subsection 1B is said like what? Additionally deduction is allowable. How much additionally? Additionally 50,000 we said. Why? When there is a restriction because of percentage cap or 1.5 lakhs cap. Okay. But one thing I will do for you, see, if you wanted to correct your notes and all, one thing I will do is like what? I'll upload this every chapter PDF in the course itself. Okay, see, I understood your concern would be like, so since you might not sometimes plan the page properly, so you wanted to write it neatly after the class once again, right? So what I'll do now for that purpose, I'll upload these PDFs once the chapter get completed only. Okay, but every day na I'll also forget. What I'll do na, after chapter completion, I'll upload this PDF in the course, in the app itself. Okay, in the course you'll be having view option, so you can view it anytime you want and then correct your notes. I think that would be enough for you, right? So in that way, like you will be writing with notes along with me because you will not have the option to download it. So then if you wanted to correct it or to make it properly also, you can do it, right? That's why I am saying that I can do. So deduction with respect to contribution in pension scheme or NPS. How much is the deduction available, sir? SSE salaried employee, SSE others. So what we could do, actual contribution or 10% of salary or actual or 20% of gross total income, that we can do. Then 80 CCD 1B, what it is saying, like additionally 50,000 is allowed. Okay, you will not understand, sir. Basics I will do it today itself. So we'll be referring example, sir, because with example only you will understand this point. Refer example. So let us take an example here. Sir, we need to solve it in two cases. So let's say, sir, in one case, salary of a person is 15 lakhs, whereas in another case it is like 10 lakhs. Okay, case 1, case 2. Salary 15 lakhs to 10 lakhs. Then employee contribution to NPS. Employee contribution to NPS. Employee contributed to NPS. So how much this fellow contributed? So the employee contribution to NPS is here 1,80,000. Here there is another 1,30,000 employee contribution to NPS. $1,30,000. Okay, then we need to find out like what is the deduction available. Assume no other deductions are available. No other chapter 6A, okay, including ATC. Nothing is there. No other chapter 6A. So we need to calculate the deduction under both regimes. See first here. First we will calculate ATCCD subsection 1 deduction. ATCCD to subsection 1 deduction. So how much is that ATCCD subsection 1 deduction? Actual or 10% of salary. Actual or 10% of salary. So here actual is like how much, sir? In the first case one, 1,80,000 or 10% of salary na. Sir, salary 25, sir. Here don't take it as like 15, take it as like 25, sir. Sorry. So 1,80,000 or 2.5 lakhs, 2,50,000, whichever is lower. So how much is allowed? 1,80,000 allowed. But maximum you can claim how much? But can claim 1,80,000. But maximum you can claim 1,80,000, whichever is lower if you take. But because of this ATCCE restriction, you can maximum claim how much, sir? 1,50,000 only. Here 1,80,000 is allowed as per the provision, actual or 10% of salary. But out of this 1,80,000 can claim only 1.5 lakhs because of ATCCE. So now how much we are losing here? 1,80,000 allowed, but only 1.5 lakhs is allowable, na? Okay, because of ATCCE restriction. So then how much you are losing? 30. Then that 30 you can claim as deduction under ATCCE. That 30 you can claim as deduction under ATCCD 1B. Balance 30,000 can claim balance 30,000 claim under section ATCCD 1B. You can claim the balance 30,000. Okay. So because of this restriction, what restriction? 1.5 lakhs cap, you can't avail 30,000, right? Such 30,000 you can claim as deduction under ATCCD 1B. So here this 30,000 you can't claim because of 1.5 lakhs restriction. So that excess which you can't claim because of 1.5 lakhs restriction can be claimed as deduction under ATCCD 1B to a maximum of 30,000, to a maximum of 50,000. Okay, then second case. Okay, then case 2. How much, sir, we gonna get? Actual or 10% of salary? So actual is how much? 1,30,000 or 1,30,000 or 1 lakh into 10%, na, it is like only 1 lakh. 10 lakhs into 10%, na, it's only 1 lakh. So how much is allowed? 1 lakh. 1 lakh allowed. But other 30,000, sir, you are losing because of what cap? Percentage cap. 1,30,000 is what? Allowed. but the other 30,000 contributed, but other 30k, sorry, not 1 lakh 30, sir, sorry, here 1 lakh only allowed. How much is allowed? 1 lakh only allowed under 80 CCD subsection 1. But other 30k can't be claimed because of percentage cap. So which can be claimed as, which is allowed under section 80 CCD 1B. So the part which you can't claim under 80 CCD because of the percentage cap or because of the amount cap, that 30k you can claim as deduction under what? 80 CCD 1B. 80 CCD 1B to an extent of 50,000. Sir, I hope everybody got the clarity regarding this point. We can move on to 80 CCD subsection 2, right? Then 80 CCD subsection 2. Sir, 80 CCD subsection, okay, can't be. Okay, correct. Can't be claimed because of percentage cap. Okay, then 80 CCD subsection 2 is about what? Employer contribution. So employer contribution. Sir, 80 CCD 1 and 1B is about what? Employees. Here 80 CCD subsection 2 is about what? Employer contribution. So an employer contributing for the NPS of whom? Employee. Sir, understand, you are an employee. If you are contributing for your fund, that's your money you are contributing. So there is no income. You are just investing. So to encourage you that investment, deduction is given. But understand, sir, when employer is contributing you on behalf of you, so when employer giving or doing something on behalf of you, it's a benefit to you, it's a perquisite to you, it is taxable under the head salaries first. Sir, on behalf of me, my employer given me, my employer spent some 30,000, which benefits me. That means because of that one, I saved 30,000. Okay, so indirectly, non-monetary, if I am getting some benefit because of my employer, that is called as what? Perquisite. That's what said in the perquisite chapter, salaries chapter. So when employer contributes to NPS on behalf of me, that is my perquisite. Okay, so first it's an income. Perquisite means salaries chapter, it is an income, so you need to recognize it as an income. First take it as income under the head salary. When employer contribution is there, first take it as income under salaries. First take it as income under the head salaries. Okay, we'll consider it as income and again we can claim as deduction. Okay, sir, till now why I didn't check? Sir, till now whatever the points we discussed are not like income nature. That's your money you are spending, there is no extra income. Okay, so you are just claiming deduction. But here employer contribution, first you are receiving from employer for the benefit of you, so that's an income to you. And then since it is being invested in a specified fund which government wants to encourage, you will even again get deduction also. How much deduction is the question? So deduction. So for claiming deductions, sir, we should check them as government employers and others. government employer. Employer is like government employer. And what is the deduction available, sir? The deduction available is like actual the deduction available is like actual or 14 percentage of salary. Actual or 14 percentage of salary. Actual or 14 percentage of salary. Government employer means. Sir, other employer, sir. Not a government employer, sir. Other. Others na again two things, sir. Sir, why again two? See, understand. This is the only thing till now, whatever the deductions we have discussed, ETCCD subsection 2 is the only deduction that can be claimed in the new regime, I mean default regime. ETC, all those points, ETCCC, ETCCD subsection 1, ETCCD subsection 1B, all these you can't claim as deduction under the default regime or new regime. Only this ETCCD subsection 2 is available under the new regime and even under the old regime. Okay, so for others, we should check which regime they have opted. New regime, old regime. New regime, old regime. So under new regime, how much is the deduction available? Actual or 14 percentage of salary. And the new regime, how much is allowed, sir? Actual or 14 percentage of salary. New regime. So same as like government employer only. Actual or 14 percentage of salary. Then old regime, it is like actual or 10 percentage of salary. 10 percentage of salary. Actual or 10 percentage of salary. If it is under old regime, na, it's like what? Actual or 10 percentage of salary. So 80CCD2 with respect to employer contribution, you can claim actual or 14 percentage of salary, whoever is the employer. But if he is other employer, under old regime, it is allowed only actual or 10 percentage of salary. Actual or 10 percentage of salary. What is called salary here? Salary means basic plus DA forming part of retirement benefits. Okay. So with this we have completed what? 80CCD. Sir, you should remember what? 80CCE, we said like the deduction 1,50,000 restriction, that is available only with respect to what? 80C, CCC, CCD subsection 1, 1,50,000. That means 80CCD, if the contribution, sir, let's say for example, here 1,50,000 is there. Let's say 80C is not there. You have only 80CCD subsection 1, 1B and CCD 2. Here you can claim up to 1,50,000. Here 1,50,000 you can claim. Here 50 you can claim. And here how much ever you can claim, but only the percentage restrictions. There is no amount wise restriction. Here maybe some another 2 lakhs also can be claimed. So total under this section itself you can claim 4 lakhs, assuming there is no 80C CCC. Okay, understand sir? So this 80CCD2 is a extra deduction. This deduction amount is not within 1.5. This 1B is also extra, not within 1.5. So for only this 80CCD1 C CCC together we have 1,50,000 deduction. 1B and 80CCD2 subsection 2 are like extra points. Got it sir, everybody? No, it's not like I just said up to 2 lakhs. So it's not like it should be 2 lakhs. With these percentages, that percentages, if they are like within percentage, let's say sir, actual contribution 3 lakhs and your salary is 30 lakhs. So 30 lakhs into 40 percentage like means 13 lakhs into 14 percentage is like 4 lakh 20. Actual contribution is 3 lakhs. So then you can claim even 3 lakhs also. So here under 80CCD subsection 2 there is no percentage cap. Percentage wise this much only you can claim, like that there is no restriction. There is no restriction regarding the amount wise. Percentage wise only cap is there. So your salary is like 40 lakhs. Then 40 lakhs into 14 percentage if you do 5 lakh 60. Actual contribution is like 5 lakhs. Then you can claim up to 5 lakhs also as deduction. Understand sir? But for 80CCD1 there is both percentage cap as well as amount cap. Sir, got it? So we'll meet in the next session sir. Today we'll be continuing with the deductions chapter only, evening. Okay, so continuing with chapter 6 deductions sir. What we said, like the aggregate of all deductions shall not exceed gross total income. And even from special incomes, okay, the chapter 6A deductions can't be claimed in special income, claimed on special income. Third important point which we don't written also, most of the chapter 6A deductions are available only in old regime except 3 or 4. Except 3 or 4, rest all available only if you have opted old regime, right? Then long term capital gain under section 112 3 lakhs. Okay, we solved an example to understand, like the deductions are restricted to the extent of gross total income and even can be availed only on normal rate. Then we have classified deductions into 2 types, like payment based payment like they're like making certain investments. Making an investment, no income, right? Still, to encourage you to do such kind of investments, government has introduced giving deductions. Okay, deduction is a encouragement for us. Right? If you do, let's say life insurance, Sukanya Samruddhi, or else like if you invest in notified mutual funds, equity, in all those cases, government wants to encourage you. So how do government will encourage you? Just by clapping. Okay, if they clap for you for 1 or 2 times, no, nothing will get. The encouragement is by way of reducing your tax liability. So they are saying like whatever you invest up to a 1,50,000, that amount you can reduce from your taxable income. So to the extent of 1,50,000, you are getting a tax benefit, tax reduction. That's the encouragement government is going to do. Then with respect to certain incomes also. Okay, so but first, if it is an income, what it has to be done? First to include it as a income under the respective head. then claim deduction to the extent allowed. So one important this type of thing which we have discussed is like what 80 CCD subsection 2. What is happened there? Employer contribution to the NPS. So when employer is contributing on behalf of you, it's an income to you because he is doing something for the benefit of you. So it's a benefit to you, perquisite, taxable under the head salaries. So take it as income first under the head salaries. Then as per 80 CCD subsection 2, you can again claim it as deduction. How much? The actual government employer or other than government employer. If such person is a government employer, then the deduction available is what? Actual or 14% of salary. In other cases, not a government employer, we need to check private employer. We need to check old regime, the default regime. And the default regime, the deduction available is actual or 14% of salary. Whereas old regime, it is only actual or 10% of salary. Okay. Then the following deductions, these deductions can be made only when the return of income is filed on or before the due date. What are those? 80 I series, 80 JJAA, 80 JJAA, 80 LA, 80 M, 80 P, 80 QQB, 80 RRB. Okay, these can be, okay, for these deductions can be availed only when the return of income is filed on or before the due date. However, audit report can be filed belatedly. Then 80cc, what does 80cc says? Like the deduction under 80c, 80ccc, 80ccd subsection 1. All these three together, the maximum deduction cannot exceed 1,50,000. The maximum deduction cannot exceed 1,50,000. Then 80c, deductions with respect to specified investments. Okay, first one. Here, the deductions that could be availed under 80c are like individual and HUF. And the maximum deduction available is 1,50,000. First one is what? Life insurance premium paid is eligible for deduction. Individual he can pay such premium with respect to himself, spouse, child, could be major or minor. HUF, it could be taken for any member. Understand, sir? Individual, if it is taken for parents, not allowed. Then how much is the deduction available? That is dependent based on when the policy is issued. When the policy is issued up to 31st March 2012, premium paid or 20% of the sum insured. If it is like if it is on or after 1st April 2012, premium paid or 10% of the sum insured, whichever is lower. If it is a disabled person, the policy on or after 1st April 2013, premium paid or 15% of sum insured, whichever is lower. Then contribution to unit linked insurance, deferred annuity, PPF, SPF, RPF. But PPF related, sir, it could be for himself or for family also, like spouse, children. HF na any member, super annuity fund, Sukanya Samriddhi account, national savings certificate, approved annuity plan of LIC, notified funds of mutual fund, tuition fee payment, but that should be full-time education in India, max 2 child, housing loan principal repayment, okay, taken from government bank only, certain equity shares investment, 5-year term deposit in a scheduled band, notified bonds of NABARD, National Housing Bank term deposit, 5-year post office time deposit, senior citizen savings rule. In all these cases, 80C deduction is available. Then 80CCC. 80CCC is about what? Contribution to pension fund of LIC. What is the deduction available with respect to 80CCC? Eligible assessee should be an individual and the maximum deduction available is 1,50,000. The maximum available is like 1,50,000. Then we have discussed about 80CCD. We have discussed about 80CCD. So 80CCD is about what? Deduction with respect to contribution in pension scheme and NPS, national, okay, NPS, national pension scheme. So here there are three subsections: 80CCD subsection 1, 80CCD 1B and 80CCD subsection 2. Out of these three, 80CCD 1 and 80CCD 1B are related to employees contribution, whereas 80CCD subsection 2 is related to employer contribution. Okay, so 80CCD subsection 1, what we have said, if SSE is a salaried employee, then the deduction available is how much? Actual contribution or 10% of salary. If SSE is any other person, then actual or 20% of gross total income can be availed as deduction. Okay. Then for actual or 10%. Okay, actual or 10 percentage can be claimed as deduction. If SSC is like salaried employee, then how much? Actual or 10 percentage, whereas others na actual or 20 percentage. Salary means here what? Basic plus DA forming part of retirement benefits. But look at here, we have discussed even 80 1B. What does 80 1B says? Like, in addition to this 80 1, we can claim extra another 50,000 deduction under 80 1B. Extra 50,000 under 80 1B. We can claim extra 50,000 under 80 1B. But when, look at this example once again, salary 25 lakhs, here 10 lakhs. Employee contribution 1 lakh 80, 1 lakh 30. Okay. Sir, if you calculate here, what is the deduction available? 25 lakhs into 10 percentage, 2 lakh 50,000, or actual contribution 1 lakh 80. Which is lower? 1 lakh 80 can be claimed as deduction. But if you remember the 80 CCE cap, which says like the deduction under 80 CCD, 80C and 80CCC altogether, it is how much? 1 lakh 50 only. And not only that, sir, even 80CCD 1 also clearly says like the maximum deduction under this section is only 1 lakh 50,000, 80CCD subsection 1. So because of that, even though 1 lakh 80 can be claimed, it is restricted only to 1.5. So how much you can't claim it as deduction? 30,000. Such 30,000 which is lost, you can't claim it as deduction, can be taken, can be claimed as deduction under 80 CCD 1B up to an extent of 50. Then next, look at the second case, sir. Sir, here salary 10 lakhs, actual contribution is 1 lakh 30. But salary into 10 percentage, if you do not, is 1 lakh or 1.3 lakhs, whichever is the lower, now 1 lakh only you will claim. Here also you are losing another 30,000. So this 30,000 also you can claim under 80 CCD 1B, okay, because whichever you are not able to claim under 80 CCD 1, that could be claimed under 80 CCD 1B, okay. So that additional thing up to an amount of 50,000. Sir, again don't ask me this kind of doubts. What is that? 80 CCD 1 is different, 80 CCD 1B is different, 2 is different. So 80 CCD 1B, 80 CCD 2, okay, are not covered under the 1 lakh 50,000 limit. So this is in addition to 1 lakh 50, this is in addition to 1 lakh 50 only, right? And one more thing, sir, 80 CCD subsection 2 deduction can be claimed under new regime or the default regime also. Rest all can't be claimed under new regime, but okay, rest all till now what we have discussed can't be claimed under new regime, but 80 CCD subsection 2 can be claimed even under the new regime. Sir, morning class many students are missing, be regular. Maybe now you'll understand even without listening to morning classes. But remember, going forward, if you miss one session and you attend next session, you'll be landing up in troubles. ATCCH. ATCCH. ATCCH is about what? Contribution to Agnipath scheme. ATCCH is about contribution to Agnipath scheme. So this Agnipath scheme is designed for whom? Agniveers. Nothing but army. Agniveers are even called as what? Army. So under this scheme, 80 CCH subsection 1, 80 CCH subsection 2. So two sections are there. 80 CCH subsection 1, 80 CCH subsection 2. Okay, so under 80 CCH 1, SSE individual enrolled for Agnipath scheme. Enrolled for this Agnipath scheme. Enrolled for this Agnipath scheme, 80 CCH subsection 1. SSE individual. Okay, so only for individuals this 80 CCH subsection 2 is like eligible. Individual enrolled for Agnipath scheme. What is the deduction? The deduction amount equals to amount actually contributed. Equals to actual amount contributed. Amount contributed. How much ever is contributed, that can be claimed as what? Deduction. Okay. Then 80 CCH2. Sir, 80 CCH subsection 2 is about like contributions made by employer. ETCCH2, it's about what? Contribution to Agnipath. Okay, contribution by employer. Okay, so contribution by employer. So how much? The contribution for 80CCH1 is like, see, army people, when they are contributing, it is covered under 80CCH1. When government is contributing on behalf of them, when government is contributing on behalf of them, it comes under 80CCH subsection 2. Okay, I mean employer, government is only employer for them, right? So when employer is contributing 80CCH subsection 2, when they only contributing 80CCH subsection 1. Okay, the contribution made by central government on behalf of SSE. Contribution made by central government on behalf of SSE. Sir, when central government contributed, first this is for the benefit of this army person, contributed by government employer na. So first we should treat it as what? Treat it as income. Treat as income. Treat as income. Okay, which heads are salary side obviously. Okay, then deduction. Then the deduction available is amount contributed. Amount contributed. How much ever contributed. Amount contributed is allowed as deduction under this section. Amount contributed. Okay, and this 80CCH1, sir, it is only in old regime. Whereas this is available in this 80CCH subsection 2 is available in both regimes. Available in both regimes. So as of now, which are available in both the regimes? 80CCD subsection 2 is available in both regimes. Even 80CCH subsection 2 is also available in both the regimes. Right? Okay, done. Can we proceed further? Hello. Can we proceed further? Then we are moving on to 80D. Section 80D. 80D is about deduction in respect of medical insurance premium paid. Deduction in respect of medical insurance premium paid or contribution to national health scheme. Medical insurance premium paid or contribution to national health scheme. Premium paid or contribution to national health scheme. National health scheme. Okay. Eligible assessee. Eligible assessee. Who is the eligible assessee? The eligible assessee are like individual and then HUF. So these contributions can be made by individual. These contributions can be made by individual for himself, spouse, dependent child, parents, dependent or not. Parents could be dependent or not, but child should be what? Dependent. Dependent child only covered. Okay, if the policy is medical insurance is taken for himself, spouse, dependent child, parents, then HUF na it could be for any member. HUF could be taken it for any member. Then contribution to medical or health insurance. Medical or health insurance premium. Okay, we need to discuss how much is allowed, right? So I am writing it like 3 columns I am taking, sir. What are those? Here, like individual and family. Individual and family. Family na here. Write down, make it clear. Family means here spouse and child only covered. Spouse plus child. For parents, there is a separate quota. Individual plus spouse plus child only here. Okay. Individual, spouse plus child, parents. And then HUF, it could have taken it for any member. How much is allowed, sir? Contribution to medical health insurance premium. Okay, and the premium paid. How much is allowed as deduction? If it is paid by individual or spouse or children, then 25,000, 25,000, and then here also 25,000. I mean, for individual 125,000, for parents another 25,000. So overall 50,000 he can claim as deduction. If he has taken it for himself, wife, children, and even for parents, now total deduction available is like 50. HUF now it is only 25. And then if any member among this group is senior citizen, if any member is senior citizen, if any member is like senior citizen, how much is the deduction available, sir? Like then in that case, the deduction available is like 50,000, 50,000, here also 50,000. Okay. I am writing one more note point, sir. If such senior citizen is non-resident, if senior citizen is non-resident, then deduction is 25,000 only. Okay. Senior citizen is resident, then extra instead of 25,000 you can make it as how much? 50,000. If such senior citizen is like non-resident, then the deduction available is not like 50, it's only 25,000. Okay, sir. Then one more point, sir, I am writing. Amount spent on health, preventive health checkup. Amount spent on preventive health checkup. So this is like insurance premium paid. This is like preventive health checkup. Okay, you went for a checkup before, you don't have any disease itself, you went for a preventive health checkup. So just to find out if you everything is normal or not. So in that case, any amount spent, that is also available for deduction. Amount spent on preventive health checkup. Amount spent on preventive health checkup. How much? The amount spent on preventive health checkup available is like 5,000, 5,000, 5,000. Okay. Sir, assume if an individual is senior citizen and his parents also senior citizen and he paid medical insurance for himself and even for parents also, then how much is the deduction available? Like here 50, parents 50, 1 lakh plus preventive health checkup 5 plus 5, 1 lakh 10,000 available or no? Sorry. Sorry. Okay, so how much is available as deduction? That if that is the case, okay, in any case, understand this preventive health checkup is not a extra limit. This 5,000 is a sublimit within the 25 or 50. If he is senior citizen, 50, otherwise 25 only na. So this 5,000 is within that limits only. Okay, this is not a separate point. So under 80D, the deduction available is 25 normally, senior citizen na 50. That's what. This preventive health checkup is 5,000 is within this 25 or 50,000 limit only. Let's say you spent on preventive health checkup 8,000. Can you take it as deduction? No, 5,000 only. Okay, but this 5,000 is not over and above this 25 or 50. It is within the 25 and 50 only. Okay, so let me write down that point also. This 5,000 is not additional limit. This 5,000 is not additional limit. This 5,000 is not additional limit. Okay, it is within. It is within this 25,000 or 50,000. Within the 25,000 or 50,000. Got it right? Then mode of payment. How this should have been made? Mode of payment. Sir, it should have been paid in any mode other than cash. Okay, the medical insurance premium should have been paid any mode other than cash, except for preventive health checkup. So preventive health checkup can be paid even in cash, but whereas medical insurance premium should be paid only in any mode other than cash. Any mode other than cash. Next one. Premium paid lump sum. Premium paid in lump sum. Instead of paying it for every year on year, you paid it like lump sum. Then how much is the deduction? Then total payment, you take the total payment divided by number of previous years it is related to. So if the insurance is related to 6 previous years, then take that number of previous years it is related. So for how many previous years the coverage is there, that number of years you need to take. It is related. That you should take. Okay. Sir, why we can take total payment now? Sir, if you take total payment at once na, lump sum means you will be paying like high amounts, like 3 lakhs, 4 lakhs you might be paying. So in a year the maximum limit is only 25 and 50,000 na. So you will only be ending up with not claiming the deduction. That's why instead of taking it in a single year, you are apportioning it over the tenure of the policy, right? Subject to, even this is also 25,000, 50,000 limit. Okay, this is also related to, linked to that limit. Then the last one, for senior citizens, okay, unable to get medical insurance. For senior citizens who are unable to get medical insurance. For senior citizens unable to get medical insurance. Okay, then what to do? Then the provision says are simple, like actual medical expenditure also can be claimed taken as deduction up to 50. Or you are a senior citizen, but you no medical insurance is being given. So then what you can do, even the actual medical expenditure spent also you can claim as deduction up to an amount of how much? 50,000. Up to rupees 50,000. Up to rupees 50,000. actual medical expenditure can be claimed as deduction. Can be claimed as deduction. Up to rupees 50,000 actual medical 50 or 25, sir. It's not 50. Up to 50 or 25. Okay, 50 only. Why? Because here already we said like senior citizen. That's why. Already we mentioned it as like senior citizen only. Na? So we can take what? Up to rupees 50,000 actual medical expenditure also can be claimed as what? Deduction. Hello all. Are you able to cover it? Can we proceed further? So okay, so now we are proceeding on to the section 80D, DD. D completed na, now we are moving on to 80DD. ATDD. Medical treatment of disabled persons. Medical treatment of what? Disabled persons. Medical treatment of disabled and he is also dependent. Disabled plus dependent. Disabled plus dependent. So first we are gonna write about eligible assessee. Who is eligible assessee? Eligible assessee is like resident individual and then resident HUF. Resident individual and resident HUF. So for individual himself shall be dependent or no. Okay, resident individual, spouse, child, parents, and then brothers and sisters. Brothers and sisters. Spouse, child, parents, brothers and sisters. If it is HUF na, any member. Okay. So the disabled person should be whom? Spouse, children. Okay. The medical treatment of disabled dependent, not assessee himself is disabled. The dependent is disabled. Okay. Spouse, it could be either spouse, child, parents, brothers and sisters, or could be any member. Okay. The payment. The payment could have been made. Payment for medical treatment the payment is for medical treatment or for insurance scheme. Sir, disabled having some problem, so for his treatment is spending amount, or SSC is worried about the dependent person, sir. If SSC is there alive, he can take care of the dependent, maybe brother and sister or child, he can take care of. But if something happens to SSC, there will not be anyone to take care of the disabled one. So then the disabled life will become more horrible, right? That's why he is taking a insurance policy on the and paying contribution for the policy on disabled dependent. Understand? So even if SSC is expired, that disabled person will have some amount, policy amount, which we will be receiving it as pension or something. So when he has money, he can at least appoint someone as caretaker. Okay, so then they will be taking care of the disabled person, right? So for that, either for medical treatment or even for maintenance of dependent, maintenance of dependent disabled. Dependent disabled. Okay, so what is the deduction available, sir? The deduction available is like 75,000, 75,000 normally. However, if such person is like severe disability, suffering with one severe disability, then the deduction is like 1,25,000. So the deduction depends on how much is the amount. So this is not to be checked with amount spent. So even they spent or not, okay, even if they spent less amount also, they can claim 75,000, 1,25,000 as deduction. Sir, let's say if insurance premium paid, sir, okay, you being an SSC on the dependent, okay, if he is disabled, you are paying insurance amount. But what happened now? Disabled person only expired before. So what is the intention of taking insurance? Sir, here I missed for insurance scheme. For maintenance I read. For what maintenance? For insurance scheme, right? So here correct it, sir. Sir, insurance scheme. Or for insurance, for maintenance of dependent disabled. Okay, so he has paid an insurance premium for maintenance of disabled. Okay, the problem is what happened? Disabled expired before the SSC only. SSC is normal only. So he is receiving the insurance policy. He received the policy amount. Then what happens? Whatever the deductions he availed for the premiums paid, that will become income and will be taxed in the year, okay, which the dependent disabled got expired. Okay, disabled expires before SSE. Disabled expires before SSE. And received insurance amount. And received insurance amount. Then the amount claimed as deduction is taxable now. He is taxed as deemed income. Previously, whatever the deduction he claimed, that would be treated as what? Taxed as deemed income to SSE. Will be taxed as deemed income to SSE. Sir, everybody understood the point, right? Are you able to understand? Okay, then we want to discuss about 80U. 80U. So 80U is for whom? 80U applicable. Yes, Pravalika. Deduction to disabled SSE. Deduction for disabled SSE. Deduction for disabled SSE. Okay, so first thing we're going to discuss is about eligible SSE. Eligible SSE. Eligible SSE is like a resident individual. Sir, what is the difference between 80DD and 80U? In 80DD, if dependent is disabled, 80U, if SSE himself is disabled. Eligible SSE. Okay, resident individual, only for individual, sir. Okay, with certified disability. With certified disability. Resident individual with certified disability. Is a resident individual and he is having a certified disability also. Then deduction. What is the deduction available? Deduction available is like 75,000. When 75,000 in normal case. 75,000. Okay, that could be understood, right? 75,000. It is 1,25,000. When 1,25,000, if the disability is a severe disability. If it is a severe disability. Okay, then what are the other conditions? So the conditions are like he should what is the condition? Along with the return of income, submit copy of medical certificate. Submit copy of medical certificate. Okay. Then sir, understand my point now. Question is like, sir, here father is there, F, son S is there. This son S is suffering with disability. Now with respect to this son, father claimed deduction under 80DD, son disability, and son is gonna claim deduction under 80U for his disability. Okay, as an SSE is claiming as deduction, he is claiming deduction for disability under 80U. His father claiming his son as a dependent disabled, he is claiming deduction under 80DD. So for one particular disability they are claiming under two sections, 80DD and even 80U. Is it allowed? No. Either they can claim under 80DD or 80U. Under only one point they can claim deduction. Under both the things it's not allowed. Understand? The same disabled both 80DD and 80U can't be availed. 80DD and 80U both can't be availed. Only one. Any one of these only can be availed. Understood, sir? So you can claim deduction only under one particular section. You can't claim deduction under both the sections at a time. Okay, then I'm gonna take like the next section, 80DDB. Hello all, good morning. Good morning. So then the next one, sir, 80DDB. 80DDB is like deduction in respect of medical treatment reduction in respect of medical treatment for specified diseases. Reduction in respect of medical treatment for specified diseases. Reduction in respect of medical treatment for specified diseases. Okay. Who is eligible SSE? Eligible SSE. Okay, either resident individual or HUF. Resident individual HUF. So who might be suffering with this disease? Individual na he himself might have that specified disease, or spouse, child, child, parents, brothers and sisters. Child, parents, brothers and sisters. Okay, but parents and brothers and sisters should be what? Dependent. Okay, HUF na it could be for any member. Okay, sorry sir, HUF also resident HUF only, sir. I forgot, I wrote only HUF. Resident HUF only. Resident HUF. And then HUF can take it for any member. Okay, treatment might have been happened for any member in the family. So what are called specified diseases, sir? Specified diseases na which are chronic in nature, chronic na long term, so they'll not get cured in like 10 days, 15 days. Okay, once they can, obviously there may not be a cure. Okay, even though there is a cure, it will be a prolonged process. Further treatments that like cancer, paralysis, HIV, some other like cirrhosis, some other brain kind of issues. Okay, so those things. Okay, so for them the deduction in respect of medical treatment is available. So what is the deduction? The deduction amount equals to like two categories: other than senior citizen, senior citizen. Other than senior citizen, like 40,000 or actual, 40,000 or actual. Out of these two, whichever is lower. 40,000 or actual expenditure, whichever is lower. Senior citizen, it is like 1 lakh or actual, whichever is lower. 1 lakh or actual, out of these two, whichever is lower. 40,000 or actual, whichever is lower, or 1 lakh or actual, whichever is lower. Okay, done. So we're moving on to our next chapter. Sorry, next section. Then the next section is about ATE. ETE. ETE. ETE is about what? Deduction on loan taken for higher studies. Deduction on loan taken for higher studies. Deduction on loan taken for higher studies. Sir, ATE deduction is available to eligible assessee, individual, eligible assessees, individual, for what? What is the amount eligible? Interest on loan taken for higher studies. The deduction is claimed on interest on loan taken for higher studies. Higher studies means what? Higher studies means above 12th. Higher studies means above 12th. Interest on loan taken for higher studies. Of whom? Spouse. Sorry, first for himself only, sir. The loan might have been taken for himself. Okay. Then from spouse. Then for spouse. Then for children. And then for a child to whom SSE is legal guardian. To whom SSE is legal guardian. If he is the legal guardian, so then with respect to such child, if he has taken any deduction, also eligible for deduction. Higher studies na about 12th. For third class, fourth class study also, if you take loan and on that if you are paying interest, such interest is not available for deduction. Okay, for third class, fourth class child, you have taken loan. On that you are again paying interest. Such interest you can't claim as what? Deduction. Okay. So from where the loan should have been taken? Loan taken from charitable or financial institution. No. From graduation, not after graduation. About 12th na, it includes graduation also, right? Loan should have been taken from charitable institution or financial institution. Loan taken from charitable or financial institution. You can't claim deduction stating like you are taken from your friends or relatives and all. So loan should have been from charitable institution, financial institution. Loan from charitable institution or financial institution. Loan from charitable institution or financial institution. And then deduction can be availed only with respect to what? Interest. Interest paid only eligible. Interest paid only eligible for deduction. Eligible for deduction. Okay, fine. Interest paid is eligible for deduction. How long? Sir, this loan they are paying like lifelong. Okay, on a lighter note, he has joined CA student. Okay, he is studying only. 10 years past, he is still studying only. Okay, just cleared CA enter and then he is into finals. Okay, 12 years, 13 years, he is still writing. Okay, it is like Aluperagani Porati Yodudu. Writing. Okay, then does income tax people allow deduction? Like his father is paying interest only on that loan because he couldn't repay the loan. So he thought like this fellow will clear CA. Once he get his salary, he can repay the loan. But he is not doing that. Okay, so his father is like paying interest only. So how long he can claim deduction? So the interest can be claimed deduction only to a maximum of 8 assessment years only. 8 assessment years. So the initial year in which year the loan is taken plus another 7 assessment years. So total for 8 assessment years only interest is available as deduction. Deduction available for deduction available for 8 assessment years. Deduction available higher studies means above 12th. If at all loan is given for CMA, that can be claimed as deduction here. Deduction available for 8 assessment years. Initial plus 7 assessment years. Then we are moving on to the next section, sir. 80 and 80E and 80 both are related to housing loan. ETE and 80 deduction with respect to interest on housing loan. Deduction with respect to interest on housing loan. Deduction with respect to interest on housing loan. Okay, so we'll take two sections separately. ETE, ETEA. Sir, for both these sections, sir, if you take loan now or in this year, you will not get any deduction. Already the time periods are already completed. If in those years, if you have already taken loan for construction of residential house or for purchase of residential house, and on such loans, if you are still paying interest, that can be claimed as deduction. If you want to buy a new house in the year 2025, 2026, nothing you can claim as deduction under these two sections. Okay, first one, eligible SSE. Eligible SSE. In both the sections, sir, it is like individual only. ETE also individual, EAA also individual. Okay. Then deduction. What is the amount of deduction available? The deduction available is like for 80E it is like 50,000. For 80 EAA it is like rupees 1,50,000. 50,000 and 1,50,000. Then there are conditions also for these sections. Conditions. What are those conditions? Loan might have been taken for 80E in financial year 16-17. Loan in financial year 16-17 only. Whereas here loan might have been taken in financial year 1920, 2021, loan might have been taken in financial year 1920, 2021 and 21-22. So only if the loans are taken in these three financial years or in this financial year sanctioned, then deduction is available. Condition number 1, this is. There are other conditions also. Then second one, loan from a bank and loan from banks, loan from bank or financial institutions. Here also same. Loan from bank, financial institution. Okay, so the loan should have been taken only from bank and financial institutions. Third one, purchase price less than or equal to 50 lakhs here. Whereas here under 80 EAA they didn't spoke about purchase price, they said about stamp duty value. Stamp duty value at the time of purchase should be less than or equal to 45 lakhs only. Okay, then what is the fourth one? Loan amount. Okay, loan amount should be less than or equal to 35 lakhs. There no such limit. No such limit. Loan can be taken for anything. Okay, but obviously 45 lakhs value na, up to 45 lakhs only they can take. For 45 lakhs building you cannot take 70 lakhs as loan na. So here the loan amount also given up to 35 lakhs. And then there is a common condition, fifth one, which is common in both the sections. What is that? SSE does not own SSE does not own any other house, any other residential house property, any other residential house property on the date of sanction of loan. So he is first time buying a house. So to encourage these people who doesn't have house and they are buying a house with their hard earned money, government also wants to give some incentive. That's why what on the loan the interest they are paying is allowed as deduction. SC does not own any other residential house property on the date of sanction of loan. Any other residential house property on the date of sanction of loan. SCC does not own any other residential house property on the date of sanction of loan. So let us understand this with an example, sir. We will take an example. So let us take a self-occupied property and a let out property. I hope you understand this. LO means let out, SO means self-occupied. Then, sir, first of all, you need not to worry about old or new resin. This example is based on old regime only, because new regime this deduction is anyhow not available, so only in old regime. Okay, so let us take NAV, nil, sorry, for let out property NAV need not to be nil. So we'll take example as like something like 5 lakhs, and at annual value is like 5 lakhs. For let out self occupied property, sir, there won't be any income, so obviously the NAV will be nil from their standard deduction, minus 24A standard deduction. Standard deduction nil, whereas here 5 lakhs into 1 lakh 30%, now it is like how much? 1,50,000 can be claimed as deduction. Okay, then 24B interest. Interest deduction. Interest taken on what? Interest taken for loan. Interest taken for acquisition of this particular property. So the interest is how much? 3,60,000 actual interest. Actual interest is how much? 3,60,000. But for a self-occupied property, can we claim 3,60,000 interest as deduction? So tell me, for a self-occupied property, what is the maximum interest deduction you can claim under 24B? Self-occupied property. For a self-occupied property, if you taken any loan with respect to construction or acquisition of a house, how much is the maximum deduction you can take? Anybody? Already discussed in the first chapter. We wrote these points in our notes also. Vilka, that means you are not reading first chapter. You didn't read first chapter, right? See, the interest available for a self-occupied property under 24B is like 2 lakhs. Okay, sorry, 2 lakhs. Whereas for let out property, no limit at all. No limit at all. But this same 2 lakhs are under new regime. For self-occupied property, interest is not allowed as deduction. Under new regime, for self-occupied property, interest is not allowed as deduction. Then for let out property, sir, for availing interest, there is no limit at all. So you will claim total 3,60,000 here itself. So what is the income from house property, sir? Income from house property, let us take it as like income from house property negative 2 lakhs. Here it is how much? Negative 10,000. Negative 10,000. Let's say this person is also having income from salary. He is having even income from salaries also. He is having some 8 lakhs income from salaries. Here also 8 lakhs. Then what is the gross total income, sir? We can adjust the loss from house property with salaries at, right? What is the gross total income? GTI, gross total income, is like 6 lakhs here, and here it is like 7,90,000. Gross total income is 6 lakhs and 7,90,000. Okay, then we'll claim what? Chapter 6A deductions. We'll claim chapter 6A deduction. And we'll assume 80 EAA condition satisfied. 80 EAA condition satisfied. What are 80 EAA conditions? Like he is an individual only, loan taken in these 3 years only, loan taken from bank financial institutions only, stamp duty value less than 45 lakhs. So then how much he can claim as deduction? 1,50,000, right? But first he will claim deduction under the house property head 24B. Okay, he claimed. After claiming deduction under the house property head, still is there any interest which was not allowed there? Yes, his actual interest is 3,60,000, but here it is allowed only 2,60,000. So another 1,60,000 he can't claim deduction there. That 1,60,000 he can claim now under 80 EAA. But for let out property, sir, he totally claimed there only. So again he can't claim deduction because the total interest whatever is there 3,60,000 he claimed for under 24B only. So there is no interest left there. So you can't claim deduction under 80 EAA. So 80 EAA. How much, sir? There is 1,60,000 interest for self-occupied. Because out of 3,60,000, 2 lakhs claim, na, another 1,60,000 is there. But still it is restricted to how much? 1,50,000 only. And then for let out, it is like nil. By total 3,60,000 claimed there only. So now we will get the net total income. So then we will get what? Net total income. What is the net total income, sir? 4,50,000 and then 7,90,000. This is the net total income. Right? Able to understand, sir? So the interest deduction under 80 EE and EAA is in addition to the, okay, first you should claim the interest on property under 24B. If 24B limits, if you are exceeding the 24B limits and you had certain excess interest which you can't claim under 24B, that excess you can claim under 80 EE or 80 EAA. Shall we proceed further? Then you are referring to the next section 80 EEB. EEB. Interest on loan taken for purchase of EV. What is called EV, sir? EV na electronic vehicle, right? Interest on loan taken for purchase of EV, an electric vehicle. If you purchase an electric vehicle, then you can claim deduction under 80 EEB. See, the eligible assessee. Who should be the eligible assessee, sir? Eligible assessee is like individual. Eligible assessee is like what? Individual. Then quantum of deduction. The deduction available is like what? 1,50,000. 1,50,000 max. 1,50,000 or actual interest on loan. 1,50,000 or actual interest, whichever is lower. Sir, that applies even here also. Deduction, na, it's not like flat 50, up to, okay, actual interest that is there after availing 24B or 50 or 1,50,000, whichever is lower only. Here this is like maximum deductions we wrote even in 80E also. Okay, here also eligible assessee individual, what is the deduction available? 1,50,000 or actual interest, whichever is lower. Then the conditions. What are the conditions, sir? The conditions are like loan should have been sanctioned from a financial institution. Loan sanctioned from a financial institution. Second one, in between 1st April 19 to 31st March 23. If you now buy any EV vehicle by taking a loan from financial institution, you will not get any deduction now. The loan should have been taken from when to when? 1st April 2019 to 31st March 2023. In this period, if loan is taken, then on them the deduction is available, the interest paid with respect to purchase of EV. Okay, so how long, sir, the interest can be availed as deduction? Until the loan is repaid. The benefit of deduction, continues till the loan is repaid. The benefit of deduction continues till the loan is repaid. Benefit of deduction continues till the loan is repaid. The benefit of deduction continues till the loan is repaid. Okay. So now, sir, we are moving on to the next section, 80G, which is like, okay, out of all the other sections, again, this is something like big, like 80CCD. It's okay. So this also I am writing it like horizontally. Section 80G, donations to certain funds, charitable institutions, etc. Donations to certain funds and charitable institutions, etc. Donation to certain funds, charitable institutions, etc. So under 80G, sir, there are 4 categories. So we have a category 1, category 1, and then we have a category 3, category 2, then we have a category 3, and we have even a category 4. So total 4 categories are available under 80G. Category 1, category 2, category 3, category 4. So what happens if you donate any amount to the fund which is covered under category 1? 100% of amount contributed. 100% of amount contributed is eligible. So these funds are usually like national PMCM relief funds, national funds like national disaster relief funds. So there will be some 14, 15, sir. We can't remember all those names. Okay. So in simple, like PMCM relief funds, Clean Ganga fund. Clean Ganga fund. Okay, these will come under here. 100%. Sir, actually this is like others category, category 1. We should remember 2, 3, 4. What are the points under 2, 3, 4? Okay, so the others, if anything like donations comes now, we'll take it under category 1 only. Okay, category 2, how much is available, sir? 50% of the category 2, how much? 50% of the amount contributed is the deduction. Category 1 100%, but category 2 you'll get only 50% of the amount contributed. %50 of amount contributed is eligible for deduction here. So there is only one fund here, sir, eligible for deduction under 80G. There is only one thing, okay, that is nothing but PM drought relief fund. PM drought relief fund. PM drought relief fund. Then under category 3. Under category 3, sir, 100% of amount contributed is eligible for deduction. %100 of amount contributed. Category 3 is like 100% of amount contributed, but subject to qualifying limit. There is something called a limit here, sir. Subject to qualifying limit. %100 of amount contributed subject to qualifying limit. Okay, so what are those covered here? Sir, here 2 are covered, sir. 2 are covered. One is like contribution to a government or local authority for promotion of family planning. 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 Second one, sir. Donation by company. Here the donation should be made by company to Olympic Association. To Olympic Association or a sports authority. Donation by company to Olympic Association or what? Sports authority. Donation by company to Olympic Association or even a sports authority. Then category 4. %50 of amount contributed. Under category 4, sir, the amount allowed is like 50% of amount contributed. Again, subject to qualifying limit. Subject to qualifying limit. QL. Okay. So what is called qualifying limit? We'll discuss again. First one. Here 4 will be there, sir. So what are those 4? First one. For charity, renovation of temples. For renovation of temples. Second one. Third one. For protection of minority interests. For protection of minority interests. For protection of minority interest. For this, if anything is paid, protection of minority interest. So these are covered under the 4 categories: category 1, category 2, category 3, category 4. These 3. So first we should remember, sir, what is covered under category 4? Charitable purpose, for renovation or repairs of temple, or for protecting minority interests if any amounts are contributed, that is eligible for deduction under category 4. Category 3, either it is donated for promoting family planning or for a Olympic association or sports association by a company. Category 2 nights for PM drought relief fund. Next, other contributions to like any national fund, Ganga fund, CM fund, Prime Minister funds like earthquake relief fund, some cyclone relief fund, like that. If any funds are created, all those are covered under what? Category fund. Category 1. So under category 1, what is the qualifying limit? The qualifying limit equals to equals to 10% of adjusted total income. We'll discuss what is called qualifying limit, everything. Qualifying limit equals to 10% of adjusted total income. Qualifying limit equals to 10% of adjusted total income. Okay, then This deduction is available to all the SSE. ATG deduction available to every SSE. It is available to every SSE. Then donation is made in kind. Donations in kind na like non-monetary form. Yes, for all categories it is like deduction available to every SSE, except here under category 3 we mentioned like right company, that's one. ATG deduction available to every SSE. Donations in kind and greater than 2000 in cash. If you are making donation greater than 2000 in cash, not allowed. So if you want deduction, you should make in excess of 2000 in any mode other than cash. Yes, 10% of adjusted total income, we will calculate that weight. Okay, ETG deduction available to every SSE. Deduction in kind, if it is greater than 2000 in cash, then it is not allowed. If it is greater than 2000 in cash or deduction in kind, then it is not allowed. So ATG deduction category 1, category 2, category 3, category 4. Okay, but for category 3 and category 4, there is a restriction like giving qualifying limit. So we need to discuss about what that qualifying limit we need to discuss now. Okay. So qualifying limit is what? 10% of adjusted gross total income, right? Okay, let me take. Adjusted total income. We are now finding out what? Adjusted gross total income. So how do we calculate? First take the gross total income. Gross total income. From there subtract capital gains under section 112. I mean special rate income, capital gains 112, because on them anyhow you can't claim deduction, right? 112, 112A and then 111A incomes. Subtract from gross total income capital gains under 112, 112A and 111A incomes. Then all other chapter 6A deductions except 80G. All other chapter 6A deductions except 80G. All other chapter 6A deductions except 80G. I mean till now we have discussed deductions, right? ADC, CCC, CCD, ATE, ATD, all those you can claim. Subtract them. Then if any exempted income included, okay, if any exempted income included, like let's say 10AA, that also you subtract. Then you will get what? Adjusted total income. Then we will get what? Adjusted total income. This adjusted total income into 10% we should do. This adjusted total income into 10% if you do, we will get what? The qualifying limit. Qualifying limit. right? Then next point, sir, important one only. Deduction under category 4. Sir, under category 4, what we said there is the deduction 50% of the amount contributed subject to qualifying limit, right? Okay, it has a note point. Refer note. So deduction under category 4. Deduction under category 4. See, what is the deduction available under category 4 is like the amount contributed into 50%, right? Or qualifying limit. That's what, right? But understand, sir, how it is like B point. Qualifying limit. First you found out qualifying limit. What is qualifying limit? Adjusted total income into 10%. Okay. From the qualifying limit, first you should avail category 3 because category 3 also subjected to qualifying limit. Na? So first avail category 3. So qualifying limit minus category 3. Category 3 deduction. Then multiply it with 50%. Qualifying limit into category 3 deduction into 50%. Out of these two, whichever is lower. Okay, it's not like from qualifying limit minus category 3. Okay, that balance and amount contributed into 50%. No, not like that. The balance in qualifying limit and amount contributed both should be multiplied with 50%. Whichever is lower only can be claimed as deduction. Okay, I'll give an example, sir, for this. Example. Right away I am giving qualifying limit equals to 3 lakhs. Okay, we can't do that everything, sir, from the beginning. So we'll take like qualifying limit. Right away I am giving qualifying limit. Qualifying limit, how we got? Adjusted total income into 10%. So qualifying limit, we'll take it as like how much? 3 lakhs. Okay, done. Qualifying limit is like 3 lakhs. The next. Amount contributed to government. Amount contributed to government for promotion of family planning. Amount contributed to government for promotion of family planning. Let's say he has contributed some 2 lakhs. 2 lakhs contributed for promotion of family planning. Then there is contribution to temple for renovation. Contribution to temples for renovation. How much? Contribution to temple for renovation, another 2 lakhs. So now we should claim what deduction? Qualifying limit 3 lakhs, amount contributed to government. Amount contributed to government for promotion of family planning 2 lakhs, and then contribution to temples for renovation. For renovation 2 lakhs, right? This is the amount contributed. Okay, now we should calculate what deductions. So deductions are, first we'll calculate category 3, then we'll go for category 4. Deduction ATG. Sir, if you remember, family planning is covered under category 3, renovation is covered under category 4. So deduction will classify them under 2. the category 3 related and category 4 related. First, category 3, what is the amount given, sir? Like 2 lakhs 100% is allowed. Category 3, why? It is subject to qualifying limit. 100% of amount contributed. So 2 lakhs is allowed. 2 lakhs allowed, no problem. Category 3. But whereas category 4, sir, how do we calculate? Let us take first A. Amount contributed into 50%. Amount contributed into 50%. How much that is like? What is the amount contributed, sir? 2 lakhs. So 2 lakhs into 50%, which equals to 1 lakh. Okay. Then next B thing, what we should do, sir? Balance in qualifying limit. Balance in qualifying limit into 50%, right? So what is the balance in qualifying limit, sir? The balance in qualifying limit is like from 3 lakhs, already subtracted this 2 lakhs now. So 3 lakhs minus 2 lakhs into 50%. If you do, it is like how much? 50,000. 50,000. So here 1 lakh or this 50,000. Out of these two, whichever is lower. So how much is allowed? 50,000. The deduction equals to 50 here. Deduction equals to 50,000. Here 2 lakhs. So this is what the category 4. So category 4, you are not straight away taking amount contributed into 50. You take qualifying limit. First adjust the qualifying limit with category 3 if anything is there. Then after that the balance in qualifying limit into 50% or actual amount contributed into 50%. Out of these two, whichever is lower can be claimed as what? Deduction. Whichever is lower can be claimed as deduction. Sir, is it done? Everybody? Okay, then. So we are closing the session for today, sir, then.